It is 9 a.m. on Monday, November 30th. This is Yahoo Finance Live. Good morning. I'm Julie Hyman along with Miles Udland and Brian Sazi. We've got a mixed picture for the futures here this morning. Of course, coming off what has been a blockbuster November for stocks. Of course, this is the last trading day of the month, and we've seen the shares in the major averages rise about 11 to 12% over the course of the month. But the Dow and the S&P are pointing to lower opens. The Nasdaq is still pointing to a higher open. We are closely watching, and investors are closely watching the latest developments at Moderna, which plans to ask the Food and Drug Administration for emergency use authorization for its COVID-19 vaccine today. As data show, the vaccine is 94% effective. We're going to be speaking to the CEO in just a few moments, but first, let's go to Yahoo Finance's Anjali Kamlani for the latest. Anjali.
So as you know, we are excited to hear about this. This will be the second vaccine in the U.S. to seek emergency use authorization. And what that means is by Christmas, or rather by the end of the year, we could at least have one, if not two, vaccines out for use, specifically in the essential workers and sort of vulnerable populations. Right now, Moderna let us know that their vaccine is 94% effective, broadly speaking. But something that health experts are really excited about is the 100% efficacy in avoiding severe cases, and that's really important because it will reduce the strain on hospitalizations and means that, as one expert told me, life can in fact go back to normal. So, waiting to hear, of course, when that filing will actually happen, but they did let us know that that is happening today. Julie.
Thank you so much, Anjali. And let's go straight now to Stefan Bancel, who is the CEO of Moderna, to talk more about this. Anjali is going to stick with us as well. Stefan, it's good to see you again. So this seems to be the long. Sorry, here. So Stefan, sorry. So talk to me about the steps now that you expect and how long it could take to get the UA. Sorry, we're having technical difficulties. We're actually going to take a quick commercial break, so just hold that thought, Stefan. You're watching Yahoo Finance Live. I'm Julie Hyman. We're going to give this another try. Stefan Bancel is with us. He's the CEO of Moderna, of course, the company filing today for an emergency. So, Stefan, we were just starting to talk about the sort of steps that are taken here. How do you decide that you're at the point where you can ask for the EUA? And now what happens next? What's your expected timeline?
Great. So thank you for having me back. So like other companies, we were waiting for two things. First, to have a final analysis of the phase 3 efficacy, which we got yesterday. When we filed the protocol for the phase 3 back in June, July with the FDA, we agreed with them that from a statistical standpoint, we needed to reach 151 cases of disease to be able to have a robust analysis. What we shared this morning is actually an analysis at 196 cases, showing a 94% efficacy. But as Angeli was saying, the piece that got me the most excited, that I was almost tap dancing in the house yesterday when I heard it from the team, is we had 30 cases of severe disease. And of those 30 were on placebo and 0 were on our vaccine. So if you think about what has happened in the country, people getting infected, if they get a severe disease, they end up in the hospital. And if you get bad case, they end up into the ICU, and the worst case outcome, of course, is death. If you can stop that whole cascade, that is, I believe, a game changer. And so with that efficacy data, and FDA had been very clear through an EUA guidelines back in October, if you recall, wanting 2 months of safety data for at least half of a participant. We crossed that threshold in the second half of November, as we had communicated. And so today we have all the pieces we need. We have been working with FDA very closely now for several months to file all the information around manufacturing so that they have everything to be able to make a decision. And so the file is going to go today. The team is finalizing the quality control as we speak. They spend the whole weekend of Thanksgiving checking and rechecking all the data. It's going today. The FDA has indicated to us that we will likely have our advisory board for mRNA 1273 on December 17. And I could anticipate within, I would say, 24 to 72 hours after this, a potential approval. What we're also doing today is to file in many countries outside the US. We're filing in Canada, in Europe, in the UK, in Switzerland, in Israel, in Singapore, and with the WHO to help access in low and middle income countries.
Stefan, I wish that you had recorded the tap dancing so we could share that on air. That would have been very interesting. So next time, please do that. One of my questions for you really is now that you have the filings set to go in, this really sets the company up to validate a product that would be the first on the market in the history of the company. But in addition to your point about manufacturing, and especially since you're looking globally for approval, also includes sort of an infrastructure that's being set up that could play a role later on down the line. As it stands right now, do you intend for the relationships that you have with the manufacturers, as well as the infrastructure being set up for distribution, do you think that's going to outlast the product itself?
Yeah, that's a great point. I mean, as I shared with our investors, third quarter call on my very last slide, is I believe 2021 is going to be the most important inflection point in the company history. If you think about it, we had $4 billion of cash at the end of Q3. We have today 20 products in development. And because this is a platform, I think that's a thing that's very new that a lot of people don't appreciate yet. For 100 plus years that the pharmaceutical industry has been around, there is zero correlation between drug 1 and drug 2 in any big pharma pipeline. Since now 50 years that the biotech industry has existed, there's also no correlation. But we use mRNA. mRNA is an information molecule. And so now with this efficacy data, and I hope in a few weeks with this first approval, it has an incredible read across all the vaccine pipeline. We have 6 products in the pipeline. Some of them are $2 to $5 billion annual peak sales per vaccine, like our CMV vaccine, starting its phase 3 next year. We've announced recently we're going to go after flu. As you know, the efficacy of flu vaccine is pretty bad, in the 30 to 60%. Based on the good data we had in the elderly, which is the population the most at risk with flu, we're going to go after flu business. And so, as you say, the infrastructure we are building for COVID is going to be used for the entire pipeline. So 2021, I think, is going to be the most important year in the company history. I could see us finish the year with a very strong balance sheet, way north of $4 billion of cash on the balance sheet. We have no debt. I could see us having, maybe 25, 30 products in development on our way to 40 plus products. That's kind of a pipeline like the size of an Amgen. That's what Moderna is gearing up to do. And this validation by the regulators in a few weeks, I hope, after this successful phase 3 data, has an incredible read across the entire pipeline.
What time do you expect that filing today? And then going forward for the December 17th meeting, are there things that you anticipate being asked? Because obviously this nugget about severe COVID prevention is really exciting for you and generally health experts, but does that matter to the population broadly?
I think it matters tremendously, especially in terms of psychology. You don't always know if you have, an underlying disease. Some people have, diabetes started, they are not aware. So people might have genetic, variation in their genes that might make them more susceptible to the disease. So if you think about the psyche and the impact it has had on the economy, if you could get a vaccine and know that you have 94% chance to have no disease and 6% chance to have mild disease where you will not have anything severe happening to you, I think it will have an enormous impact on psychology. And which is why I think if you think about the economy as a whole, once we get enough Americans vaccinated, which I could see happening, for people with severe risk in Q1, the rest of the population in Q2, I think by the end of Q2, you might be in a place in the US where basically you have any American who is willing to get vaccinated, have access to a vaccine, and goes back to a normal life, go back traveling, go back to see friends, go back to movie theaters and trips and so on. I think we're seeing the light at the end of the tunnel.
And what time do you expect that filing today? Is it going to be later today or sometime soon this morning?
It's going to be, I think, in the afternoon. The team is working on it. We need to make sure that every T is crossed, every I is dotted. As you can imagine, this is very important for credibility, also for helping the FDA that they have everything they need squared away. So it will happen today, but by the time we go to bed tonight, it'll be at the FDA.
Stefan, is all your capacity for 2021 in terms of the vaccine, is that sold out? And how close do you think you can get to producing 1 billion doses of the vaccine next year?
So it's a good question. So we've already sold out a lot. We have not communicated publicly, so I need to respect Reg FD. But if you look, 100 million doses to the US government, 80 million in Europe, 50 million in Japan, and many other deals across the world. And so we're already starting to see a lot of capacity sold out. As we've said, we feel very confident we can make 500 million doses. We're working toward 1 billion. The piece that is hard for me to know today is, given we're running 24/7 now, is will I have in 2021 every day all the raw material we need? Because if I need one plastic bag or I miss, one raw material, we cannot start production. And so that's the swing factor that is still a bit unknowable today. But you need to be assured we are working as hard as we can with our partners or suppliers to get closer to 1 billion doses.
And sorry, Stefan, thank you so much. Stefan Bancel is the CEO of Moderna. Many thanks to you and congratulations on the EUA. Anjali, thank you as well.
Thank you.
Well, thank you. We also have the largest deal of the year yet being announced today. S&P Global is going to be buying IHS Markit for about $44 billion. It's an all-stock deal here. And again, as I mentioned, it's the largest of the year, which is interesting. We've got a premium being paid for IHS Markit, and this is really all about data. These are two data powerhouses, S&P Global, obviously, also the company behind the S&P Dow Jones indices. Both of these companies monitor an enormous amount of information on the economy, on the financial world, and they sell that information to the financial world as well. So as we look at this deal and sort of what it means, Brian Sozzi, I know that you have been watching this, and it does seem to indicate the sort of power of data, particularly in this environment.
Very, very much so, Julie, and you pay a premium for data. We've seen this countless times in this space. I think what you're seeing is S&P realizing that it needs a more complete product offering to go to a lot of institutions and even expand out of the financial services sector. So this is a very powerful combination, the ability to take what S&P does and what IHS does, package that up and go to market with one really bigger product suite can be very compelling. And financially, there's a lot of synergies here, really over probably close to $500 million in annual synergies S&P is estimating as part of this deal going forward. Now, this does put the ball in turn back in FactSet. If you're FactSet, which competes for S&P and IHS, what do you do this morning? That company was rumored to be on the sales block a few months ago. What is your morning looking like over there at FactSet?
I think this deal is such an interesting way to maybe frame like a second derivative of how important financial markets are all around us, right? I mean, you look at the stock performance of S&P over the last 5 years. Not only is the stock up 250 some odd percent, the S&P is up 70% over that period. We've also seen IHS market shares outperform the market quite nicely. That stock's up more than 200% over the last couple of years. Julie Hyman, as you know, as an alum of Bloomberg, the value of data for investors and also as a, I don't know, maybe it's a way to get a sense of how financialized is the economy really, right? The more that people are willing to pay for data, the more the financialization of the economy, I suppose, becomes confirmed or, reaffirmed, however you want to say that. And I think, again, it seems, because it kind of is a sort of sleepy-ish business, tracking all the stuff that happens in markets. But I don't think anybody who is looking at the space and watching how S&P's performed, especially after the McGraw-Hill breakup a few years back and kind of splitting those two units apart, has any, kind of misconceptions about just how much investors are willing to pay for this. And we talk a lot about, SaaS, this, that, the other, big data. Well, here in markets, the big data is sitting right in front of us, right? It might be harder to get your head around what does Oracle have in the cloud, right? But I think you go to Yahoo Finance, you're getting a pretty good, entry-level view at what's there for financial markets, and clearly it's tens of billions of dollars worth.
Miles, a really important point you mentioned there on SaaS. I know you love the SaaS business models. S&P estimates after this deal closes, close to 80% of the business will be recurring revenue. That's a really good place to be.
It is a really good place to be. We should mention as well, S&P is getting IHS for a little less now than it would have a few months ago, and that's because a decent chunk of IHS's business is energy companies. They sell their data to energy companies. So does S&P for that matter. But energy companies, because they've been hit during this pandemic, because some of the other clients have been hit, the stock took a hit back in September. So in this case, when you talk about synergies, when you talk about bigger is better, in this case, it does seem to be that being more diversified and larger should provide some level of insulation against sort of individual sectors showing some weakness. So we'll see how all that plays out as we do come out of the pandemic. All right, we're going to take a quick break. When we come back, we're going to head towards the opening bell as we continue to see a mixed picture for stocks. The Dow futures falling almost 0.4%. We'll be right back.
All right, welcome back to Yahoo Finance Live. Miles Levin with you here in New York on this Monday morning. We're looking at a mixed open here for the futures. Nasdaq futures right now trading up about 0.1%. Dow futures and S&P futures both set to open lower during what has been an eventful month of November. Joining us now to talk more about everything going on in the markets is Michael Antonelli. He's a market strategist over with Baird Private Wealth Management. Mike, great to talk with you this morning. Let's begin by just maybe talking about November so far. I mean, let's assume we don't see any 7% moves in the S&P today, so we can pretty much know what November has, right? And it's been, in a year full of crazy months, perhaps the one that maybe gave us the most clarity on sort of where people see things going. How are you thinking about November?
Yeah, I also remember pre-election doing a whole bunch of events for Baird and for our clients and just talking about the kind of uncertainty around the election and kind of what scenarios might play out. And I remember, constantly being bombarded with the notion that we might have some sort of like super volatile contested election. And when that kind of stuff happens, when you hear that kind of stuff in the news, that tends to not be what happens in the market. So we ended up, like you said, we ended up having not only so a little bit more clarity added to the political world. We also had technicals really make some impressive moves. If we want to talk about November, you're talking about more highs on the NYSE and the Nasdaq than we had in early 2018. You're talking about the best month since 1987. You're talking about greater than 92% of the stocks in the S&P 500 being above their 200-day moving average, the highest in 7 years. The global Dow hitting a new all-time high. Transports versus utilities. Our friends at Strategas, a great Baird company, they're comparing transports to utilities, and it shows the cyclical nature of the breakout going right now. So November is going to end up being one of the best months, my friends, maybe in decades.
And Mike, so as we look ahead from November at that momentum, right? We've got some deals that we're talking about. We were just talking a few moments ago about S&P Global agreeing to buy IHS Markit. We've got an uptick in IPO activity, right? DoorDash just filing for its IPO this morning. And so I'm curious what these various things tell you about sentiment, right? That on the one hand, S&P says, this is the right time to make an acquisition. On the other hand, we've got all these hot IPOs that are coming in, but maybe not as at high valuations as they once were.
And yeah, think about what these corporate CEOs are kind of faced with. They need to grow earnings. We got to get on the other side of the pandemic. Money is cheap. So animal spirits in terms of deals starts to pop up. I think that, the Wall Street Journal, some other news media organizations were talking about Salesforce in advanced negotiations with Slack. Then you come up to this SPGI info deal. And you know what? It to me, animal spirits. It leads me to believe that animal spirits are coming back to the market and from a corporate perspective. Money's cheap. These acquisitions are potentially a catalyst for these companies. IPO market starts to heat up. You start to see some stocks come back to the IPO. That's all healing to me. It's all healing to me. That strikes me as saying that the market is thawing out from its kind of static entity, its static state that we were stuck in during the COVID world. I think this vaccine is starting to give not only consumers like you and I and your listeners and your watchers here thought about where 6 months to 12 months might be. It's also starting to give it to these corporate CEOs, and they're looking at the landscape. They're looking at low interest rates, cheap money, and that's it's a catalyst. It's a catalyst for them. It's a catalyst for us.
And just to mention, since we're talking about deals, right, there is now a report from CNBC that the Salesforce acquisition of Slack is expected to be announced tomorrow, and those Slack shares are spiking in the pre-market as a result of that headline. So just to put a fine point on some of the headlines that we're talking about involving deal flow. Brian?
Yeah, Mike, Miles mentioned this in our morning meeting this morning. You have Palantir up about 150%. I would argue most people still have no clue what this company even does and what they might be doing for the next 75 years. Do you think activity we see in Palantir and really across so many other sectors, is that evidence of a bubble forming in the markets?
So I don't think so. You would never run into me on social media or Twitter or on my blog kind of talking about bubbles. I don't think that there's a bubble in the stock market right now. That's not kind of one of my views. When you think about something like some of these names that maybe people don't understand what they do, or maybe they're new to the market, you got to remember that it's not just institutions that are kind of trafficking in the market. We know that institutions can be a big, huge part of what drives markets on a day-to-day basis. But we've entered this world where there are fans of stocks, if you will, almost like fans of sport teams, and they traffic in places like Robinhood, if you will, and they can end up sponsoring a name. They can end up being so into a name, they can end up moving a name because once it gets interesting, once it hits their radar, it starts to become part of the market's narrative. And you could even, if you even want to talk about that take versus Tesla being added to the S&P, we could talk about that. But these names might not be well understood, but they end up getting a bunch of fans out there, and those fans drive the price action.
Well, Mike, I guess related to that, and then you're sort of talking about the meme market, right? And I guess, from where you sit, the institutions that you talk to, these are more staid, buttoned up, conservative type investors. Is this something though that money managers need to be at least aware of? Like, there is a market of all these meme ideas and meme stocks, and they actually drive flows around the edges of what BlackRock does, and it's a part of the story, whether you like it or not.
I think that's right. I think that's right. I've covered institutions for about 12 years when I was equity trader on Baird's sales desk, equity trading sales desk. And institutions, they have their mandates, they have the way they invest, they have their styles, and they stick to those, right? That's what they're doing. That's how they're managing money for their clients. This is new. This whole notion of Robinhood, even at the border, somebody like Dave Portnoy, that kind of stuff seeps into the market, and it ends up having an effect, like you said, at the margin on price action. I believe that the long run institutions tend to dominate the flows of the stock market. But in these moments, like we experienced in 2020, you're right. You can get fans of a name, memes. You can get them talked about on all sorts of different venues, and then they become part of the witch's brew. They become part of the narrative that the institutions, they probably say, "Whoa, what's happening?" And maybe they're not thinking about that angle, Miles. So I think it's interesting when I think of Palantir, when I think of some of these other names. There are names that you'll end up seeing on one of a top 20 Robinhood list or something like that.
Right, but it doesn't seem to have much of an effect on the broader market, perhaps,
No,
as much as those individual stocks. Mike, are you looking at downside protection at all right now? It seems like there is we may not have a bubble, but there is epic bullishness out there right now, seemingly, especially with the progress we've seen on the vaccines that we just heard about from Moderna CEO Stéphane Bancel. Are you buying any insurance of any kind in case something goes wrong?
So sentiment is flighty. We know sentiment is something we track all the time. There's people out there that do a good job kind of monitoring where it is. Sentiment only works at extremes. Like if you see sentiment rising, there's places you could look for it. It only really works as a turning point at extremes. One of the things that I'm worried about next year is that the notion of a boom, the notion of a roaring 20s, is starting to become a little more consensus. I'm starting to worry about, hey, there's a vaccine. Hey, I'm going to go to 1 million concerts. I'm going to go out to dinner every night. I'm going to be out spending as much money as I can. I'm worried that is starting to become consensus. And that puts a little bit of fear into me, where I start to think, how am I going to play it if this stuff is already priced in? And I may not be buying protection here at this moment because I think that the technicals are so strong that argues for a nice rally into year end. I might think about that in the start of next year when I look at the landscape and I say, how many people are writing about the roaring 20s? And if I see Miles' Substack being like, hey, this is going to be the best year in 50 years, then I might start to sit back and say, all right, maybe I need to circle a little bit on whether we are too over our skis or whether we need to pull it back. But I think the technicals right now argue for a continuation of this pattern, a continuation of this strength, at least into year end.
Mike, I appreciate being considered a contraindicator. Certainly the highest honor that anyone in the media can hope for in any market environment. All right, Mike Antonelli, market strategist with Baird Private Wealth Management. Mike, always great to get your thoughts. Thanks for joining.
Thanks, guys.
All right, we got about 15 seconds here to the opening bell on Wall Street on this Monday morning. You're looking at live pictures from the floor of the New York Stock Exchange. Unilever down there ringing the bell to begin the final trading day of November. We've got a full trading week here, just 3 more full trading weeks before we get to the Christmas holiday and get towards the end of 2020, a year that in markets, at least certainly elsewhere, it seems like few are likely to soon forget. All right, let's go to Jared Blicker now for a look at how things are opening on Wall Street on this Monday morning. Jared.
Well, we got a mixed market here. It looks like the Nasdaq and the Nasdaq 100 both in the green, but the Dow and the Russell 2000 and the S&P 500 in the red. We're looking at the Dow Industrial Heat Map here, and we see Apple in the upper left. That's up about 0.2%, but most of the other stocks here in the red. Microsoft down 0.5%, just sorting by performance. Doesn't look like we have any huge losers here, but energy taking a little bit of a hit. That sector is down about 2%. Chevron, the worst off in the Dow, but you can see it's still up almost 30%. So it is the last day of the month, and potentially we're seeing some selling here since equities are up so much, but probably on track for, as we've been, if you've been reading the banners down there, best month for the Dow so far since 1987. Have to go back to January of that year. Well, here is our work from home lockdown trade. That is looking pretty good right now. One of the standouts is Slack Technologies. We just got word that Salesforce may be buying it, announcing a deal as soon as tomorrow. That report comes from CNBC. Also taking a look at the EV space, because this has been on an incredible run, at least if you're Tesla. You know, Tesla's up 3% here, 56% month to date. But guess what? Nikola down 25%, had been up 40% in the pre-market just a few hours ago after they announced that they'd have a skinny deal with GM. Not going to make the Badger, no stock investment from GM, but at least they're doing something. But we do have a lockup expiry today for a bunch of shares, and they are going to be issuing a lot more shares. So that dilution is hitting the market, taking the wind out of those profits that they had only a couple weeks ago here. But also taking a look at the NASDAQ 100 overall, we do see some winners and losers. We just went over Tesla. Let's see what's happening to the downside here. Pinduoduo down 2%. JD.com also down 2%. So a couple of China plays, Baidu among the worst off here. Also looking at some weakness in retail. Ross Stores was down about 2% in early trading. And finally, just looking at some of our sector action today, we can see tech and healthcare. Those are the only ones in the green. Moderna giving biotech a boost after the latest vaccine news. To the downside, we've been talking about energy. That's down 1.7%, followed by financials and communication services. Guys?
Jared, thank you. Appreciate it. And just to recap some of the big headlines that we're following at this hour, we are still seeing elevated cases of COVID across the nation. However, the numbers have come down a little bit after rising to nearly 200,000 on a daily basis over the holiday weekend. And there are still a lot of concerns about what the Thanksgiving travel and families gathering, despite CDC's advice not to do so, what effect that could have on the next phase of infections. At the same time, though, we got that news from Moderna this morning that its experimental vaccine was shown to be 94% effective in a trial, and even more effective if you're looking at its ability to fight severe cases of COVID-19. The company filed for an emergency use authorization. So it, along with the Pfizer BioNTech candidate, still showing a lot of optimism, or spurring a lot of optimism, that we'll see a vaccine potentially being administered to some people before the end of the year or early next year. So that's definitely something that investors continue to be watching. You know, as we started to get the transition really taking hold for President-elect Joe Biden, there's also some optimism around the economic team that he is marshaling, assembling. And Miles, there are some new names, it looks like, that are being added to that list.
Yeah, we're going to hear more from the president-elect, or I guess we'll have these nominations formalized perhaps sometime later this week. Vassilia Ruse, who is an economist over at Princeton, is going to run the Council of Economic Advisors, the CEA, as it is often referred to. Neera Tanden, who runs the Center for American Progress. And of course, if anybody is on Twitter, saw that she might be the first real poster. Neera Tanden tweets quite a bit to kind of take a high office here. She is expected to be nominated to lead the Office of Management and Budget, the OMB. And we talked to former OMB Director Mick Mulvaney on this program a couple of weeks ago. Someone else expected to be named to that CEA staff is Jared Bernstein. And that's a name that I think a lot of folks who follow financial media will be familiar with. Jared's been a commentator on the economy for quite some time, often appears on financial media. And between Bernstein and Ruse, So you get a real sense of where Biden thinks the most pressing economic issues are, and that is in the labor market. And, Claudia Sahm, who had been a member of the Obama CEA, I think 4 or 5 years ago, tweeting yesterday, I think some kind of the most relevant way to think about these appointments, which is that personnel is policy. So you can understand what a president or an administration wants to focus on based on the people that they nominate to fill certain positions. And so we are starting with 51 days to the inauguration to get a real sense of where the incoming Biden administration is most concerned. And that would be the labor market. And I think most folks who are watching the economy would certainly agree that that is where we cannot make the kinds of missteps perhaps that were made at the beginning of the last recovery. And, Brian Sazi, this all leads to where the real engine of growth comes in the U.S. economy, which is from the consumer. And we are now in the #1 period for focusing on and worrying about the health of the U.S. consumer.
Yeah, happy Cyber Monday, Julie and Miles. Look, I'm still digesting a lot of this data we have gotten over the past few days, but the latest results from Adobe Analytics, Black Friday online sales up 21.6% to $9 billion. It's being touted as a record. I say, who cares? These retail stocks have been bid up on the expectations that the starts of the holiday shopping season would be gangbusters, and that's not the case. That $9 billion figure was close to an $8.9 billion low-end estimate put out for Adobe. So it's a disappointing season. And another stat, too. This comes compliments of the folks at Sensor Metric. Traffic at physical retail stores on Black Friday crashed, not plunged, crashed 52.1%. And if you're a retailer today on Monday morning and you're digesting your sales reports, data like this, all of it is really disturbing.
I mean, I suppose so, unless, I think we're getting some more. No, our audio's okay. There we go. So let me just mention that we have formally gotten the nomination of Janet Yellen as Treasury Secretary now. Again, President-elect Joe Biden has nominated Janet Yellen, as expected, as Treasury Secretary. We'll be right back.
All right, welcome back to Yahoo Finance Live. Miles Udland here in New York. Let's take a look at how the markets have opened up here on this Monday morning. You see we got a mixed picture here on Wall Street. The Nasdaq is just hanging on to some gains here, up just 7 basis points. The Dow is off nearly 1%, retreating from that 30,000 level. Of course, we got our first close above 30K back during Tuesday's session. But in this final trading day of November, let's turn our attention now to what's happening across the pond. Yahoo Finance's Tom Belger joins us now for a look at how European markets are trading as they near the end of their trading month. Tom.
Hi, Miles. Yeah, we've actually had a pretty muted mixed start to the week in Europe as well. But as you say, for the month of November, we're looking at pretty hefty gains, potentially the highest on record, just a few hours away off the back of vaccine news. FTSE in London, DAX in Germany, both of those up more than 14% this month. And then stocks in France, Spain, Italy, all up more than 20%. Since the start of the month. So continent-wide, the Stock 600, which is a benchmark across Europe, you're looking at the highest monthly gains on record with a 15% jump. We've actually seen a little bit of pressure on stocks today, on energy, banking, travel, cyclical stocks in particular. Analysts say it's probably a bit of profit-taking from the month we've had, but there's a few other things to mention that investors will be keeping an eye on, or have been keeping an eye on even today in Europe. One is the OPEC Plus meeting. Europe's oil and gas stocks are slightly down today as investors worry about whether a deal is going to be struck on production. But markets in Britain particularly also weighing up the prospects of a Brexit deal being struck. Negotiations were apparently pretty difficult over the weekend, but a UK minister said today that trade talks could continue into the next year. That's a pretty big shift, and it's lifted the pound today as it would push back the no-deal cliff edge that's been a big worry for business well into next year rather than New Year's Eve at present. I should say, finally, heard today obviously about Moderna seeking sign-off in the US. They're also seeking sign-off from European regulators. But surprisingly, it doesn't seem to have given stocks here much of a lift. Miles.
All right, Tom Belger with the latest happening over in Europe. Tom will talk to you later on this week. All right, we're going to have more here coming up on Yahoo Finance Live right after a short break. Again, mixed open here for markets. We'll be talking a bit about Cyber Monday, currently underway here in the U.S. We're back in just two.
As we were just talking about, it is indeed Cyber Monday, such as it is. All three major averages, by the way, are now in the red. The Nasdaq has dipped very slightly into negative at this point. Let's talk about what to expect from the online retailers today. Tom Forte of D.A. Davidson is joining us now. He's a senior research analyst who tracks a lot of those online retailers. And Tom, we just heard from Brian Sazi a few moments ago saying that, you know, yes, it's been a fairly robust shopping season so far, but sort of at the lower end of estimates. What even for many of the cyber retailers, what do you think is going on there? Is it the be careful what you wish for, that these guys have been trying to spread out shopping and maybe that has actually worked?
So, Julie, great question. I think it's a combination of factors. So, you think about Prime Day that was held in October this year, which is regularly a June or July event. And the goal there was to try to ease the pressure on Amazon's fulfillment centers by pulling some sales forward in the fourth quarter. At the same time, I think we have to think about how many of the provisions of the CARES Act have long expired. So I think you're looking at a consumer now, and while many are in good shape and have incremental discretionary income to spend, because for the most part, they're not traveling, they're not eating away from home. But at the same time, I think we have to think about how there hasn't been a material stimulus really since the CARES Act. And I do think that there are a large number of consumers out there that are in very challenging situations for holiday this year.
Tom, who are the losers online so far this holiday season?
Well, I think the challenge for e-commerce in general is going to be, will I have the inventory in stock? And then the second challenge was, will I be able to get the inventory to the consumer in time for holiday? So generally speaking, we think Etsy's incredibly well positioned to the extent that we believe they have a structural advantage on Amazon. While their sellers don't make Xboxes and PlayStations, they do make gifts. So Etsy should have gifts in stock for the whole holiday season. By way of comparison, there's been inventory shortages across consumer electronics. This has been particularly challenging for Sonos and for Corsair Gaming, and I think it's going to remain challenging. Consumer electronic sales may not be as robust as hoped because of these supply chain challenges.
Hey, Tom, maybe zooming out a little and thinking about what we've learned about e-commerce during the pandemic. We're mentioning these supply chain challenges, and maybe they're short term because of the pandemic, but has the shift to online maybe changed how some of these retailers and really manufacturers are going to have to think about their scheduling through the year, and maybe things maybe get less predictable in terms of when your buying seasons are the way they may have been in a more brick and mortar sense?
Absolutely. So the irony for 2020 is that it's been Cyber Monday essentially every day since late March, early April. I mean, the shift to e-commerce this year during the pandemic has been very substantial and very significant. And from a supply chain standpoint, I think that we've learned that consumer electronics, if you think of Logitech webcams, things of that nature, gaming accessories during a pandemic, there have been shortages throughout the year. And I think that what we're going to look for is who's going to have the ability to adjust their supply chain to react more quickly to trends. And I'm hopeful that we'll see more flexibility in supply chains in 2021.
And Tom, of course, it's not just supply chains on the part of the producers. It's also the sort of last mile, so to speak, right? It's getting this stuff to people. And we have been hearing from retailers now pretty consistently to expect shipping delays, delivery delays this holiday season. They can say that all they want. Are we still going to risk having a lot of people being pretty annoyed over the course of the holiday season? And what effect is that going to have on shopping behavior and then feedback to some of these retailers?
Great question, Julie. So the best example I have to compare it with is a number of years ago, Amazon discontinued signups to Amazon Prime because it noticed in the data as we were approaching holiday that it would not be able to meet the demand as far as consumers looking to have products delivered to them in time for holiday. Now, since then, Amazon has materially ramped its first-party delivery efforts. But when I think about collectively the US Postal Service, FedEx, UPS, and even Amazon's own efforts, I think this is going to be a very challenging logistics e-commerce period. For that reason, though, companies like Target and Walmart that are doing the buy online, pick up in store may have an advantage, much like they had an advantage early during the pandemic with consumers being able to get their groceries by buying online and picking up in store. So I think this is going to be a very challenging period from a logistical standpoint as well. And companies that are doing the buy online, pick up in store may have a competitive advantage.
Very interesting point. Tom Forte, good to see you. Be well, Tom. Tom is D.A. Davidson
Julie.
Senior Research Analyst. Appreciate it. All right, coming up next, we will talk a little bit more about the slicing and dicing of the holiday retail data. We'll be right back.
All right, welcome back to Yahoo Finance Live. Miles London here in New York. Got stocks in the red as we get this Monday underway. Cyber Monday here in the U.S. And Brian Saz, we've already gotten quite a bit of information on which retailers are thriving, which sectors are really struggling amid this unique shopping season. I know you're looking at three areas that you're calling under the radar winners in this period.
Yeah, Miles, my apologies. I probably sounded too gloomy on the holiday season in the last block, but that's what we do here. We keep it real. But there are some positive areas here within the data. So I've been connecting the dots pretty much all weekend long. Adobe does note pet product sales up 254%. Now, we just talked to Chewy CEO a couple months ago, and they have seen really an explosion in their business. Now, that is a name that investors will probably want to watch ahead of their earnings coming up on December 8th. Pet products have been strong all year. You've seen a lot of pet adoption, so not surprised to see this from Adobe. Next up, personal care products. People look like they want to get cleaned up finally for Zoom calls. Those sales up 556% on Black Friday, not bad. Obviously, the names there to keep in mind are Procter & Gamble. They have had a couple big quarters in personal care products, lots of face creams. They've been doing well. Also, ELF, the cosmetics company, we just had the CEO on a couple weeks ago, too, to explain their business a bit as well. And last but not least, smart home products. Sales on Black Friday up 592%. And Julian Miles, I think what we heard from Sonos CEO Patrick Spence after earnings last week underscores this trend. A lot of folks are still in their homes. They're figuring out ways to improve their living conditions, not just buying new paint at Home Depot. It's Sonos speakers, it's Amazon Echoes, which also have been a hot seller so far.
To Tom Forte's point a few moments ago, I mean, if every day is Cyber Monday, can you have a Cyber Monday anymore? I was getting Cyber Monday deals in my mailbox this morning, and even though I was preparing for the show, I'm thinking, wait a minute, it's Cyber Monday now? Hasn't it been Cyber Monday for like the past week or month or 6 months? And so I wonder about the retailers' abilities to use discounts to drive traffic going forward when we've sort of gotten more used to a different cadence of things in terms of shopping online.
Julie, these days are over. Cyber Monday, Black Friday. I think this is the finally of the year. You could just bury these names 6 feet under and call it a day because they're completely, absolutely irrelevant. Consumers have tuned out to them. Not seeing a lot of deals out there in retail, though, but where you are seeing them because of the warm weather, not just in New York City, obviously, across the country. Coats, lightweight jackets, Canada Goose, those things are on sale. VF Corp's, North Face, seeing a lot of sales on those and seeing a lot of inventory. It's starting to pile up at the likes of Dick's Sporting Goods.
You know, it's funny, Sazi. On the one hand, no one needs a coat because everyone's going to work from home and not leave the house. On the other hand, you need the biggest coat you've ever had because the only place you can go dining is sitting outside, maybe in a New York or Chicago winter. And I don't think that's super appealing for anybody. And also, you know, Julie, to your comment about Cyber Monday, it's like the whole last cycle of retail was about acquiring better customers, offering better, simpler products that you didn't have to discount. And now here we are, finding ourselves discounted all the time. Funny kind of how those trends ebb and flow over time. And, you know, retailers might get a little wrong-footed or, you know, kind of get caught out here when you see a period like we've seen over the last couple of months. All right, let's talk quickly about the markets here. About 25 minutes into today's trading session. All three majors are in the red, as you can see. But Jared Blickery, the action, where it's been over the last couple of weeks, happening in crypto.
Yeah, we will get to Bitcoin in just a second because that market is on fire. Bitcoin reaching a record high on some exchanges here. Now we have varied prices, so you're not going to see that on Yahoo Finance data, which has a high of over 20,000, but really creeping up there. Strong weekend action. Got to take a look at Nikola because that is down 22% after announcing that it would be offering an additional 53 million shares, so diluting their shareholders after they announced a skinny deal with GM. It had been up 40% in the pre-market. Also, Moderna up 15% here on the news that it's going to file its EUA. It is filing that with the government, with the FDA, and Trump has tweeted, Moderna now applying for this emergency vaccine approval. US FDA must act quickly. Operation Warp Speed has been a great modern day miracle. Now let's take a look at the Nasdaq 100 heat map, and we're going to see kind of a mixed market here within the Nasdaq. Apple's up 2%, Facebook down about 1.3%. Some of the big winners here, well, had been AMD and Moderna. Moderna's up 15%, but also Xilinx and Zoom. So some of those chip names and defensive names doing well here in the early action. Guys?
All right, Jared Blickery with a look at where things stand here. Again, about a half hour into today's trading session, the final trading day of a momentous month of November. All right, we're going to have a lot more here happening on Yahoo Finance Live. We're back in just 2 minutes. All right, welcome back to Yahoo Finance Live. Miles Udland here in New York on this Monday morning. Let's take a look at where things stand right now. About a half hour into today's trading session, we see all three major indices lower to begin the final full trading day of the month. But this morning, as we've gotten on several Monday mornings over the last couple of weeks, positive news on Moderna's vaccine. The company announcing that they will be filing for an emergency use authorization with the FDA, potentially setting that vaccine up to get distributed to some Americans by the end of this year. So let's talk more about the vaccine and the state of the pandemic, which of course still raging here in the United States. For more on that, we're joined by Dr. Sally Permar. She is a professor of pediatrics, microbiology, and immunology at the Duke University School of Medicine. Doctor, thanks so much for joining the program today. Let's begin with the news that our audience, an investing audience, is so focused on, which is the vaccine news. How have you kind of taken this news we've gotten from Pfizer, then from Moderna, from Oxford over in the UK, and how constructive are you on the prospect of a vaccine actually kind of winding down this pandemic in some sense by the end of next year?
Yeah, thank you for having me and talking about this important topic. There's been only really promising, exciting news coming out of the phase 3 vaccine trials from both Moderna and Pfizer with their mRNA vaccine platform, and then also AstraZeneca and the Oxford group with their viral vector vaccine platform.
And Dr. Permar, you your specialty, or one of your specialties, I should say, is pediatrics. And I think there are still a lot of questions about children. And so I would ask you, what do we know about the importance of children being vaccinated? I believe Dr. Fauci has said that children will we will wait to start to vaccinate them in higher numbers. And what do we know at this point about kids really being vectors? Because it feels like the data on that has sort of gone back and forth.
Yeah, it's an important question. We know that children are an important population to address in ending this pandemic because, of course, they have been both directly and indirectly impacted, first by being victims of the infection themselves. We know that there have been millions of cases in children, but it has become very apparent and consistent that they do not get as sick as often as the adult population. Yet there are some children who have gone on to have severe disease. But they've been very much indirectly impacted by the fact that many of their schools were kept closed this fall because of concerns of spreading the epidemic. And we've learned a lot about transmission in children. We know that they can, in fact, transmit the virus onto others. But we've also learned that if mitigation strategies, such as wearing masks and distancing and hand washing, are put into place, that those transmissions on campuses at schools can be reduced.
Doctor, do you think the vaccine makers, the major vaccine makers, will have to make a specific vaccine for infants and, let's say, children up to the age of 10?
Yeah, so it is very important to include children in these vaccine studies because, again, their lives have been negatively impacted by this pandemic. However, you must test vaccines specifically in the pediatric population because there are some vaccines that children respond better to compared to adults. There are some vaccines that children respond less well to compared to adults. And so the vaccines that are being tested in adults now will need to be tested specifically in the pediatric populations, both for safety as well as the ability to elicit the immune responses that have been so protective in adults.
Doctor, we've just gotten through the Thanksgiving weekend here in the U.S. We're about 4 weeks away from the Christmas season, both in the U.S. and a lot of concern about what's going to happen in Europe as well. How concerned are you about the state of capacity in hospital you're working in, state of hospital capacity across the country, and are you still concerned that too many Americans are not taking the precautions necessary to forget about flattening the curve, at least stopping the exponential increase in cases here in the U.S.?
Yes, as you bring up, it's a very concerning time right now in that the case numbers are really increasing in exponential numbers, as you say. And this is only being exacerbated by the holidays where people want to get together, spend time indoors because it's colder outside. And we don't have those vaccines right now that we know will have a huge impact in curbing this pandemic. And so we all need to make sacrifices this upcoming holiday season. However, I do think that we have learned that we can keep children in school if the mitigation strategies and the resources for those strategies are put into place. And so what I hope is that other sectors of the economy, like indoor restaurants, bars, things that we know are problematic for transmission, those may need to be limited in some capacity, but that we can keep schools open while we wait for not only the vaccine to roll out to adults, but the pediatric trials to get underway. And so the vaccine can make it to our children as well, and that they can go back to the life that they knew before 2020.
And doctor, so finally, I'd love to ask you specifically about the nation's largest public school system, New York City, which has sort of gone back and forth on this issue, as you know, with Mayor Bill de Blasio first saying they were going to shut schools entirely when the city's transmission rate went above 3%, and now saying they're going to open them entirely. That kids are going to have the option to go 5 days a week. Do you feel like that was the right decision from what you know of the city's plans? Does it feel like the right mitigation plans are in place there?
Yes, so it sounds like to me that New York City and all of its government and school officials and representatives are trying to follow the data. So when they first made the plan of what level of individuals who were getting tested for coronavirus were coming back positive, that was, in the summer when we didn't have a lot of data on what happened when kids did go back to school, how much transmission would happen on those school campuses. And I think what we've seen from the data that we do have available is that if the measures are put into place of masking, distancing, and hand washing, you can keep the transmissions low in the school setting. And so what I think is going on is that they're reviewing the data and trying to make the best decisions for children to both make sure that their learning and their well-being are maintained while addressing the pandemic and the rising case numbers.
All right, Dr. Sally Permar with Duke University School of Medicine. Dr. Permar, thank you so much for joining the program this morning.
Thank you for having me.
All right, let's turn our attention back to the economy and the team that President-elect Joe Biden is assembling around him. Yahoo Finance's Jessica Smith joins us now with just a confirmed list of nominees from the Biden camp to fill out that economic leadership group.
Right. President-elect Joe Biden did make his selections official this morning, saying this is going to be the team that helps him build back the economy and deliver relief to people who are struggling through the pandemic. Of course, there has already been a lot of reporting that Janet Yellen would be the Treasury Secretary. Now that is official. Biden says that he is picking Yellen to head up the Treasury Department, and we now know who her top deputy will be if confirmed. Biden has selected Wally Adeyemo. He was an advisor to President Obama, and the transition team notes that he would be the first African-American in that role if he is confirmed. Biden has chosen Neera Tanden to be the director of the Office of Management and Budget. Right now, she is the head of the Center for American Progress, a center-left think tank. She also worked at the Obama and Clinton administrations, and she was an advisor to Hillary Clinton. She would be the first woman of color and first South Asian American to lead OMB if she is confirmed. We have Cecilia Rouse. She's a Princeton University labor economist. She'll be the pick for the chair of the Council of Economic Advisors. The transition says that she will be the first African-American to lead the CEA. And then we have a couple more names, Jared Bernstein and Heather Boucher, two economists who will serve as members of the CEA. Biden said in his statement that the team will, quote, help the communities hardest hit by COVID-19 and address the structural inequities of our economy. They will work tirelessly to ensure every American enjoys a fair return for their work and an equal chance to get ahead and that our businesses can thrive and outcompete the rest of the world. Now, we will likely see confirmation fights start to heat up in the coming weeks. And I think one of the toughest is going to be Neera Tanden. We've already heard from GOP aides. One aide to Senator John Cornyn said there is zero chance she gets confirmed. But of course, if Democrats win both races in Georgia, they can confirm Biden nominees on their own. But again, the economic part of the Biden administration is starting to take shape. We do expect a more formal rollout sometime in the coming days. Miles?
And Jess, I think the Biden administration would have higher aspirations than a bunch of acting heads, but we all just learned that you can govern quite a bit for 4 years with acting heads of all of these different organizations that don't actually make it through the confirmation process. All right, Jessica Smith, we will talk to you later on this week. Let's turn our attention back to what's happening in the markets, and certainly we've seen investor enthusiasm around some of these appointments, namely Janet Yellen as the likely next Treasury Secretary. For more on all of this, we're joined now by Hugh Johnson. He is the CIO at Hugh Johnson Advisors. And Hugh, I'd love to begin by talking about how you're thinking about what the economic roadmap could be next year under a Biden administration. Investors seemingly have talked themselves into being quite excited about what could be coming down the pike. How does this factor into your thinking, if at all, right now?
Well, I like what I see. I mean, first of all, I like what I see in Janet Yellen. I think she's going to provide all the kind of leadership we want at Treasury. And you're likely to see some really good work or cooperation between Treasury and the Federal Reserve. And that's I think, going to be a real positive. Some of this is going to depend, as was mentioned just a couple of minutes ago, about the outcome of the election in Georgia. And obviously, if the Democrats are able to get hold of those two seats to get the majority in the U.S. Senate, then they're going to be able to get the confirmation of not just the people that are going to be in these important positions, but they'll also get to get done a lot of what Biden's plan is. And that includes some tax increases, and everybody worries about that. But at the same time, it includes a lot of spending increases on the environment, spending increases on healthcare, spending increases on the infrastructure. And quite frankly, if you put together the spending increases with the tax increases, it's really fiscally very neutral. So it's not going to have the drag that worries some economists or observers. So I like what I see. I like what I see in Janet Yellen. But let's watch that Georgia election, because that's going to determine a lot of the outcome of the so-called Biden program as we move through 2021 and 2022. Politics will make a difference.
Hugh, there's a lot of perfection priced into this market with regarding the Biden transition, what he may do for the economy in 2021 with the COVID-19 vaccine. You've seen all sorts of stocks just really rip higher over the past month. Do you think we're in the latter stages of a bubble here that ultimately ends badly in December with a awakening call in all sorts of economic data, likely with the first jobs report?
It's a great question. And the reason is because my numbers say, everybody does the numbers differently, that we're about 8.8% overvalued. The upside potential between now and the end of 2021 is about 4%, which is not very attractive or appetizing. So you could say that, yeah, look, we've moved from what might be called a very rational rise in stock prices to something that's a little bit less than rational. And we've got optimism starting to rise. But I would add, and importantly, I think, is that optimism is not widespread. We haven't moved into so-called a market where a lot of borrowing is going on to buy stocks at prices that are overvalued and arguably looking at some fantasy numbers. And quite frankly, optimism is not widespread. Even though we're slightly overvalued, optimism is not high enough. We don't see a widespread exuberance. We don't see euphoria yet. So I say it's not a bubble, but it is overvalued. And we might have a little bit of trouble near term between now and, say, Christmas, maybe into the first quarter with the stock market. It might have to give up some ground. Looking further out, though, as I mentioned before, when you take a look at the vaccine and the possible impact on the economy in 2021 and 2022, it's likely to have, first of all, a return to normalcy in the second quarter, and you're likely to see a very significant impact on the U.S. economy in 2021, 2022. It's going to raise everybody's forecast for 2021 and 2022. We're seeing that going on now. And it's not just the forecast for the economy, it's the forecast for earnings. And earnings are going to be nothing short of spectacular in 2021. Look for 22% rise in S&P 500 earnings in 2021 on a year-over-year basis, and a big number in the second quarter.
Well, and Hugh, if we haven't reached euphoria, and we don't have a lot of folks out there willy-nilly levering up their portfolios, which is good in the grand scheme of things, but if we haven't reached that point of euphoria, do you think December is another month where we might see another double-digit gain in the markets? Look at the MSCI World Index, up 13% this month. Dow up double digits too.
Well, if things stay rational, no, we're not going to see that in the markets. And of course, if you do see that, you have to hearken back to Alan Greenspan and his irrational exuberance comments and say, well, maybe there's a place for those in the market right now. I hope we don't see that. I hope that the markets become a little bit, maybe even down a little bit, but don't go very far. And we start to get a return or recovery in sort of valuations to levels which make me a lot more comfortable. I wouldn't mind seeing a decline in the stock market in December. I wouldn't mind seeing a decline in the first quarter in the stock market to levels that are more attractive. That makes me get a stronger appetite to buy stock, because the upside potential then will be all that much better. So I'd love to see it. One thing you don't want to see is you don't want to see a move to too much irrationality and, again, exuberance that might give way to euphoria, and then we're going to be in for some real trouble.
Hugh, it's Julie here. It's good to see you. Among other things, we just got a little bit of economic data. Pending home sales in October, a little bit lagging here, but still down for the second month in a row, down 1.1%. And so I wonder whether you're looking at economic data or elsewhere, when you're looking at the potential for a pullback, what would cause it at this point? I mean, it always comes where you're not looking for it, but still, what are the sort of risk factors that could cause it?
The risk factors are, look, if people are sort of in the markets and out of the markets, they're trading the markets pretty actively. And the real risk is that you start to get some disappointments. You get some disappointments on the economic numbers. Look, the economy is slowing. You're going to see that in the employment numbers this Friday. You're going to see a gain in jobs, non-farm payroll employment of about 500 to 600,000. And it's been coming down steadily since June. You're going to see that in the retail sales numbers. You're going to see that in consumption expenditure numbers. If those numbers start to come in a little bit less than expected, and we start to get some downward revisions to earnings estimates, I don't look for a lot of that, but I look for some of that. In other words, without the stimulus, you're likely to get more sort of bad news, more evidence that the economy is in the process of slowing. You've seen some economists already reduce their forecasts for the first quarter to minus numbers. I don't think that's in the cards, but we're likely to have slower numbers, slower GDP growth, not as strong earnings, and that might be disappointing to create some of a pullback in stock prices. Nothing really significant, though. A decline in stock prices is a reflection of numbers. It'll be a little bit on the disappointing side.
All right, Hugh, always great to get your thoughts. Hugh Johnson is the CIO at Hugh Johnson Advisors. Hugh, I'm sure we will talk to you soon.
Thank you.
All right, coming up on the other side of this break, we're going to talk a bit about what you need to know ahead of the holiday season, some trends that we're seeing so far during this early shopping period. CEO of Shipt is going to stop by for that conversation coming up here in just 2 minutes.
Same-day delivery services are having a big moment this holiday season as people avoid stores during the pandemic. And Target Ship service is right in the middle of the same-day delivery action. Kelly Caruso is the CEO of Shipt, and she joins us now. Kelly, good to speak with you here. I've been using Shipt for quite some time. I get it. It has proven very helpful to me. But I was in the Target stores this weekend, and I've seen a lot of the Shipt personal shoppers, really packed stores. What have you seen at the start of the holiday season? There has been concern about how it has started, but I've seen a lot of those shoppers in Target stores. How would you grade the start?
Yeah. Hey, Brian, good morning. It's great to be here. Undeniably, we're off to a very strong start. We have set records in the weeks and days leading up to the holiday start. In fact, on Thanksgiving Day alone, with so many retailers that were closed for that day, we saw a 65% increase year over year. And that momentum continued not only through Black Friday, but well into the weekend as consumers continued to place orders around both groceries and giftable items. And so as we head into Cyber Monday today, we feel well poised and positioned with our shopper community of almost 300,000 strong to really partner with our customers and our retail partners in delivering Cyber Monday orders today for same-day delivery.
Kelly, it sounds as if you're ready to blow past your, I believe, the fourth quarter goal, double the amount of new shoppers you might add to the platform?
Yeah, when we came into the year, we started with 100,000 shoppers. We quickly scaled to 200,000 when we saw those the initial demand from the pandemic. And for the holiday season, we'd like to grow from 200 to 350,000 shoppers, and we're well on our way to that.
Kelly, it's Julie here. Thanks for joining us. Talk to me how this works, sort of logistically. In other words, if you have all those new people you're hiring who are in many cases shopping in the store, how do you work in terms of workflow because of pandemic capacity restrictions? And also, I have to admit, from a shopping experience, I have been in stores when there are people from your competitors, for example, who are doing shopping for delivery. And at times it can be off-putting when, as a regular shopper, you're sort of competing for space with people who are in the store shopping for delivery.
Yeah. So I would say a couple of things, Julie. Number one, we have bet on the power of the personal shopper since day one. We believe at Shipt that technology without that human element is not relevant for the future. And so our shoppers do a couple of things really well. They know how to pick product and get the order exactly right, whether that is groceries to giftable items like toys and electronics. They are great communicators. And that applies to not only the customer, but to the retail employees in the stores that they are shopping. They develop amazing relationships with their counterparts in retail stores. And lastly, their attention to detail and their ability to go above and beyond creates a great experience, not only for our Shipt customers, but for our retail partners. And Shipt is truly seen as a brand extension or a brand ambassador, if you will. We absolutely want to be a retail partner. We do not want to be a retailer. And so by working closely with our retailers, we're able to understand what protocols they have into place on a location by location basis to make sure that we are enhancing that shopping experience, not detracting from it. And the last thing I would say is early on in the pandemic, it was really important that we create this safe shopping environment for both our shoppers and our customers. And to do that, not only did we scale up our shoppers, but we also offered them and continue to protective equipment on a daily basis. We offer financial assistance if they are diagnosed with COVID, and we created more product features such as contactless delivery to really have the highest level of safety possible. And what we've seen is our consumers and our customers, they feel like they've got a partner as they head into the holidays. Celebrating the holidays are important. Doing it safely is equally important, and Shipt is a great holiday helper for them.
Hey, Kelly, it's Miles here. You were talking a little bit earlier with Brian about some of the membership trends that you've seen, and I'd be curious if what we've seen during the pandemic has kind of had you guys rethinking your TAM here, if it's actually a bigger market available to a company like a Shipt because there's forced behaviors have happened and people realize they actually liked this. Is that something that you have thought about at all?
Absolutely, Miles. We believe that online shopping and the subsequent fulfillment systems that go along with that, they're here to stay. And so as I look forward to 2021, myself and the entire SHIP team, we are really focused on 4 key areas. Number one, we'll continue to grow our footprint and coverage area in the US. Secondly, we want to continue to expand the retail offering that we've got on our marketplace to ensure that there is absolutely the right mix of grocery, household essentials, general merchandiser, and retail verticals. Next, we're going to focus on our product offerings, whether that is growing our marketplace, continuing to grow our delivery-only services, expanding our platform product offering, and continuing to offer white label options. We want to partner with our retail partners to create the fulfillment service that is right for their business. And lastly, but probably most importantly, is we'll continue to create inclusive environments, both for our team, our shopper community, and our retailers at large. Our purpose is to spark the connections that show how every person counts, and we'll continue to do that in 2021.
Kelly, and that's a key point too. Shipt is not just a Target thing. You still work with many other big name retailers, and to that end, really, same-day delivery is only going to get faster, and it's going to be a real critical component to brick and mortar retail. As you look to next year, how are you going to get more humans to come and work for Shipt, and how many people do you think you're going to have to hire just to meet the new normal demand we're seeing out of retail?
Yeah. So Brian, I would say a couple of things. Number one, as you know, it is expensive to build out e-commerce and fulfillment capabilities. And Shipt is a great partner for retailers to partner with instead of building out their own. We want to enhance their in-store experience, not replace it. So we are a great trusted partner to that end. As we think about scaling our business to meet demand in 2021, we will continue to place bets on the personal shopper. And we believe that Shipt is a great opportunity for our shoppers to have an opportunity to work flexible hours and earn great income. And we know that today we pay about $22 per shop, including tip. And so listening to our shoppers, continuing to create these flexible income opportunities, creating product enhancements, really making Shipt the premier platform for all of our shoppers' needs is what we will focus on to ensure that we're able to not only recruit, but retain the shoppers on our platform.
All right, we'll leave it there. Kelly Caruso, the CEO of Shipt, good to see you, and good luck this holiday season.
Thank you, Brian.
All right, coming up, we'll look at some winners and losers in the early going to the crucial holiday shopping season. Stick around.
We're talking holiday shopping season on Yahoo Finance Live today and on this Cyber Monday as we sift through some of the numbers that are coming in from the holiday weekend. We are looking at projections for how Cyber Monday is going to be, how the holiday season is going to be overall. Jan Rogers Kniffen is joining us now. He's the CEO of J. Rogers Kniffen Worldwide, longtime retail consultant. And Jan, I know that you look a lot at department stores specifically, which, as we know, some of them at least have been having sort of a long, slow decline. Is this the year that finally pushes them over the edge, or is this the year that really sifts out who is doing it right from those who are not?
Oh gosh, that long, slow decline started way back 50 years ago when I got into business. We had 200 department store names in the country. Now, what have we got? If you count them broadly, we've basically got Macy's and Dillard's. Is this when it pushes over the edge? They've pushed over the edge a long time ago. Macy's is still going to be with us. Nordstrom's still going to be with us. Kohl's is still going to be with us for the long term. The rest of them we have questions about, I admit. Yes, we're seeing them pushed really hard because traffic's down a lot. And even though it was a slow decline for many years, it's been a fast decline since March 12th of this year. And I do think that we'll see, pennies already went, right, and they're being reconstituted, but they went. Neiman's already filed as well. So yeah, we're seeing the transition completed now, but digital is where the world is, and the stores have to be both digital and physical. But the growth component is no longer whether it's going to be online or in-store or omnichannel or something like that. It's digital and physical, and it's just retail. And so we're going to see fewer stores and we're going to see more competitive structure. And yes, we need fewer department stores even than we have today.
Jan, I exchanged an email with you on Black Friday, and I asked you, where's all the traffic in New York City? I went into the Macy's Herald Square store. It's 11 floors, 1.1 million square feet of retail space. And it was really virtually tumbleweeds. I could have brought my football there and had a tag football game or flag football game. Once we leave the holiday season, if we continue to see these double-digit declines in traffic from malls and the department stores, how many stores, mall stores, do you think could close in the first half of next year?
Oh my gosh, there's 110,000 stores in America, right, in total. And we think there's going to be at least 25,000 of those 110,000 stores closed from now through the time that COVID ends and we get to the other side of it. So in the malls, we could see of the 1,100 closed malls in America, we could see half of those go dark or be changed dramatically in nature. And we could see a whole lot of stores close. But yeah, sure, we could see 15,000 stores close that come out of the malls, 10,000, some number like that. So that's not going to be surprising because it's been going on before COVID. We were seeing 10,000 stores a year closed pre-COVID. There's only been about 8,500 so far this year officially announced closures, but that'll just be a tail, right? We'll see that continue. And the reason you haven't seen the announcements yet is because some of those dark stores may reopen, may not, and they haven't been announced. So we'll see a lot bigger number than the 8,300 or so that we believe has already happened this year. And I believe, haven't we all believed all along? I think I wrote in 2014 that by 2030, we'd see 50% of all non-bar, non-restaurant sales online. That's back when only about 3% was actually online. So that, yeah, sure, that's coming, but it was coming anyway. It's just been accelerated by COVID.
Jen, we're talking about, the few retailers that might make it through. You mentioned Macy's and Kohl's among them, but a lot of these gains are accruing to your Targets, Walmarts, Amazons. They're the monoliths now. Is it time to start thinking about the next leg of retail? What could challenge those business models at some future point when there is 50% online penetration? Because the decline of the mall, we can look back and talk about it, but it sounds almost like that story's over, and it's time to think about what's next, maybe.
Hey man, I've been doing this a long time. I lived through the rise of the mall and the destruction of the downtown and all the things that we saw happen in the creative destruction of retailing. This is not new. Once upon a time, when Walmart was 20 years old, it was 3% of national sales, and it was getting 50 cents out of every new dollar of sales. Amazon's a little over 20 years old. It's 4% of national sales. It's getting 35 cents out of every new dollar of retail sales. That's already happening. So going forward, do I think that Walmart, Target are big winners? Yeah. Home Depot, probably Lowe's. Costco for sure, best retailer in the world. Yeah, I think those guys are going to continue to gain market share in this current environment because they're healthy. They can invest all they want. They were deemed essential. They got to stay open. All the good things happened with them. And they're all really great retailers. They were winning before COVID, and now they're just winning more during COVID. But do I think there'll be new rising things to fight the battle with Amazon, Target, and Walmart? Yeah, sure, I absolutely do. I don't know what they are yet. I have 3 or 4, actually 6 now, little retail tech startups that I sit on the advisory board of. Will one of those be the next Starbucks or the next Walmart? God, I hope so. But something will be. This is not going to go away. So it's, yeah, we're going to see that change continue, and we're going to see the decline of the mall that was already started. We're going to see the rise of the surviving big box, but we saw the destruction of the big box. How many of those are already gone? And think about it. Walmart's and Target are the only discounters really left. All those guys like Gold Circle and Zayre and Kmart and all those, they all got taken out by their own kind. So this is not, there's nothing surprising going on here. And we've all known it was going to happen since 1999 when I walked a distribution center with Jeff Bezos. It wasn't hard to figure out that the world was going to change. I also
and it's
26th Walmart ever built. Think about it. There's 4,500 just in America now.
Wow. So, Jed, let's talk about the changes that might be coming that we might not expect, right? Or at least there's some debate about. We've all been talking about what changes that are happening right now are going to remain permanent. Are we all going to be sweatpants clad for the rest of our lives? And I
Lord,
think you are in the
we're
camp
not.
who says no. Right. So talk to me about pent up demand for looking better.
Fashion is not dead. Consumers wanting to look good is not dead. You will see the Roaring 20s start in about April of this year when we've got wide distribution of a vaccine. We've also got a Tamiflu-like cure for the vaccine. People are less afraid of it. And on the first pretty day in April, every woman in America is going to look in her closet and go, I hate all this stuff. I need new clothes. And it's not just going to be some crummy sweat outfit that they can sit in front of their computer in all day. They're going to go, I don't know, I could be back in the office a couple of days a week. Is this what I want to wear? And you're going to see an explosion of consumer spending on fun fashion stuff like you haven't seen in years. The Roaring 20s will be on us by midsummer at the latest of 2021.
Break out the mini skirts, fringe, and champagne. Jan Rogers-Kniffen.
You got it.
Great to see you. Thanks so much for being with us, CEO of J. Rogers-Kniffen Worldwide. Really appreciate your time today. And we'll see what ends up happening. All right, we'll be right back.
All right, welcome back to Yahoo Finance Live. Let's take a look at where the market's at right now because we have all three majors off more than 1%. Had kind of a sleepy open, but we've seen losses accelerate here just within the last half hour or so. Some negative headlines coming out of that OPEC meeting that is currently underway. That's being cited, at least, sort of as a proximate cause for the stress here in markets. This coming at the same time that we've seen Bitcoin prices hitting a record high. We're going to talk more about that with Jared Blickery coming up right after this. But first, we have some sad news that broke over the weekend to discuss a bit more here. Tony Hsieh, the former CEO of Zappos, passed away over the weekend at 46 years of age, reportedly from complications due to a house fire. And Yahoo Finance editor-in-chief Andy Serwer joins us now to talk about Hsieh's place, Andy, in the e-commerce landscape as we know it today. Zappos was doing a lot of the things that are now what you would call table stakes in the space well before many businesses were doing them. I remember the free returns, the 2-day shipping. I mean, they were at the leading edge of a lot of what is now the minimum expectation to even be in the online sales space.
Yeah, that's right, Miles. And I mean, they said you couldn't sell shoes on the internet, right? Because you needed to try them on and returns were a pain in the neck. But Tony Hsieh proved them wrong. And the reason why that's the case is because he truly was a think different kind of person. He studied computer science at Harvard, but he was the ultimate people person. He was soft-spoken, he was cerebral, and he had tremendous respect from the likes of Jeff Bezos in particular. Jeff Bezos singled him out, bought that company years ago, and kept it autonomous. Very, very unusual. And then Tony also was someone who was very comfortable talking to the press, even though he was soft-spoken and kind of quirky, unlike everyone else at Amazon, right? And so when he moved to Las Vegas, ultimately, and began to do work there and develop the city there, he was really an advocate for that city as well, and someone people look to as kind of a voice of reason when it came to e-commerce, Silicon Valley, and digital commerce, just generally speaking.
And Andy, what's interesting as well is that he wasn't just, friend of Jeff Bezos and sort of titans of the tech community. As I was looking over the weekend, there were so many people posting on social media, particularly tech startup entrepreneurs, right, who had personal relationships with him. So it seems like he had a big effect in that community as well as being sort of an inspiration to other people who were starting companies in tech.
Yeah, I mean, he was an incredibly generous and giving person, Julie. I mean, that was the thing about him. He would spend time talking to anybody, maybe to a fault. Sometimes people could complain, you got to focus on the business. And I remember him saying, but this is the business, people. And, everyone talked about how great the consumer experience was at Zappos and the customer experience and all that. He had an incredible morale machine at Zappos. I mean, that's what he built. The people loved working there because he was such an inspirational leader, not in a get on a soapbox rant kind of way, but just in that he really cared so deeply about people and was willing to listen to their problems and sort of shape the company around understanding understanding how people worked, both customers and employees together, and where they sort of fit together.
And we're seeing just some of this B-roll here about Andy, his involvement with the city of Las Vegas, and perhaps Hsieh a bit ahead of his time as well in viewing cities that aren't often thought of as tech hubs, as places really to be for that industry.
Yeah, and it was so unlikely too, Miles. Like Las Vegas, really? Because he wasn't this flashy, guy who liked to gamble at all. There were some reasons why he liked to be there. I think there was. It was out of the glare of Silicon Valley. Costs were lower. But once he was there, he really embraced the city and did try to, instill change there, and also tried to build it up as a tech hub and did succeed to a degree. And people think about Las Vegas, they think about Tony Hsieh, and, he's a very different kind of person when you think about the usual suspects when it comes to Las Vegas.
All right, Yahoo Finance editor-in-chief Andy Serwer. Andy, thanks so much for joining the program this morning.
Thank you.
All right, we're going to have more coming up here on Yahoo Finance Live in just a couple of minutes. As you see there, bottom right of your screen, Dow, S&P, Nasdaq, all off more than 1%. We'll have more on that in just 2 minutes.
A sharp sell-off in stocks is now underway. The Dow is off 1.25%, the S&P off about 1%, the Nasdaq off 1.2%. We've been trying to figure out what is going on. Jared Blickery is with us now, and it sounds like energy is leading the way downward, Jared.
Yes, it is. And we do have an OPEC meeting that is going on today. Tomorrow is OPEC Plus. That's the big one. That's when Russia joins. And it looks like they are making, or they've said they're going to make a decision tomorrow. And maybe the markets had hoped for a little bit more certainty on the news of whether they're going to extend those production cuts. And if so, for how long? 3 months was discussed today, but they're going to make a decision tomorrow with OPEC Plus in Russia. But we're seeing shares down of Chevron about 2.5%, Exxon down over 3.5%, BP down 4%. But it's been a really big month for oil. You can see BP is still up about 30%. But then when you take a look at the year-to-date chart, it's still down 46%. Well, let's take a look at some of the other sectors right now. Nasdaq 100. Now, we got Apple in the green here for 0.8%, but a lot of red elsewhere. Alphabet and Facebook, those are down about 2%. Amazon, Microsoft, just a little bit less. Even Tesla down 3% right now. And let's just take a look at the EV space. We saw some green there earlier with Tesla, but not anymore. But Nikola is the biggest loser. Nikola is down 25%. And you can see here, still up 103% year to date. But you take a look at what's happened over the last 3 months, down about half of its value. Now, also taking a look at the travel sector here, that's under a bit of pressure. Royal Caribbean down over 3%. Caribbean cruise lines down 5%, and Delta is down about 3%. And then the work from home trade, which had been showing some signs of life a little bit earlier. Zoom had been in the green. It's now down about 1%. See over the last 3 months, still up 56%, but seeing some losses in Twilio, CrowdStrike. So not a lot of havens or safety plays being found right now. Let's take a look at some of our market leaders, and we see a lot of red here, and a lot of these names are sentiment indicators. So the biggest loser here is KWEB. That's a Chinese internet ETF, and even though we did get some really strong PMI numbers from China today, we're seeing Chinese stocks taking quite a hit. Also, XRT, that's a retail ETF, that's down about 2%. That had been a winner this month so far, and then emerging markets. This has been a source of strength as well. Still up 7% for the month, but a little bit of the shine being taken off here. And as we talked about before, it could simply be that we are at the end of the month. We're sitting on some really nice gains. So let's go to the equity indices. S&P 500 over the last month, still up over 10%, 10.3%. You can see we're just off of last week's highs. And in this context, especially taking a look at the 3 months chart, nothing to be worried about at this point, but we don't want to see any kind of big sell-off into the close that takes us below this trend line here. Guys?
We will keep an eye on it to see if things do accelerate. Thank you, Jared. And also should mention, Jared talked about Zoom today. Its action today going down a little bit. Zoom is going to be reporting after the close, and coming up after the break, we will be discussing that stock amongst other headlines. We'll be right back.
All right, welcome back to Yahoo Finance Live. We're about an hour and a half into today's trading session. So let's talk a bit about what's coming up after the closing bell. Brian Sazi, that would be results out of Zoom, a stock that obviously has had a huge 2020, but for the second quarter in a row now facing massive investor expectations.
But not a good month, Miles. Zoom shares, according to Yahoo Finance premium data, down about 3.6% over the past month. Nasdaq up close to 10%. And the bottom line is this: for Zoom, for that stock to get going again, they need to come out and report this evening that revenue growth rate year over year accelerated against the compared to the quarter before that. Also guidance. Zoom has been out here pretty much all year long raising their guidance. They need to do so again to quiet any fears that as the economy opened back up, they didn't lose a lot of smaller end customers, those employees, those workforces under 10 people, which is a very key metric for this business, represented about close to 40% of sales in the prior quarter. But you look through the street, guys, and they still have a lot of confidence. 12 buy ratings on the street on Zoom. Price target remains very, very bullish, mostly because they still see Zoom, the street, the sell side, as a key player in life after the pandemic. They see it particularly important within corporations.
Yeah, I think
Well,
the
we'll
old,
see what happens.
you know,
Sorry, go ahead.
no, I was going to say the new axiom, right? What's bad for Zoom is good for humanity. I'd like to see that come into play more, but unfortunately, I think there's going to be a lot of things that remain
Miles,
positive for Zoom.
That's a good point. That's a good point, because what Zoom reports tonight could have ramifications for all of those work from home stocks. A Peloton, a DocuSign now have to wipe Slack off of that list because they'll probably likely soon be acquired by Salesforce.
That's right.
So sorry.
Again, Monday.
I don't know
Julie.
if we got a
Monday.
delay here, guys. I can't tell what the heck is happening today, what's up and what's down. So I'm just going to talk. Let's talk about Novavax here for a moment. We got the Moderna news today that it was filing for that emergency use authorization. But of course, there are still yet more vaccines that are in various pipelines, potentially being experimented upon. Novavax's developments are not looking as positive. That company's delayed a trial for the second time. And this is just a good reminder that there are a lot of candidates out there. Some are going to make it, some are not. The stock was down. Now it's trading higher again by more than 5%. Novavax is also one of those companies that came under some scrutiny because of insider selling on the parts of executives throughout the course of the year. So that's something to watch as well. So, we'll see what happens with this one and how many vaccines end up eventually coming to market. The stock, by the way, is up more than 3,000% this year. So obviously there is a lot of people banking on them having a successful candidate.
Yeah, Julie, I saw someone mentioning, I think it was last week, that the 2021, polite dinner conversation is going to be, so which one did you get? Which vaccine? Because there will be a few candidates out there, and we certainly hope that several more that are in the pipeline come to fruition as well. All right. Well, for Julie Hyman, Brian Sazi, I'm Miles Udland. That's going to do it for us here in the 9 o'clock hour, 9 to 11 here on Yahoo Finance Live. We'll see you back here 9 o'clock tomorrow morning. Stick with us through the closing bell.
Welcome in to live market coverage here on Yahoo Finance Live today. Happy Monday, everybody. I'm Zach Guzman alongside Akiko Fujita. And right now we do have stocks in the red in this last trading session for the month of November. The Dow off more than 300 points today. The Nasdaq seeing a sell-off at the moment as well. And the S&P currently getting dragged down by the energy sector as OPEC continues its debate over extending production cuts. Despite the losses today, though, the Dow still up by about 12% for the month, on pace for its best monthly performance since January 1987. We'll preview later on in the show what to expect for the month of December with Zoom earnings looming large to set the tone today after the bell. We'll get to that later on. But first, more news on the vaccine front that made November such a standout month as Moderna announces a final readout of more than 94% efficacy for its experimental COVID vaccine, with the company quickly moving to seek emergency use authorization from the FDA. For more on that, let's kick off today's show with Yahoo Finance's Anjali Kamlani, who caught up with Moderna's CEO earlier on today. Anjali?
Thanks, Zach. Yes, so exciting news. Obviously, this makes it the second vaccine that we are seeing apply for emergency use authorization in the U.S., opening the door really for at least 2 vaccine candidates potentially by the end of the year. So, of course, that is something to look forward to, both of them being on mRNA platform, meaning that this technology has now been fully validated with its exceptional efficacy results. Of course, testing in the real world is going to be an entirely different scenario, not knowing how long the vaccine will last its protection, or what individuals may have different reactions, or how protective it is on some of these individuals. But the key thing that really has a lot of experts excited is the 100% efficacy against severe disease. And so while the vaccine does protect, of course, that 94% of the population that got it, the 100% against severe disease, which is that second endpoint, holds a lot of promise for what we're seeing as sort of the key issue, right, which is hospitalizations and the strain that we're seeing right now with more than 93,000 hospitalizations reported across the country. That's something to really be impacted by this. So listen to what CEO Stefan Bancel had to say about that earlier today.
We had 30 cases of severe disease. And of those 30 were on placebo and 0 were on our vaccine. So if you think about what has happened in the country, people getting infected, if they get a severe disease, they end up in the hospital. And if they get a bad case, they end up into the ICU, and the worst case outcome, of course, is death. If you can stop that whole cascade, that is, I believe, a game changer.
As you can hear, and that's really what health experts have said, is that this is one of the key metrics that really helps validate the vaccine itself. Zach?
And Anjali, I thought it was interesting, you talked to him about just how many doses are likely to come to market by the end of the year, but also this question about whether there are enough materials in place. I think he talked about specifically some concerns there about whether all the raw materials will be in fact in place in order to push out the scale or the amount of vaccines that are going to be necessary next year. What do the supply chains look like right now on that front?
So I'm glad you brought up that point. That's actually something that a lot of health officials have been pointing to. When we talk about drug development, when you talk about pills, it's a lot easier to estimate and have accurate numbers about the dosage that is available because the construction of it is very meticulous and it's very predictable. When you're talking about a vaccine, it requires some elements of live, production, and the raw materials that make it up are sometimes it's not exactly an exact science. And so that plays a role in their ability to estimate the doses. And so going off of that, we have heard sort of bits and pieces when it comes to which companies have been doing their part of really ramping up, whether it's for the production or the logistics, where, when it comes to dry ice, that's of course necessary for Pfizer's, or test flights for the airlines that are going to be taking on that role. As it stands right now, they anticipate being able to get all of this material, but of course, at the end of the day, it's just how quickly that can be done in the labs.
All right, Anjali Kamlani bringing us the latest there on the vaccine front. Appreciate that update. As we've been talking about
Of course, that has structurally changed the way investors have been looking at the landscape here in 2021 as we await when those vaccines will actually be rolled out to the public. And let's dig into a little bit more on that front on how investors should be bracing for some of these changes as we look out to 2021 here with our next guest. Stephen Whiteling is Citi Private Bank Global Chief Investment Strategist, and he joins us now as well here. And Stephen, I mean, when we look at this, the expectation here is for rates to remain lower for quite some time. I mean, when you look at that aspect here and think about companies investing not only in their businesses, but perhaps in some technology to boost things as well, we've been talking a lot about this rotation here out of tech, out of growth into value. Where are you seeing things shaking out here in 2021?
Well, 2021 will be markedly different by the end of the year. And for the reasons that you've just mentioned, that if you take a look at 3 or more vaccine providers, we can see 5 billion doses probably globally over the course of the year. If you combine that with the measures on social distancing, we will probably end the pandemic phase of this crisis at mid-year. Now, that doesn't give everyone instant satisfaction over the next few weeks in the economy, but it will majorly change what will be distorted years. Both 2020 and 21 will be distorted years by the coronavirus, but the economy will have a very, very different exit point next year. That there are many severely depressed services industries that can have a pretty remarkable recovery. They can look a lot like services industries in China, where domestic industries are simply not being impacted by a pandemic that has been, because of social restrictions, isolated there. So I would think about 2020 and how many of the things that we've used to cope with coronavirus, the tools that we're using right now to have this video conference, for example, those sorts of things have been boosted tremendously in value. They're not going to suddenly go into disuse, but they're not going to be able to repeat the kind of performance that they have. And we have many industries that are still depressed 35% off, for example, that'll have a very good year next year. So that's why, again, we have, with these very low interest rates, room in portfolios to keep some of the longer term digitization investments, these things that have a very good growth rate, but we're not expecting these to repeat in terms of performance, but start investing in many depressed industries, in real estate, in financials, and energy. These sorts of industries will have a bounce back in the coming year, and that can provide us with some tactical performance.
And on that front, Stephen, you've laid out the mispricing of securities as one key reason why you think investors should act right now. I mean, you pointed to some sectors there, but are there any particular names that you think offer real value right now, especially given the declines they've seen as a result of the pandemic?
Well, I would look at it from a geographic perspective. Out of our overweights in the equity markets, we're still dealing with sectors that are off 13% from their all-time highs. Now, the one component that has already reached an all-time high this year have been US small cap stocks. But if you take a look geographically around the world, we have a lot of other areas that are quite depressed. So, for example, in our latest addition to our asset allocation, we added outside the United States and outside of China, 2 markets that have led the recovery in 2020. If you take a look at Southeast Asia, for example, double-digit declines. If you take a look at Latin America, we were off as much as 50% at the middle of the year. Of course, things are not going well when you're off 50% when you have COVID as a shock. But take a look back at 2009. Latin America rebounded 98% after dropping 55%. So these are the sorts of things that we're looking back as mean reversion trades for the coming year. That these, again, are tactical overweights, but then there are some examples of just longer term growth trends, some that have not performed as well. Healthcare generally, concerns about this election, concerns about pharmaceuticals and regulation in the United States have impacted global pharmaceuticals. And we want to continue to invest in longevity. We want to invest in clean energy. These are things that are not really impacted by COVID that we would still have a strong allocation to.
Yeah, and Stephen, when we think longer term here, I mean, obviously we've been celebrating kind of the remarkable advancements we've had on the vaccine front. That's obviously a positive. Still awaiting whatever kind of fiscal measures might be coming here from Congress to kind of buoy the gap here until we get those vaccines out to the general public. But there have been concerns. Maybe you could point to Bitcoin reaching another all-time high here about what could happen as we get that record stimulus spending here. Are there any concerns for you longer term when you think about how much money is coming out to kind of address the shocks to demand that we've seen here due to the pandemic and what that can do to slow growth over the long term?
Well, look, I think over the medium term, the Federal Reserve will not want tighter financial conditions to get in the way of having a very complete recovery. And so we essentially would call this financial repression, keeping interest rates negative in real terms deep into the recovery. Their expectation is that 2.5 years from now, the unemployment rate will be 4% again, but their policy rate will still be 0. Now, whatever that might do for Bitcoin, I put aside for the moment. But if we take a look at long periods of history prior to the last 40 years, when we had high real interest rates falling now to these low levels over multiple decades, you could go very long periods without earning a real return in fixed income or cash. And so that requires us to have, in more conservative portfolios even, some alternatives. This involves harnessing volatility. It involves investing in more secure dividend-paying companies where you can get twice the global bond yield in equity dividends. And many of these are, in fact, companies that didn't surge in 2020, that were not part of the solution set for COVID, that were actually harmed by it and are likely to rebound in the coming couple of years. So creating a new income portfolio with dividends and other tools are really required here to get past this financial repression. Now, I think, again, the overall issue as to whether this is going to be a long-term harmful effect, I bear in mind that when we had a 100% debt to GDP ratio in 1945, we did bring that down all the way to 25% by 1975. Maybe it doesn't take that long this time, but we did end up inflating away debt burdens over a very long period of time with a sustained negative interest rate.
And Stephen, finally, we've gotten a little more clarity on President-elect Joe Biden's economic team, with Janet Yellen being officially nominated to the post of Treasury Secretary. She has indicated in the past that she believes that additional spending is needed in a more significant way to keep this economic recovery on track. How supportive do you think that's going to be for the markets? How much of that do you think of her policies have actually been priced in?
Well, look, I would say this is a highly practical appointment. This is not a political appointee who has a set of policies aimed away from the broader economy. She will focus very clearly on restoring the American economy to its potential. And, again, one of the skills required of a Treasury Secretary is negotiating with the other side. Now, that's something perhaps we haven't seen Janet Yellen do before. But at least I think markets can take great comfort in her history, her structural ability to act as an economist, the first great economist since Larry Summers in this position. And I think markets are taking great comfort that this is not some project that's off to the side. It's very central to economic recovery. And that's the right kind of appointee for that.
Yeah, a lot of people applauding what she did as Fed chair, and now what she could do as Treasury Secretary. We'll see if she gets that confirmation there. Stephen Whiting, Citi Private Bank Global Chief Investment Strategist. Appreciate you joining us to chat today.
My pleasure.
I want to shift back over to the vaccine front here, as we got that update from Moderna here saying that the final readout showed their vaccine candidate to be more than 94% effective. On that front, of course, there are a lot of questions now about how it should be rolled out as we move closer to that final potential emergency use authorization from the FDA. For more on that, I want to bring on our next guest here, and Dr. Donna Kim Murphy, a physician scientist in Pearland, Texas, as well as Doctors in Politics co-founder. She joins us now. And Dr. Kim Murphy, when we talk about this, it is interesting because it's so close to what we saw in terms of the efficacy from Pfizer's vaccine here as well. But still a lot of questions about how we're going to roll this out to the general public and populations at risk first. So how does that process look to you, and what should we expect if it is to get a passing grade and actually getting out to those who need it?
Yeah, I think the concern that a lot of my physician colleagues have, and I do have as well, is that there has to be public acceptance of the results of these vaccine trials, and we have a little bit of concern about just kind of historic. Uh, I guess, reservations that people have had, right, with a pretty robust anti-vax movement for vaccines in general. So I do think that it will be important to put out a very strong message that these are very well done trials with really promising results with very, very low side effects that we can tell from really pretty extensive studies. So I think it is incumbent upon the people in DC, but also I think all the way down through the health entities that exist within our states and locally within our communities, and physicians themselves who have access to these vaccines for their patients, to be pushing the message that this is something that is safe, it's well tolerated, it will be really, I think, the only hope that we have of life returning to any semblance of normalcy. And I do think it's also important, of course, as you've alluded to, that the people who are at greatest risk have access to that they have access to the vaccine first and foremost. Yeah, and that honestly, I think it's something that will be incumbent upon leadership in this country to ensure that happens.
How are you looking at the process of distributing this vaccine? How prepared do you think hospitals are, clinics are to get, once they get the go ahead, to be able to inoculate at the rate that it needs to be?
That's a very good question. I mean, I feel like the results with like the single dose that vaccine have been so remarkable that simplifies this, right? Rather than being something that is kind of multi-dose where you kind of have attrition and then loss of efficacy, I think it's great that it's a single dose application where they've seen such remarkable results, and that will help a great deal. I do think that we still have some of the I think vulnerabilities that have been exposed by COVID in terms of the lack of coordination between federal, state, and local municipal and county agencies. Those remain problematic and things that we will have to continue to contend with and negotiate. But, you know, I'm hopeful. I am very hopeful. I think there is a lot of public interest and a lot of visibility on this. And I think that with also new leadership in DC that is very scientifically minded, that we will hopefully have a solution that can be rolled out very efficiently across the country.
Yeah, and Doctor, even if it is rolled out efficiently, I mean, we still have to wait, as you said, until Q2 of next year for things to approach a sense of normalcy. Up until that point, though, I mean, you've been pretty outspoken about maintaining the measures that we've heard stressed from Dr. Fauci here in terms of mask wearing, as well as making sure we don't return to mistakes that were made in the past. When you think about reopening too soon, you've talked about that going on in Dallas here over Thanksgiving. We had a Dallas Cowboys game being played. Of course, the indoor stadium, the windows were open there at that game. But still, you've stressed that you can't really turn back to some of these measures, temperature checks, and putting too much confidence in those. What are some of the pitfalls or mistakes that you want to see local officials avoiding here until we get those vaccines to make sure this doesn't get out of control very quickly?
Right. I mean, I do think, I mean, very early on, I actually was worried about the false promises, right, that come with therapies, that come with, I mean, even potentially with a vaccine, although I'm very impressed by the results that we've had with vaccine development, you know, the speed at which with which we've developed the vaccines and the efficacy that they have demonstrated in trials. But, you know, I was worried because the reality is there are many measures that we can undertake that are very simple, right, that are public health preventative measures that I don't think we have emphasized enough, that I think politically we haven't pushed, we haven't modeled for our communities. And yeah, the things that you talk about, right, which is mask wearing, universal mask wearing, social distancing, especially with the holidays upon us. We just came out of Thanksgiving, and we'll see now what the implications are for the number of COVID infections that we have. But we're still in the holiday season, right, where people are really compelled to gather, to be around family and friends. And I think that we have to just continually push this message that there are very simple interventions that we can undertake without a vaccine, because we don't have a vaccine right now, that can be really game changing. And I think this is all we can do right now. And I think we have a deep responsibility to be pushing that message.
Yeah, and making sure that people follow those guidelines that are in place. But Dr. Donna Kim Murphy, appreciate you joining us to chat all that. We'll see what happens here as we await that EUA from the FDA. Thanks again. Before we go to break, want to highlight here the action that we have been seeing play out in Bitcoin, reaching a new all-time high, depending on which service you use to check that price, but currently at about $19,500 here. It will be, if it holds these levels, still the highest monthly end close that we've seen for Bitcoin going back all the way since its creation. So clearly some crypto currency enthusiasts enjoying today's price action there at about that 19.5 level. Akiko?
All right, coming up, we're going to be talking about DoorDash, serving up a $30 billion valuation. We'll bring you the numbers from the delivery app's latest filing as it prepares to go public this month. We'll be right back. Welcome back to Yahoo Finance Live. DoorDash is looking to raise up to $2.8 billion in its IPO, valuing the food delivery app at $30 billion. Those numbers revealed in a new filing today as the company prepares to go on the roadshow or virtual roadshow in anticipation of its public listing later this month. Let's bring in Emily McCormick for the very latest on that front. And Emily, we're talking about a $30 billion valuation, but in their last private funding round, it was $16 billion. So that's roughly double.
That's right, Akiko. And just taking a look at both DoorDash and Airbnb's reported valuations at the time of their IPO in mid-December, both of these companies heading for huge market capitalizations and valuations. So taking a look here at DoorDash, I think it's worth reiterating some of those numbers that you just laid out, because that company said in a filing this morning that it's planning to sell 33 million shares for between $75 and $85 a piece. Now, that means that the company would be raising as much as $2.8 billion for a fully diluted valuation of north of 30 billion. And as you noted, that would be about double the private valuation that the company had fetched earlier on. Now, taking a look here at Airbnb, also worth noting what that company is reportedly targeting. That company reportedly targeting valuation of between 30 billion and 33 billion, also based on a fully diluted share count once that company kicks off its roadshow tomorrow. And those numbers were first reported by the Wall Street Journal. Now, it's likely that Airbnb's eventual valuation after its IPO will be greater than the 18 billion it was reportedly valued at after a debt financing round back in April. Now, that company still hasn't disclosed how many shares it will be offering or at what price, and there's still no date yet set reported for that IPO, although it is expected to take place around mid-December, about the same time as DoorDash's IPO. Now, a big difference here between these two companies is the fact, though, that DoorDash has been a beneficiary of the stay-in-place orders we've seen during the pandemic, while Airbnb has actually suffered as a result of these. Just taking a look at these two companies' prospectus, and you really see the discrepancy here in performance. We saw DoorDash tripling its sales to $1.9 billion in the first 9 months of this year compared to last year, while Airbnb, on the other hand, saw revenues drop 32% to $2.5 billion over that same time period. Now, again, neither of these companies are actually profitable yet, as has been typical of many of these newly public big tech companies. But at the same time, should be noted that DoorDash did narrow its net loss over last year, while Airbnb's did widen. So it will be interesting to see these two very different companies go public in the next month, Akiko.
Yeah, and Emily, let me just chime in here too, because Akiko and I are going to be diving into our own personal takes on some of these companies later on, particularly DoorDash. But when it comes to DoorDash, I mean, I know you covered Lyft's IPO when we did that last year, and you think about the step up here, as Akiko was mentioning, kind of seeing a double in the valuation between the private and public markets. Lyft saw that same thing here. If we see it in DoorDash, I mean, it is a company that has enjoyed quite the rally, as you said, and 200% growth in their sales because of this pandemic. But when you think about the demand for these shares at the IPO, how big does that loom for people looking into a company like this when they could potentially see a slowdown next year if we return to normal and people start eating back out at restaurants?
It's a good question, Zach. And as we saw in DoorDash's prospectus, one of the things that the company reported is that it was actually profitable for one quarter in the second quarter, even though it did post an overall net loss for that first 9 months in September. So that really speaks to, as you were mentioning, the boost that the company got temporarily from that increased demand due to the pandemic, and then the fact that that did revert a bit back in the third quarter. But if we take a look at what some of these companies have been doing overall in the food delivery space, of course, we had Uber taking up Postmates in that massive merger and acquisition. And it just really speaks here to the growth opportunity that many of these companies actually see in this space. Think about Uber itself posting its actual gross, the gross revenue that's actually receiving, and those gross bookings rather from the Uber Eats side of the business actually outpacing those of rides. It really speaks to the factor that there is this massive growth opportunity and the potential here for some of this to actually last even as stay-in-place orders start to lift. So potentially something to see here in the dynamic with DoorDash.
Yeah, the company already pricing above what a lot of people had been expecting. We'll see if they potentially could see a bigger boost as we get closer to the official listing. But Emily McCormick, appreciate that. We're going to take another quick break here on Yahoo Finance Live. But when we return, digging into a lot of those pandemic shifted trends here, potentially, again, a record Cyber Monday after Black Friday seeing a big boost as well. We'll check in with one giant sneaker platform to see what they saw over the weekend, as well as the early results here on Cyber Monday. Stay with us. We'll have all that on the other side of the break. Welcome back to Yahoo Finance Live, and happy Cyber Monday, ladies and gents. That, of course, is the tradition here following Black Friday. It's been record after record when we think about e-commerce shopping here in this pandemic in 2020. A lot of question marks around what that's done for Black Friday demand as well as Cyber Monday demand. So let's check in on that with the founder of the sneaker-focused and Andreessen Horowitz-backed online shop GOAT. The co-founder here and CEO Eddie Liu joins us here alongside Yahoo Finance's Reggie Wade here too. And Eddie, you have 30 million global members here on the platform, more than 600,000 sellers on GOAT. And we've been talking about how e-commerce has been historically record-setting here, very strong on a tear, even before we got to Black Friday and Cyber Monday here. So what have you seen this shopping season, and how strong demand's been on your platform?
Hey, Zach, definitely happy Cyber Monday to you as well. I mean, Black Friday really kickstarts our holiday season, and this year has been no different in terms of the size and how big it's been as consumers shift more online. I mean, our Black Friday, every single year, the GOAT Black Friday is the event, the sneaker event of the holiday season. This year was no different. It started in 2015 when we launched the Black Friday promotion that put us on the map and crashed our servers. So every single year we try to make it bigger and better. And this year, 8 days of hosted trivia to give thanks to the community. We had hosts such as Saweetie, Kyle Kuzma, ASAP Nast, and we gave away prizes, tens of thousands of prizes, from GOAT credit all the way to a Ferrari Testarossa. So I hope you entered and earned some prizes. But what we saw was 2 billion tickets entered into our raffle. That's B, billion with a B. And we've seen that the consumer is stronger than ever, and they're just excited to get special and unique gifts and presents such as sneakers and sneakers apparel.
Eddie, Reggie Wade here. Unfortunately, I didn't win the Ferrari, but I wanted to know, everyone talks about Yeezys, the Jordans. Those are usually the top sellers of the holiday season. I wanted to know, what are some of your sleeper picks? What are some of the shoes that the mainstream consumer really doesn't pay attention, but a lot of sneakerheads are flocking to go to try to get?
You know, collaborations are an increasingly important part of the sneaker ecosystem. You have Travis Scott, for example, collaborating on his dunks. You have even Ben & Jerry with the Chunky Dunky dunks. And then you have Sacai with the Nike waffle trainer. So I really think collaborations are big. And some of the dunks I've mentioned, I've been increasingly wearing dunks throughout this year, and I've seen a lot more people wearing dunks. But like you mentioned, this year is definitely the year of the Jordan. You had the documentary that really boosted sales. I mean, 76% increase week over week in Jordan sales when the documentary aired. And then you have the holiday season with Jordans. You have the Jordan Fire Reds that launched on Saturday. And of course, Jordan every single year launches a new Jordan 11. This year is no different. And it's actually the 25th anniversary of the Jordan 11. So they have a special 25th anniversary Jordan 11 sneaker this year.
Eddie, no question, there's a lot of sellers out there who are looking to maybe get a little extra cash, especially in a year like this year. What does the demand look like on the sell side right now?
What's great about a marketplace like GOAT is that we really service both sellers and buyers really well. And on the seller side, what we've seen is that because the sneaker economy has grown so big, I mean, in 2015, we were estimated at $1 billion total addressable market for the sneaker economy. But because GOAT's really leveled the playing field, the sneaker economy has grown to 10 billion and to 30 billion over the next few years. That's really helped out sellers in getting liquidity for their sneakers. And as the market grows, our seller base increases and they get a lot more liquidity through GOAT.
Eddie, in 2018, GOAT Group, you guys merged with Flight Club to have that brick and mortar retail experience. How is that going amid the pandemic? And are you looking to expand the number of Flight Clubs in different cities once we get to the other side of this?
Of course, retail right now is a little challenged and our Flight Club stores are still closed. But what we see is that destination retail is still so important. I mean, you walk into a Flight Club, it's a completely different experience than walking into a traditional sneaker retailer. You actually see the iconic shoes, thousands of shoes in our grail walls, in our grail cases that you would never see at a traditional sneaker store, because a sneaker store might have 200 shoes on the wall and it's only this year's styles, rather than, you know, you see the 1985 Jordans, you see the Yeezy samples, you see a bunch of sneakers, and it's become a sneaker mecca. And we do think destination retail is here to stay. So we will expand Flight Club in terms of the retail side of things. But even online, now that Flight Club stores are closed, we've seen a dramatic shift in terms of web sales on Flight Club, and sales have increased over 100% on Flight Club year over year alone.
Eddie, one other question here that I had, just because we've heard reports, you look at a few of the channel checks and you think about how Black Friday has been. BMO Capital Markets said that there were fewer discounts, which could be a boost to profits. You're talking about a lot of the creative things that you guys have been doing on Go to get people excited to shop there. Have you seen less of a need to maybe cut prices here just because of the demand on shopping online, the way that that's gone? What is your, I guess, take on what we're hearing from them?
Well, for us, Black Friday isn't really a transactional day for us. Of course, we do a lot of volume that day, but like I mentioned earlier, Zach, it's about giving thanks to the community. So we want to give value to our customers, and it wasn't a, hey, let's discount less because of certain factors, external factors. For us, it's we want to say thanks to our community and educate our community as we lead with a point of view on fashion, culture, and style. So for us, it's not less of a transaction, more of a celebration. And that's why we gave away a Supreme drum set, a Ferrari Testarossa, and $100,000 in Go credit. So our discounts and our values and our deals have stayed the same throughout this.
Eddie Liu, CEO of and co-founder of Go. It's good to talk to you. Appreciate your time today.
Thanks so much.
Coming up, shares of Slack hitting a new high in the session, surging on those reports. It is inching closer to that merger with Salesforce. Jared Blickery is going to walk us through the numbers on the other side of the break. We'll be right back. Welcome back to Yahoo Finance Live. Just 2 hours, just over 2 hours into the trading day, and we are seeing a sell-off on the Dow now, down more than 400 points. So the S&P 500 down 36, and the Nasdaq down 91. One of the stocks we're watching closely this morning, Slack and Salesforce. Slack is getting a big pop, up more than 4% on reports that it is close to a merger with Salesforce. Jared Blickery is following that along with all the market action for us today. Jared.
That's right, Akiko. And this is building on the news from last week. More speculation about the deal that it could close, or at least be announced to be closed tomorrow after the bell. And it could put a $30 billion, well, almost a $30 billion valuation on Slack Technologies. You can see on the Wi-Fi Interactive, the stock is up 65% now, most of that coming within the last week or two since that announcement was first leaked. Well, let's take a look at what else is moving here. And we happen to be in the work from home lockdown heat map. So we also seeing some strength from Shopify as well as Electronic Arts. Shopify up about 4% here. Well, we got to take a look at the energy sector because that's really what's been driving the market and to the downside. That's some news out of OPEC Plus. The latest is that there's going to be a decision tomorrow, but Saudi Arabia just made an announcement that they're withdrawing from a key ministerial conference as co-chair that they host with Russia. So that's throwing some doubts into whether or not those production cuts will be extended into next year, possibly throughout the first quarter. But seeing Chevron down about 3%, Exxon up 4% here, crude oil finding some support around 44.50, but underwater about 1.3%. Guys?
Yeah, Jared, energy been the laggard pretty much all day on the S&P, but appreciate the update there. We're going to take another quick break here on Yahoo Finance Live. When we return, the problems facing the NFL as the nation battles another spike here in coronavirus cases, what that's doing to their schedule and why it could be a shaky and shakier setup for the Super Bowl next year. We'll chat that on the other side. Stay with us. Welcome back to Yahoo Finance Live. The NFL is continuing to grapple with COVID-19 scheduling issues. Not only was the Steelers-Ravens game postponed to Tuesday, but the Broncos had to resort to a practice squad wide receiver as their quarterback to face off against the Saints after protocols DQ'd their entire quarterback options. They even moved to try and put a coach in there as well when they couldn't get the game rescheduled there. So join us now for more on how those issues could impact the remainder of the NFL season as Yahoo Sports reporter here in Charles Robinson joins us right now. Charles, it's good to have you back on here, man. When we were talking about this last time, obviously it was just kind of the beginning of seeing more teams. There have been some that have struggled with this so far this season, but now it seems like a widespread issue with games getting rescheduled left and right here. So how do you see this shaping up as we approach the playoffs?
Well, the NFL's on a brink now. I mean, the Baltimore Ravens have had the longest spate of continued infection that the league has seen this year. It's now 8 straight days, or at least it was 8 straight days through the weekend that the Ravens had new infections every single day, to the point where you're now looking at a COVID list that has had 20 players on it in that rolling period. And for the NFL, that's the biggest concern at this stage. When you talk about potentially pushing a week postponing a week for everybody and pushing everything a week back into January, and then the Super Bowl obviously a week. It's all about whether or not the teams can take the field safely. And the NFL made a pretty unambiguous gesture with the Denver Broncos. Now the Broncos, obviously, Kendall Hinton, practice squad wide receiver, ends up playing quarterback for the Broncos this weekend against the Saints, after the Broncos had some contact tracing that showed that, look, basically the entire quarterback room could have been infected after one quarterback came back positive. Essentially what the NFL did was they looked at the Broncos and said, look, you're at a competitive disadvantage, but it's not a safety issue. It's a competitive issue, and that's on you. It's on you to keep your team safe, healthy, make sure mask protocols are being followed. And if you don't do that and it becomes a competitive issue, we're not stepping in and bumping the schedule for you and, really changing up the matrix of how the rest of this season is supposed to operate. Now, the Ravens right now, that's a completely different situation. They tried to take the practice field Monday morning. The NFL put the brakes on that, said we need to push it back at least to later afternoon on Monday to see if they can get some additional testing figures back. The Ravens have shown for the first time there is a serious and significant safety issue potentially brewing. And I would say that Tuesday game is the closest with the Steelers, that Tuesday game between the Ravens and the Steelers. That's as close as we've come to seeing the NFL bump a game and extend the season by one entire week.
And Charles, the league can say they're doing everything they can to make sure it's safe. The individual teams can be doing things, but then you've got an issue like Santa Clara County where the Niners play. Right. Essentially, the county saying, I don't care what you say. There will be no sports being played or gatherings through December 21st. So then what happens for the NFL? I mean, at one point, do they start to run out of options?
Yeah, well, that obviously is different. The NFL, as you said, the Santa Clara County has said no contact sports for a period of at least 3 weeks. Now, that's going to impact 2 49ers home games, obviously, because Levi Stadium is right in the center of that county. And the NFL in that scenario, there had been some talk entering the season. Like, look, if this happens where a state locality or a local government body, be it a county, decides that, look, we're not going to let people get into a stadium, or we're not going to allow sports to continue within our county, there's going to have to be an adjustment. In some sense, the NFL has prepared for this. Now, the mobilization that's taking place right now is just trying to find a place for the 49ers to play, whether that's in Las Vegas. They're looking at potentially other stadiums in California, something nearby where the 49ers wouldn't have to travel monumentally far to get a game that takes place. But this is part of what the NFL ownership groups were warned about when the season began, that, hey, there's not going to be a fair and balanced season. There are going to be some situations in some states that aren't going to occur in others, like Florida. All those states were going to have an advantage over California because Florida has been a wide open state when it's come to COVID protocols, both on a local level and a statewide level, whereas California has been much more locked down. So I think the 49ers, the Rams, the Chargers have all known there's a possibility that at some point we could have home games bumped to a different locality. They're not happy about it, but this is what everyone went into this scenario with their eyes wide open, and the NFL is just trying to help the 49ers adjust the best they can.
Yeah, and Charles, that Florida point you raised there might be a boost for having the Super Bowl there at Raymond James Stadium in 2021, but it doesn't address those concerns about players or potentially the game with those players getting postponed as well. Not to force a business angle, but we've talked a lot about advertisers and how big of an issue that would be if this continues as we approach playoffs and the Super Bowl as well. But Charles Robinson, Yahoo Sports reporter, appreciate you coming on today to chat that with us. We've been talking a lot today about Black Friday and Cyber Monday, but let's not overlook the day that's known as Turkey Wednesday, looking at a lot of those last-minute trips to the grocery store for Americans out there that had prepped for Thanksgiving here, showing a bit of a downtick in some of those store visits. And joining us now to break through that data with us is Yahoo Finance's Alexander Canal, who has the latest on that. Ali?
Yeah, so Turkey Wednesday, that day before Thanksgiving, usually a very hectic grocery shopping day as consumers flock to stores to try and get their last minute holiday fixings. No surprise that this year foot traffic was down across major retailers on Grocery Wednesday. And that's according to data compiled by Placer.ai. But what that data also shows us is that the COVID consumer is a lot more prepared this time around than usual. So let's dig into the specifics about what this means. So according to the data, Placer.ai dug into foot traffic patterns at major retailers like Wegmans, Publix, Kroger, and what they saw is that across the board, traffic was down nearly 20% on Turkey Wednesday. However, that Monday and Tuesday before Thanksgiving, traffic on average was actually up 2%. And then if we break that down further by specific chains, you'll see that Kroger and Publix saw visits up 4.1% and 1.4% respectively on those days, whereas Wegmans saw a mega swing from visits down over 29% year over year on Turkey Wednesday to down just 4.1% the Monday and Tuesday before Thanksgiving. So what this tells us is that the consumer is more prepared this time around. There's a lot of stockpiling going on. So folks are going to the store less, they're buying more food in bulk. I think no one wants to go back to those times back in March where there was a mad rush to the grocery store, especially as COVID-19 cases continue to see an uptick. I think there's certainly a lot of fear that we could have another statewide, nationwide lockdown, and everyone wants to avoid that. Placer.ai data does support that theory because in the weeks leading up to Thanksgiving, there was pretty steady increased traffic, which just shows that consumers are well prepared for their shopping. And what does this mean for the big grocery chains? It means that they can't really rely on a singular shopping day or a big spike. They have to be okay with a distribution of days when it comes to foot traffic specifically and be prepared for that as the consumer has now changed due to COVID.
Yeah, Allie, I have to say I was really surprised at how well stocked the shelves were the day before Thanksgiving. I was out doing some last minute shopping there, but to your point, it may speak to some changes in shopping habits as well, although also smaller family gatherings as a result. Thanks so much for that. We're off for another break, but coming up, shares of Nikola plunging in this session, the wheels falling off of that deal with General Motors. We'll discuss after the break. shares of Nikola plunging in this session. That stock is now down about 24% right now after General Motors said it's giving up its equity stake in the electric car startup. Let's bring in Jared Blickery for the very latest on that story. And Jared, it feels like the hits just keep coming for the company.
Yes, they do. And if we're looking at the Wi-Fi Interactive right now, you can see in the month to date for November ending today that they are still up 16%, but considerably off of their highs. And the news particularly bad right now because the stock shot up 40% when the announcement was made because it looked like there would be some kind of a deal, and there is, but it's only to license and buy the fuel cell technology of GM. So guess what? There's no GM investment in Nikola stock. There's no EV credits for GM. There's no Badger that's going to be made with GM. And Dan Ives of Wedbush is saying Nikola's GM pact is, quote, nothing to write home about. So we're seeing that stock under pressure here, but a lot of the others too. These have been high-flying stocks during the month of November here. So if we look at month to date, you can still see a lot of these stocks sitting on some nice gains. IRO is up 204%, XPeng up over 200%. And let's take a look at Tesla here because that is up over 52%. And now we know it's joining the S&P 500 in a few weeks later in December, but the decision, because it's such a huge company, are they going to do it over one day as is typical or two? It's $550 billion. So interesting development there. Well, let's just take a look at the cannabis space real quickly as well, because we're seeing some nice gains for the month and also today. We're seeing Aurora Cannabis up 6%, Tilray's up 5%, guys.
All right, thanks so much for that, Jared. We've got much more coming up here on Yahoo Finance Live. We're going to take a quick break and we'll be right back. Welcome to Yahoo Finance Live. It is noon here in New York City. I'm Akiko Fujita along with Zach Guzman on this Monday, where we are seeing a sell-off in the session here. The Dow down nearly 400 points right now. The Nasdaq down 74 and the S&P 500 down 33. The Dow down, although it is still on track for its best month since 1987. And you know, we've gotten some positive news on the vaccine front. That's certainly not lifting the market, at least today. But Moderna is getting a pop in the session after announcing it will file for emergency use authorization of its coronavirus vaccine, with those vaccines expected to come to market later this month. Also, M&A activity heating up. S&P Global announcing its acquisition of IHS Markit, and Slack getting a bump in the session in a big way on reports. Salesforce is getting closer to finalizing the acquisition of the messaging platform. But let's begin with the broader markets today. We've got Kevin Simpson. He is CIO and founder of Capital Wealth Planning. And Kevin, it's good to talk to you on this Monday. Just give me a sense of your what you're seeing in the markets today, down about 400 points, but after seeing such a significant run up, what do you think is contributing to the sell-off today?
Yeah, Kiko, I think you're hitting it right on the head. We're on the cusp of one of the greatest months that we've seen since 1987, maybe one of the top 2 months we've seen here in 2020. So after a holiday shortened week, we saw a little bit of light trading pull back on Friday. I think it's very normal to see some type of pullback here as well. But 30,000 on the Dow last week was incredibly exciting. We see more highs in the future in the months and years to come. And as we sit here on Cyber Monday, I think the only thing we have to do is look at the major retailers to see how strong the market has been. Amazon, Walmart, Target, Home Depot, Lowe's. These are all companies that have done amazingly well during the shutdown. And the exciting thing about them is that they can be just as optimistic, just as robust in a reopening economy, because these are the companies that I think can do well in both a shutdown as well as a reopening.
Yeah, and Kevin, I mean, we've been hearing a lot of the same things that we heard back in March when we were talking about, this kind of break between the stock market, Wall Street, Main Street, where things are at on that front. You talk a lot about those big box retailers. They've enjoyed the luxury of staying open in a lot of these places, even in those communities that did see lockdowns, because they're deemed essential. But when we talk about some of those other things Americans might be spending on, restaurants, maybe not enjoying in the same categorization there. So talk to me about what you're expecting to see here as this lockdown kind of period, or the stressing of limits on going out, restrictions on outdoor dining, on community events there. What does that do for the underlying consumer here and confidence on that front as we approach 2021?
Yeah, Zach, it's almost like the storm before the calm, right? We have this great news from Moderna this morning, Pfizer last week. Everyone's anxious to see this vaccine be successful and readily available. But the problem is we've got to get there. So we don't have a Wall Street problem. Wall Street's put the COVID-19 in its rearview mirror, and it's looking ahead at 2021, 2022. The problem is that Main Street doesn't have that luxury. There is a Main Street problem, and no matter what anyone tells us, we need another round of stimulus to help the U.S. consumer, the small business owner, to help Main Street to bridge that gap from here to the vaccine. And whether it's 1 trillion or 3 trillion, I think what we need is something. The sooner the better. And if we can get to that point, if we can bridge that hurdle, then I think the sky's the limit for the economy.
I mean, that may be a problem for Main Street now, but doesn't that ultimately seep into Wall Street? If you look at, for example, even retail, you pointed to a very strong Black Friday online, but foot traffic was down in the physical stores. And this comes at a time when retailers are really trying to find that right mix. Certainly the big names like the Amazons and the Walmarts are doing quite well, but how big of a concern that this kind of seeps down into some of these other businesses and we just see the big ones survive and the other ones sort of left behind?
Yeah, Kiko, it's a tremendous concern, and it's a reality. You know, we're so hyper-focused on the reopening. We're so excited about the prospects of the vaccine, and by all rights, we should be. But this Main Street problem is real, and it's almost as if it's been maybe somewhat ignored by politicians as of late. And I realize we had a pretty big election in November that maybe took precedence over certain things. But the fact that these cases are rising on such a rapid pace is concerning. And, you know, we can say that the whole economy is on the shoulders of the U.S. consumer, and I think in large part it is. But eventually, exactly like you've suggested, if the consumer can't support it through this period of time, we're going to see that affect Wall Street for sure. And we came into the COVID-19 with a strong economy. By all rights, we can get out of it with an even stronger economy. But for those small businesses, for those restaurateurs, for all those places that every town we all enjoy so much, for them to get to the summer is a challenge. And I think the only real way we can expect that to happen is through a stimulus package. And I'm hopeful that will happen.
And Kevin, until we get there are a lot of questions about what the short term might look like for some of these companies that have enjoyed, the lockdown measures. We were talking about Zoom; they're going to be reporting after the bell. How do you see that trade-off here? Is it as clear as once we return to normal, all of these work from home companies are going to be hit for a while here, or are you seeing projecting some of the strength to continue there?
Well, Zach, I love how you said return to normal and not a new normal. And I think normal can be different. It can be changed. It's not an either or scenario. We've all been so accustomed now to working remotely. I think for folks that work in urban areas that have long commutes of in excess of an hour, maybe the reality moving forward is that instead of taking that commute 5 or 6 days a week, you do it 3 or 4 days a week. And I think that allows for all of these shutdown stocks. You mentioned Zoom as one that should continue to flourish forever in a changed normal. Hopefully, we're not dependent on it in its exclusivity because we want to get back to work. We want to be in person. We want to be interacting for sure. But maybe that new normal allows us to have a little flexibility, and I think that can improve productivity. So I think that's a great thing moving forward. It's not that the world's going to go from growth to value when things reopen. I think there's a terrific balance and an opportunity to invest in great companies, both in growth and in value.
And Kevin, we're well off the 30,000 level that we saw the Dow hit last week, but it sounds like you think there are there's more upside going into 2021. What do you think is going to be the catalyst for that? Can the vaccine news alone continue to lift it to new highs if the reality that's happening in the meantime is certainly not good, especially as it relates to the pandemic?
No, it can't. The vaccine news is great, and we've gotten this November surge as a result of it. We need the vaccine not just to exist, but to be widely distributed, and to be widely distributed sooner rather than later. So many pundits are talking about winter is coming and the analogies to the Game of Thrones, but it's not a joke or a far-fetched bad analogy. I mean, winter is coming. We had Thanksgiving, we've got the December holidays and the New Year holidays. We're all pent up with this kind of COVID fatigue, and the more we get together and the more this virus spreads between now and then, it's terribly problematic. So I think if we all do our part, not to sound like a cheerleader, but I mean, taking these precautions that we've done for so long, if we can do them for another 2 or 3 more months, getting this vaccine out there will be a tremendous boost to this economy and to the stock market. But until we start to see how it can be distributed and to see the effectiveness, I think a lot of the ammunition has been used up in terms of the vaccine enthusiasm. Now we need to see the vaccine reality.
Kevin Simpson, Capital Wealth Planning CIO and founder. It's good to talk to you today. Appreciate your time.
Thanks, Akiko.
Let's turn our attention to the vaccine front because we are seeing shares of Moderna hitting a new high in this session today, up about 17% on that news from the company that they will in fact move forward with filing or applying for that emergency use authorization for their vaccine. Let's bring in Anjali Kamlani, who spoke with Moderna CEO earlier this morning. Anjali, where do things stand right now in terms of all of vaccines? It seems like we've been talking about Pfizer, Moderna, AstraZeneca. Kind of break that all down for us in terms of the timeline and then the efficacy.
Happy to, Akiko. So we know that today we got the news from Moderna about its 94% efficacy of its vaccine, broadly speaking. And then, of course, that breakout of looking at whether or not its vaccine can prevent severe cases of COVID-19, which, of course, is really relevant right now as we're talking about getting into these next few weeks and the fallout from what could be surges post-Thanksgiving. We already see record numbers of hospitalizations, more than 93,000 just today. In total today, so looking across the country. And so what that means is that really this vaccine and the vaccines that we've seen in development hold some promise. Novavax also out with some news today of fully enrolling in its phase 3 trial in the UK, but still stuck in the US, saying though, however, that it will be enrolling and starting its phase 3 in the coming weeks. That, of course, is a little bit of a delay from its mid-October initial deadline there. Now, we also know that Pfizer has already applied for its emergency use authorization, so Moderna is joining it today, and those two will see their applications discussed at an FDA meeting in the next month, and that is going to be on December 10th and December 17th, going along with those week apart days that we've seen, of course, with their filings and with their data. They're sort of neck and neck with a week-long interval so far. AstraZeneca, of course, we saw some positive news there, but still some concerns about its vaccine among health experts and what the data really actually means. It did come in a little bit less efficacious, and we found out that an error resulted in certain doses and certain dosaging being higher in terms of efficacy. But of course, this all boils down to just what happens in the clinical trials, and health experts warn we do have to keep watch of how all of them do out in the real world. Akiko?
Okay, thanks so much for bringing us that update, Anjali. We did see long lines stretched outside clinics across the country this weekend as Americans rushed to get tested ahead of family gatherings, some traveling as well. More than 134,000 new cases of the coronavirus reported on Sunday alone, and that is a 9% jump from a week ago. Let's bring in Dwight Egan. He is the CEO of Co-Diagnostics. And Dwight, we can speak more about your company's efforts on the testing front, but I just want to get your thoughts on what we saw play out over the last week or so. I mean, it's striking to me that 8 months into the pandemic, we are still seeing these very long lines outside clinics, those who are waiting for testing to be done. How much of this you think is a supply issue? How much of this is just about staffing and the demand with the latest surge?
I think generally speaking, there's plenty of supply out there. I know we had a very robust November in terms of sales of our tests. So I think the testing capacity is very large, and I think it will continue to be large as we go through these next several months. We have we're as excited as anybody is about efficacious and safe vaccines, but it's important to understand that vaccination by itself does not obviate the need for tests. We have a situation here where even if you're vaccinated, a certain number of people who are vaccinated are also going to get the disease. And also, there's going to be a phenomenon where you have the cold and you have the flu, and you have 1 billion cases of the cold and a whole bunch of flu. Last year, up to 56 million, notwithstanding the fact that we had very sophisticated flu vaccination going on in the United States. We vaccinated 45% of all the adults and 63% of all the kids last year, and we still had 56 million cases of the flu, according to the CDC, up to that number. So the fact that we have vaccinations coming online does not mean that we're going to have no cases of COVID, and it doesn't mean we're going to have no need for tests. The test requirements are going to be intense, notwithstanding we have a vaccine. And well, Kevin mentioned, your last guest, the issue with respect to vaccination reality, and we'll see how that all plays out. We hope it'll be safe and effective, but we do have a situation where, notwithstanding heavy vaccination, testing is going to be required in a very robust environment.
Dwight, it's good to be chatting with you again here. I mean, we've been talking about how big of a boost this has been for your company, the stock up more than 1,000% year to date. You just look at your guys' quarterly revenue. You reported that a couple weeks ago here, 21.8 million for the quarter. You think about how big this pandemic has been in terms of not just what Akiko's been talking about in terms of demand for testing, but for you guys as a company, 21.8 million in quarterly revenue versus 1.5 when this was really just kind of getting started here. It's been a huge year for you guys, but as you're kind of getting at there, obviously a bit of that demand is going to be petering out once we get past this vaccine rolling out. So where do you see kind of your guys' ability to maintain kind of your name in testing beyond coronavirus and getting back to what you're raising there in terms of the need for influenza for some of these other diseases as well?
Yeah. Hi, Zach. It's good to see you again. Our company has been very forward thinking with respect to the whole COVID phenomenon. During this year, we have engineered and received regulatory clearance at various levels for 5 different tests associated with COVID, including 2 with our India joint venture, CoSara. So we've been very adaptive, and we've been able to pivot and look at what is needed down the road. That's why we did our ABC test, which of course tests simultaneously for flu A, flu B, and COVID. That was something we put in motion many, many months ago so that we began shipping it at the first part of October. We have also looked forward to the next phase of this, which involves being able to take a test into a point of care environment. We have got a technology that we've been working on for many months, which is now getting ready to be validated, which has to do with our Saliva Direct technology. This enables us to actually test a patient for COVID-19 and for flu and for other pathogens down the road, such as sexually transmitted diseases or strep, for example, and to do it without having to have an extraction step when we do the PCR. So we end up with a test that is fast, cheap, and it's accessible, and it's accurate. Everybody wants three things from a COVID test, Zach and Akiko. They want something that's cheap, fast, and accurate. There is no test right now on the market that does all of those three value propositions simultaneously. We're going to deliver all three of those propositions, as well as accessibility at home, at a business, at schools. And all of this, of course, is FDA willing. But we have got a very cool technology that's coming out in a point of care platform that will enable us to play a critical role ongoing. We don't really think of this as COVID-19 anymore. We think of it as COVID-20, COVID-21, and where we're taking it into the future. And these new technologies that we've been able to work on, because we've been adaptive and forward-thinking, are going to give us, I think, a durable position ongoing in the testing market worldwide. We've also been very responsive to what's going on around the world, not just the United States, as evidenced by our recent introduction of our multi-gene test that is preferred by certain foreign countries in terms of the targets that you test for COVID-19.
Dwight, when you talk about that co-primer technology, how do you think that changes the way we respond to COVID-19? I mean, to your point right now, we are still, I think all of us have become accustomed to going through those uncomfortable swabs, but it sounds like you're talking about something that is much quicker, also much more cost effective. How does that change the way we respond, the strategy itself? Schools, for example, will they be allowed to remain open as a result of it? I mean, can you talk a bit about that, how that's likely to lead to an evolution of how we respond?
Yeah, well, it's like Dr. Fauci said yesterday on one of the networks. He said that he'd like to see this type of testing available sooner rather than later. And he's talking about rapid, sensitive, specific home testing, for example, and one that you wouldn't even need a prescription for. Now, we've been in the vanguard of testing utilizing saliva, for example, with some of our customer partners, such as Clinical Reference Lab out of Lenexa, Kansas. The tests are being done now with just a saliva sample as opposed to a nasopharyngeal or even a nasal swab. Tests are being done in an environment that can be done at a home where you don't have to have a prescription, where you simply go online and order a test. But we're taking it even further than that with the new generation of products that we have in mind for the coming months, as soon as we can get them on the market. And it's going to be a situation where they're fast, they're inexpensive. Now, we've always been in the leadership area from an expensive standpoint. We've been the price leader on the low side, so we expect to continue that. But we're also going to be able to make it accessible and put it into these other places. Every business ought to have a point of care device where they can test their employees. Every school ought to have them, and hopefully we can get it down to your bathroom counter.
Yeah, much more on that idea of not just a return to normal, but the new normal here as we move forward past the pandemic. Dwight Egan, the CEO of Co-Diagnostics, appreciate you taking the time to join us today. We're going to take a quick break here on Yahoo Finance Live. When we return, breaking down some key economic picks from President-elect Biden. We'll chat who he's putting into those key positions and their chances of confirmation right after this. Well, President-elect Joe Biden has been busy naming people to some key positions. Over the weekend, we got some updates in terms of the all-female senior communications team he's put together with Jen Psaki as press secretary. But now President-elect Joe Biden also naming some key economic picks as well. His administration announcing that he's picked Neera Tanden, the current head of the center-left think tank Center for American Progress, to serve as director of the Office of Management and Budget. He's also tapped Princeton economist Cecilia Rouse as chair of the Council of Economic Advisors. Keep in mind that first one's going to require some confirmation here, as well as, of course, Treasury Secretary, the pick there in Janet Yellen, also going to require that confirmation process. So join us now for more on what that will look like is Yahoo Finance's Rick Newman. And Rick, I mean, some of these seem safe, other ones maybe not so much, but what are you making of the pick so far?
Right. So Biden announced three well-known economists for the Council of Economic Advisors. You mentioned Cecilia Rouse, also Jared Bernstein, and a third person, Heather Boucher. So two women and one guy. That's a three-person panel. They're all well-known center-left economists, and they do not have to be confirmed by the Senate. So they're just going to take those jobs. For people wondering, what does the Council of Economic Advisors do anyway? They do a lot of the technical work in the White House of forecasting and analyzing, and they produce this thing every year called the Economic Report of the President. Neera Tanden for the Office of Management and Budget is going to be more controversial. She would need confirmed, and there's a lot of scuttlebutt in the aftermath of this announcement that she's going to have a lot of trouble getting confirmed. She has been an aide to Hillary Clinton since Hillary Clinton was first lady in the White House in the 1990s. She then worked for Hillary Clinton when Hillary Clinton was a senator, and she was a top advisor for Hillary Clinton's campaign for president in 2016, which earned her a fair amount of enmity from Bernie Sanders and others who feel that the sort of Democratic machine and the Clinton machine really sidelined Bernie Sanders back in 2016. She's also gone after a number of Republican senators and generated some bad blood. So she will get most Democratic votes in a confirmation hearing if it even gets that far in the Senate, but she might lose a couple Democratic votes and she could lose some Republican votes. So she may not get it, and she's a product of Washington and an infighter, so she knows what she's in for, and we'll see how it plays out.
Rick, you could argue that Joe Biden has played it pretty safe so far with some of these picks, very experienced hands like a Janet Yellen. But I wonder how much pressure he's facing from the more progressive wing of the Democratic Party. Potential names like Bernie Sanders being floated around for labor, Elizabeth Warren for commerce. Joe Biden seemed to hint last week that he doesn't want to go there because they are senators. But what do you think the pressure looks like from the left?
I think there's clearly a ton of pressure from the left, the so-called progressive wing of the Democratic Party, and you just outlined some of the things they want. In addition to that, they also want a real aggressive push on climate change, something akin to the Green New Deal, which we've talked about on air a lot. It's hard to see how Elizabeth Warren or Bernie Sanders get appointed to a cabinet job. For one thing, both of those senators come from states that have Republican governors. They are moderate Republican governors, but presumably they would appoint the Republican as the replacement, at least for an interim period until it came around to a special election. So that would just complicate problems with what is probably going to be a Democratic minority in the Senate. And it's not clear they could even get the votes of some of the Republicans it would take to put them into the cabinet. So I think the progressive wing is fairly disappointed so far. They are not getting many of the appointments they would like, and the signals are that they're not going to get a lot of the policy action they would like to see as well.
Yeah, and you wonder how much of that is already just coming through because of how those Senate races in Georgia, those runoffs are shaping up as well. Joe Biden potentially looking at still Republican control in that chamber, maybe enjoying that fact a bit here as well. But Rick Newman, appreciate you taking the time to bring us the updates on those picks. Also, as we mentioned earlier in the show, we've got Zoom earnings coming up after the bell today. That, the poster child of the stay-at-home trade, it has seen a bit of a pullback as we've gotten that vaccine news, but still up more than 580% here year to date. For more on what to expect when we get that report after the bell, I want to bring on Yahoo Finance's Dan Howley, who has a look at what to expect from Zoom. Dan?
Yeah, Zach, that's right. What we're looking at here for the quarter obviously is going to be important. But I think a lot of investors and analysts want to know what Zoom has planned for the post-vaccine world. That's when we expect to see vaccines start to proliferate and more people are able to go back to their offices and students are able to attend schools again. For the quarter, we're expecting revenue of $693 million and adjusted EPS of 75 cents a share. For Q4, we're looking at 62 cents a share and then revenue of 719 million. And this is a stock that has been heavily driven by the performance of performance from the pandemic. As people were forced to shelter in place, they were told to stay home. Businesses shuttered, having employees working from their kitchens and living rooms, schools having students work from their bedrooms. Zoom has become really that quintessential work from home stock pick. And it's going to be interesting to see what happens as people kind of move away from that. We already saw that when the original vaccine news came earlier in November, that the stock plunged immediately, kind of in reaction to that. But it's since kind of picked back up. But when we start to see the vaccines actually hit the public, some businesses start to reopen again, that could be a really pressure moment for Zoom. And we're expecting to hear, or at least hope to hear, some information on how they're going to handle that. Not all analysts, by the way, see that as an issue. We've seen Mizuho Securities talking about how it could be a long-term investment, and that's because of the contracts that they have built into the deals that they have with the likes of businesses and schools. And we've talked about how the kind of work from home environment may be here to stay. So I think it'll really come down to what people expect or want out of their new working arrangements, whether or not they're allowed to put in for long-term work from home, whether we'll see a mix of work from home and work from the office. So I think a lot of that still has to be worked out, but hopefully we'll get some idea of what Zoom is expecting going forward once the vaccines do become available.
Yeah, Dan, no question. The long-term play, it seems like, is here to stay in terms of working from home and Zoom. But I'd be curious to see where we stand 6 months from now, let's say, because certainly there's some Zoom fatigue that has been kicking in now that we're so long into this work from home environment. Dan Halley there with a preview of Zoom earnings. Thanks so much for that. Coming up, the receipts rolling in from Black Friday and e-commerce, the clear winner there. Online sales up more than 20% year on year. We're going to break down the numbers for you on the other side of the break. We'll be right back.
Welcome back to Yahoo Finance Live. As we've been discussing, the farther along we get in this recovery, there are still a lot of question marks around what might be exhausted from the CARES Act when we got that passed earlier this year. One of the big question marks is what's going to happen to America's student debt problem. Of course, interest payments have been postponed on a lot of those loans, and it is something that came through in the CARES Act, but still questions around what will happen when that stops after the end of the year. And as that looms, many students with debt are turning to public service jobs and the loan forgiveness program attached to that, including droves and droves of people who have been buried in debt. For more on that, I want to bring on our next guest here to discuss that with us. Jason DiLorenzo is PSLF Jobs founder, a site dedicated to exactly what we're talking about here in that loan forgiveness program, alongside Yahoo Finance's R.T. Swaminathan. And Jason, I'll start with you here because it sounds like you guys are continuing to see a surge in questions and people looking to sign up for jobs in that space to draw down their debt. So what kind of droves are we talking about here? Because I use that term loosely, but what are the actual numbers in terms of interest now seeking some loan forgiveness?
Right now, we have 1.4 million borrowers in the United States that are enrolled in the Public Service Loan Forgiveness Program, which requires 10 years before you can get your loans forgiven tax-free. And so 1.4 million borrowers has seen exponential growth over the past few years. I think one of the greatest drivers for that is going to be the fact that we're 5 months now into the 10-year anniversary of the nationalization of student loans. And as some of you that might be pursuing the program know, you have to have direct federal student loans to participate in the PSLF program. That didn't become the standard in terms of lending to borrowers until July of 2010. So just in the past year, we've seen 350% growth in forgiveness granted success. And I think that's driving a lot more people to the program today.
Hey, Jason, you're a jobs platform. Would you have any insight into what kinds of industries or jobs within the PSLF jobs that have sort of exploded in the past few months or weeks?
Absolutely. I would say the two sectors that we're most focused in talking to graduates in are within the medical, the graduate health space, where you see significantly higher levels of student loan debt than other programs. And also teachers is a much larger growing class of borrowers who often have significant amounts of debt and who very often will work in public service or government environments, so they're eligible. The difficult part is determining eligibility and finding the right resources in place to make sure that you're actually navigating the program successfully.
There's a lot of speculation around who will potentially be the next education secretary. Certainly a big shift likely from Betsy DeVos. I'm curious what names that you're looking at right now potentially, and how significant a shift are we likely to see on the handling of student debt as a result of whose hats?
I definitely think we will be seeing a more progressive approach than we've seen from Secretary DeVos. I wouldn't throw out any names as an expectation just yet. I don't know if Artie, you want to take a stab at that. But I would expect that, we're going to have a runoff election in Georgia, and that's going to determine what progressive policies will actually be considered, depending on which way the Senate goes. But I think as a general rule, based on what we've seen from DeVos and partisanship aside, I would expect a little more friendly environment for student loan borrowers with Biden now as the president-elect and the expectation that DeVos will be on her way out.
Jason, you mentioned in some of the notes that you have a partnership with SoFi. So a lot of people have refinanced to take advantage of super loan. But when you refinance, you miss out on PSLF. You miss out on the possible debt cancellation. So what do you say to these people who have been left off? What options do they have?
Well, so refinancing rates right now are at historical lows because of what we've seen happen in the economy. The challenge for the refinancing companies like SoFi right now is that you're competing with a government benefit right now. And yes, it expires on 12/31, but you're competing with a government benefit that requires zero payments and zero accruing interest. So you can't really compete with that as a private lender, even as competitive as rates are. The other expectation here is that, the Fed suggested that we were going to keep rates low for the next 3 years into 2023. And so if you can get zero rates and zero payments now, And you're pretty confident that whether the CARES Act extension ends in January or there are some expectations that could go out all the way to the end of September, why would you pull the trigger on refinancing and give up that federal benefit now when the expectation is that rates will remain low? So if you're reliant upon refinancing federal student loans as a lion's share of your business, it's probably a tough place to be in right now.
Yeah, and Jason, I mean, when we're talking about expectations and what maybe people out there with student debt should be thinking about, the expectation might be that we would see a continuation of that deferment in loan payments. But there are still question marks, as you noted, about maybe what could happen to this the loan forgiveness program we're discussing here in terms of public service jobs. It's been a bit of a cliff, right? Talk to me about how it's 10 years required before you can apply for it, but potentially Biden could change the rules about that to be 50% at 5 years, or what he wants to do there.
That's right. We'd love to see that change because, the statistics already now suggest that the successes are driving more people to public service loan forgiveness qualified jobs. And that sector is larger than you might think. There are 35 million PSLF qualified jobs in the United States, but it does require 10 years, all or nothing, before you can be granted the loan forgiveness. Now, if they were to, in Biden's proposal, both wants to offer 50% loan forgiveness after 5 years of public service, so cutting that requirement in half. There's also a proposal out there in certain types of public service jobs to actually forgive $10,000 per year over the course of 5 years. So that's another $50,000. Now, the 10 years required that exists today for PSLF, you'd have a lot more folks entering into the public service sector to enjoy that loan forgiveness if it were prorated in some way, as this has been discussed. I don't see too many opportunities for legislation, particularly now with Biden as the president-elect. I don't see too many opportunities for public service loan forgiveness to be on the chopping block, so to speak, as it has been under previous administrations. Both the Obama administration and Trump's budget proposals sought to either cut or limit public service loan forgiveness. And we don't see that really as a consideration or expectation anymore.
Following up on that, does that change if we do get a debt jubilee, if we do have $10,000 in cancellation? Because there's a lot of psychological effects that go into place if you cancel that.
That's correct. And that probably is going to affect over 10 million borrowers individually, meaning that their debt is completely gone. At that of roughly about 10 million borrowers today have about $10,000 of student loan debt. I think more impactful, and certainly the $10,000 would be impactful, but PSLF candidates today have so much more debt than $10,000. The psychological effect of the $10,000 is going to hit some a lot more than others. For the higher debt borrowers, it's not going to really move the needle on how they approach their repayment strategy. What's of interest is the opportunity for those who have incomes of less than $125,000 per year to be able to go to public university or get those loans forgiven. If you went to public service, if you went to public university, you'd get your loans forgiven with under certain income thresholds. That seems to be really impactful, in terms of college enrollment and all of that. It would be nice to see that get some legs in legislation as well.
Yeah, no question. A lot of students looking for some kind of relief, especially those new graduates who are still struggling to find jobs. Jason DiLorenzo, the founder of PSLF Jobs, is always good to talk to you, and our very thanks to RT Swaminathan as well. Coming up, we're seeing some of the retailers under pressure in this session today, down slightly here, despite record online sales during Black Friday. We'll have the latest numbers out from the big shopping event throughout the weekend on the other side of the break. Welcome back to Yahoo Finance Live. We are seeing some of the retail names down today, despite seeing a record online shopping day on Black Friday. It jumped 22% from last year on Black Friday, according to new numbers out from Adobe Analytics. That bump makes last Friday the second best online shopping day in history, but physical stores saw some of their traffic drop. It was down about 30 or 50%. Let's bring in Amy Becker. She is Damon Senior Vice President of Strategic Advisory. Amy, let's start with that. No question, Friday was certainly a big day for online shopping. More and more people wanting to stay home, just going online and purchasing. But what do you glean from those numbers in terms of how things are going to look for holiday shopping season overall?
I think the one thing we saw this year more than ever was shoppers getting out earlier, shopping earlier, definitely shopping online. A lot of concern about the actual physical store. Definitely the retailers came out a lot earlier with deals as well. So where we saw shopping start really that day after Thanksgiving in years past, we were seeing holiday deals, even Black Friday deals back in October and early November. So, this idea of how do you capture the maximum number of shopping dollars for the holidays really started a lot earlier this year.
And Amy, I think a lot of that also comes down to what your research shows, which is just that shoppers were looking to get in on the action before waiting for Black Friday or Cyber Monday or whatever kind of sales events is out there. And we heard some of those concerns too earlier when we got Best Buy's earnings. It sounded like Q4 expectations, there were concerns that it was going to be slower than usual just because of that pull forward. So is that kind of the expectation across the board that maybe as we get closer to Christmas and that holiday shopping season is just not going to hold up relative to the excitement earlier in the year?
Yeah, I definitely think the excitement was definitely there. And retailers, again, were pulling their deals up sooner and sooner, trying to capture those dollars, but also shoppers, whether it was COVID related or just really tightening their budgets, were really thinking about how they were shopping. So, planning ahead, really trying to figure out how they maximize their holiday dollars was a concern. The other thing I think as well is, we've had some, out of stocks and shipping challenges. And so making sure that you actually have the products that you want for the holiday became a concern earlier. So that really drove shoppers to be thinking about the holidays earlier this year than in years past.
And to that point, Amy, you've pointed out that 30% of homes are saying their finances are tougher this year because of the coronavirus, 33% saying they have a smaller gifting budget. When you look at the retail names overall, who's likely to benefit on the back of that? And when we talk about a lower price tag or budget per person, how significant a cut are we talking about?
About 33%, as you mentioned, are saying they're going to spend less than they have in previous years. I think the retailers that came out early, some of the big box retailers, so Walmart and Target, as well as Amazon, were really thinking about what were those deals? How do they attract the shopper earlier in the season? What are the big items, the things that consumers are going to be buying this year? And really trying to make sure that they were providing deals earlier in the season on those types of items.
It kind of seems like some of these points are at odds when we think about what we heard from BMO Capital Markets in their channel check, saying that it didn't look like they were seeing as drastic of price cuts this time around on Black Friday or Cyber Monday because there isn't that need to maybe get the excitement on the part of the consumer, since a lot of people might just be shopping from home or whatever. So how do you square maybe lower price cuts around this season versus a boost in e-commerce, and where the opportunities are for some of these retailers to maybe increase profits regardless of what happens?
Yeah, I think the interesting thing about this season versus previous seasons is this conditioned consumer, that they're really thinking about, again, what is the big deal? What is the big savings that they're going to get during the holidays? And it's kind of a mystery, right? So, do I wait? Of course, there's always the fear of missing out on what that big deal might be. But we do know, again, that, there's limited number of dollars that are being spent, and that competition to grab as many of those dollars is important to the retailer retailers. But I would agree with you, thinking about, how do you maximize profits? How do you think about what are the items that you could be providing at that deal, at that tipping point? A lot of retailers we're seeing really focus on those items that differentiate them from other retailers. So thinking about their private brand or private label offerings that provide that differentiation, provide that, that value price point, but also provide them with the margin that they're looking for. So getting creative about how you think about the deal is important as well.
All right, Amy Becker, Damon, Senior Vice President of Strategic Advisor. Appreciate you coming on to chat that. We'll see what happens. We still got a couple hours here in Cyber Monday to tend to, but thank you for that. We're going to take another quick break here on Yahoo Finance Live. We'll be right back with the latest market moves right after this. Shaping up for the month of November. Jared?
That's right. Let's go straight to the Wi-Fi Interactive. We are off the lows of the session here. We did have a drop into the 11 a.m. time change, and but for the month of November, still on track for the best November since 1928, best month overall since 1987. You can see up 11.6% there. S&P 500 almost there, up 10.5%. But let's take a deeper look into the Dow because we have some real milestones being forged for the month of November. I mean, you take a stock like Boeing, that has been under so much pressure this year, but as of late, it's up 47.6% this month. And so that's going to be the best month since July 1982. Raytheon Technologies, best month ever. American Express, best month since April 2009. And Chevron, Chevron and the entire energy space getting hit really hard, including today, but for the month, up 27%. And that is going to be the best month since November 1980. And not to be left out, the industrial space doing very well. Honeywell up 24.5%. That is the best month since October 2000. So you combine it with some of the other leaders that we're looking at, This is going to be the best month for the SOX, the chip index, since March 2003. And then you put in the transports. Transports are going to have the best month since October 2011. Best month ever for MJ, that is the cannabis ETF in the upper left, and IPO, the Renaissance IPO ETF as well. So my point is, we got a lot of records being made, still have a lot of breadth going on in this rally, are seeing some selling, and we'll just take a quick look at some charts to see where we stand in the longer term. Here's the S&P 500 over 3 months. You can see we dipped to about 3,600, found support, haven't been able to clear this resistance here, but I'll tell you what, going back 20 years, if we are able to clear this resistance and start trending to the upside of this line, I've seen some prognostications showing about S&P 500, 4,000, 4,500, and that's in line with JPM's estimates as well. Guys?
Yeah, certainly bullish there. Thanks so much for that, Jared. Another one of those companies that's hoping to add to the records is DoorDash. And Zach, DoorDash out with its second filing today as they kick off their roadshow, expected public listing later this month. And let's walk through the numbers here. We talked about it with Emily earlier in the show, but I think it's worth noting because there is a significant premium to where they raised their money in their last private round. DoorDash looking to raise up to $2.8 billion in its IPO. That would value the company at $30 billion. Their last private valuation was at $16 billion. And I note this, Zach, because I think it's interesting to see just how significant the demand is still in the market. You see the chart right there. This is from Renaissance, looking at IPO proceeds so far. This year, we're looking at $68.6 billion. That is the best year since 2014, 57% growth since last year.
Yeah, I mean, a 57% growth is something, certainly nothing to sneeze at there. But we also have been talking so much about the growth rate that DoorDash itself has been able to post year over year. When you think about 200% revenue growth at the latest clip here for full year. And that kind of, just to put it into context, right? We've been talking about how that blows away some of the other tech companies in what we've seen they report, them report in their S1s. But when you think about the step up valuation you're talking about there, Akiko, when you think about the private rounds versus what they can get when this IPO happens, it's similar to what we saw play out with Lyft. They were at $15.1 billion in their last private funding round, rose to about a $30 billion valuation at its first trade when they IPO'd. And the similar thing is playing out right now for DoorDash. If they can go from that $15 billion private valuation to potentially, I don't know, we'll see if we hit 30 billion, 32 billion for DoorDash. So it's similar there, but keep in mind, Lyft in their S1 posted 100%. They doubled revenue year over year. DoorDash, quicker growth rate, 200%. But when you think about valuation itself, I'm not sure if we're getting to the point where people are going to be saying, look, this is too high of a valuation for DoorDash just because of where they've seen that appreciate in such a short time. But price to sales, to me, doesn't seem that crazy at $32 billion valuation, where it could be on the high end compared to last year's 2019 revenues. It's going to be 36 times the revenue that they posted. Lyft, when they were at a $24 billion valuation in their IPO, they were at about 10.9 times. So 3 times, you could say, look, that's too expensive for a DoorDash. But also, as I said, keep in mind, they're growing twice as fast as Lyft was when they came out.
Well, and that appreciation is really the key that you hit on, because they are, in fact, coming to market at a time when they have seen incredible growth, and seems like investors really looking to buy into that. Grubhub, the only other sole competitor, although Uber Eats as well listed here. So this is kind of investors' way of looking or investing or putting their money behind this huge food delivery growth we have seen. The question is, of course, going to be whether they can sustain the type of growth they saw this year, and they have listed in their S1 filing. That is one of the big risk factors moving forward. That does it for Zach and I here in the 11 to 1 p.m. hour. Much more here on Yahoo Finance Live. Keep it right here.
in the red, letting off some steam less than a week after the Dow crossed that 30,000 level. However, the Dow is still on track right now for its best month since 1987. So this is the best rally that we've seen in more than 30 years for anyone doing the math at home. S&P 500 and the Nasdaq are also surging to some of their best levels in months, around April there. So a very strong November amidst this pandemic. Right now, we are seeing the Dow down over 1%, S&P 500 down over half a percentage point, with the Nasdaq down roughly half of a percentage point right now. Looking at some stocks, we've got Moderna right now surging up over 17%. That was on the news, or excuse me, up over 15%. So actually paring back some of its gains that had made a little bit earlier in the day. Soaring today after they say that new data shows a 94% efficacy rate for their vaccine. This is, again, the second update that we have gotten from Moderna on their vaccine efficacy. They are going to be asking the FDA today for emergency use authorization. Want to take a look over at S&P Global and also IHS Markit. It's going to be the biggest acquisition of the year. S&P Global has agreed to buy IHS Markit for over $40 billion, $44 billion to be exact. On a sector basis right now, we are seeing tech, the only sector in the green, up about 0.1%, with energy, consumer discretionary, and financials all in the red. Energy really taking a hit here, down over 3% right now. On the coronavirus front, there are roughly 13.4 million cases of coronavirus in the United States right now, and the death toll has surpassed 266,000 deaths. There is, of course, that good news about that Moderna vaccine with that 94% efficacy rate. And again, since they are seeking that emergency use authorization, they say that they are going to be able to start rolling out that vaccine in just 3 weeks, December 21. That is the date Moderna says they can get that vaccine out there to the American public. So we're going to be starting today's show on that piece of good news, of course, which is going to be signaling that there really might be an end in sight for this deadly pandemic. We're joined now by Yahoo Finance's Anjali Khemlani for more COVID updates and to tell us about her chat that she had this morning with Moderna's CEO. Hi, Anjali.
Hey, Kristen. Yeah, so of course, that is some great news. We know that this is the second vaccine now to seek emergency use authorization from the FDA. And to the point about that December 21st, that's coming a little bit after the December 17th FDA meeting that is going to review that application and then have a result out there. We know that between Operation Warp Speed and Moderna, they have said that within 24 hours of receiving that emergency use authorization, they plan to then release the vaccine and distribute it. There have already been dry runs, from other companies as well as logistics companies, airlines, all, really ramping up and practicing for their roles in this whole process. Of course, it's a much larger distribution that has ever been planned for any vaccine in the past. So take a listen to what Moderna's CEO had to say about all this and more.
Like other companies, we were waiting for two things. First, to have a final analysis of the phase 3 efficacy, which we got yesterday. When we filed the protocol for the phase 3 back in June, July with the FDA, we agreed with them that from a statistical standpoint, we needed to reach 151 cases of disease to be able to have a robust analysis. What we shared this morning is actually an analysis at 196 cases, showing a 94% efficacy. But as Anjali was saying, the piece that got me the most excited, that I was almost tap dancing in the house yesterday when I heard it from the team, is we had 30 cases of severe disease. And of those 30 were on placebo and 0 were on our vaccine. So if you think about what has happened in the country, people getting infected, if they get a severe disease, they end up in the hospital. And if you get a bad case, they end up into the ICU, and the worst case outcome, of course, is death. If you can stop that whole cascade, that is, I believe, a game changer. And so with that efficacy data, and FDA had been very clear through an EUA guidelines back in October, if you recall, wanting 2 months of safety data for at least half of a participant. We crossed that threshold in the second half of November, as we had communicated. And so today we have all the pieces we need. we have been working with FDA very closely now for several months to file all the information around manufacturing so that they have everything to be able to make a decision. And so the file is going to go today. The team is finalizing the quality control as we speak. They spend the whole weekend of Thanksgiving checking and rechecking all the data. It's going today. The FDA has indicated to us that we will likely have our advisory board for mRNA 1273 on December 17. And I could anticipate within, I would say, 24 to 72 hours after this, a potential approval. What we're also doing today is to file in many countries outside the US. We're filing in Canada, in Europe, in the UK, in Switzerland, in Israel, in Singapore, and with the WHO to help access in low and middle income countries.
Stefan, I wish that you had recorded the tap dancing so we could share that on air. That would have been very interesting. So next time, please do that. One of my questions for you really is now that you have the filings set to go in, this really sets the company up to validate a product that would be the first on the market in the history of the company. But in addition to your point about manufacturing, and especially since you're looking globally for approval, also includes sort of an infrastructure that's being set up that could play a role later on down the line. As it stands right now, do you intend for the relationships that you have with the manufacturers, as well as the infrastructure being set up for distribution, do you think that's going to outlast the product itself?
Yeah, that's a great point. I mean, as I shared with our investors, third quarter call on my very last slide, is I believe 2021 is going to be the most important inflection point in the company history. If you think about it, we had $4 billion of cash at the end of Q3. We have today 20 products in development. And because this is a platform, I think that's a thing that's very new that a lot of people don't appreciate yet. For 100 plus years that the pharmaceutical industry has been around, there is zero correlation between drug 1 and drug 2 in any big pharma pipeline. Since now 50 years that the biotech industry has existed, there's also no correlation. But we use mRNA. mRNA is an information molecule. And so now with this efficacy data, and I hope in a few weeks with this first approval, it has an incredible read across all the vaccine pipeline. We have 6 products in the pipeline. Some of them are $2 to $5 billion annual peak sales per vaccine, like our CMV vaccine, starting its phase 3 next year. We've announced recently we're going to go after flu. As you know, the efficacy of flu vaccine is pretty bad, in the 30 to 60%. Based on the good data we had in the elderly, which is the population the most at risk with flu, we're going to go after flu business. And so, as you say, the infrastructure we are building for COVID is going to be used for the entire pipeline. So 2021, I think, is going to be the most important year in the company history. I could see us finish the year with a very strong balance sheet, way north of $4 billion of cash on the balance sheet. We have no debt. I could see us having, maybe 25, 30 products in development on our way to 40 plus products. That's kind of a pipeline like the size of an Amgen. That's what Moderna is gearing up to do. And this validation by the regulators in a few weeks, I hope, after this successful phase 3 data, has an incredible read across the entire pipeline.
What time do you expect that filing today? And then going forward for the December 17th meeting, are there things that you anticipate being asked? Because obviously this nugget about severe COVID prevention is really exciting for you and generally health experts, but does that matter to the population broadly?
I think it matters tremendously, especially in terms of psychology. You don't always know if you have, an underlying disease. Some people have, diabetes started, they are not aware. So people might have genetic, variation in their genes that might make them more susceptible to the disease. So if you think about the psyche and the impact it has had on the economy, if you could get a vaccine and know that you have 94% chance to have no disease and 6% chance to have mild disease where you will not have anything severe happening to you, I think it will have an enormous impact on psychology. And which is why I think if you think about the economy as a whole, once we get enough Americans vaccinated, which I could see happening, for people with severe risk in Q1, the rest of the population in Q2, I think by the end of Q2, you might be in a place in the US where basically you have any American who is willing to get vaccinated, have access to a vaccine, and goes back to a normal life, go back traveling, go back to see friends, go back to movie theaters and trips and so on. I think we're seeing the light at the end of the tunnel.
And what time do you expect that filing today? Is it going to be later today or sometime soon this morning?
It's going to be, I think, in the afternoon. The team is working on it. We need to make sure that every T is crossed, every I is dotted. As you can imagine, this is very important for credibility, also for helping the FDA that they have everything they need squared away. So it will happen today, but by the time we go to bed tonight, it'll be at the FDA.
Stefan, is all your capacity for 2021 in terms of the vaccine, is that sold out? And how close do you think you can get to producing 1 billion doses of the vaccine next year?
So it's a good question. So we've already sold out a lot. We have not communicated publicly, so I need to respect Reg FD. But if you look, 100 million doses to the US government, 80 million in Europe, 50 million in Japan, many other deals across the world. And so we're already starting to see a lot of capacity sold out. As we've said, we feel very confident we can make 500 million doses. We're working toward 1 billion. The piece that is hard for me to know today is, given we're running 24/7 now, is will I have in 2021 every day all the raw material we need? Because if I need one plastic bag or I miss one raw material, we cannot start production. And so that's the swing factor that is still a bit unknowable today. But you need to be assured we are working as hard as we can with our partners or suppliers to get closer to 1 billion doses.
So as you can hear, Stéphane Bancel, the CEO of Moderna, really talking about the long-term view of what this means for the company, validating not just the technology, but also the infrastructure for the company. Meanwhile, we also got another little tidbit of positive vaccine news today, and that was from Novavax, and that is that they are anticipating to start their phase 3 trial of their vaccine. We know that they had initially looked at mid-October, but they had been delayed a little bit because of unknown reasons. But that is, of course, setting up yet another one to be, matching that shots on goal analogy that has so frequently been used. Kristen.
All right, Yahoo Finance's Anjali Kemlani, of course, with all of the updates, and thank you for bringing us that conversation as well. A lot of good news up ahead when it comes to the coronavirus vaccine. All right, well, coming up, we will be digging a little bit more into the pandemic and, of course, all of this news on the vaccine with a healthcare policy expert right after this break. in the red. The Dow actually accelerating some of their losses from what we had seen just a couple of moments ago, down over 1.1 percentage point right now. However, still on track for the best month for the Dow since 1987. S&P 500 and the Nasdaq remain in the red. S&P 500 down roughly 0.75 percentage point, with the Nasdaq down about 0.5 percentage point. Well, I want to continue the conversation that we had started just before the break on the coronavirus vaccine. Moderna, again, is asking for emergency use authorization, which means a vaccine could be rolled out before the new year. We're joined now by Dr. Howard Foreman. He's a Yale professor of diagnostic radiology and public health. Doctor, so starting with this news, Moderna effectively saying that their vaccine is 94% effective, seeking that authorization. So people can start being vaccinated, at least with Moderna's vaccine, before the new year. When do you think, however, that everyone, at least in the United States, will be able to get vaccinated if they want it in this country?
I tend to be on the more optimistic side than a lot of other people, and I think that by early spring, most people will have some degree of access to a vaccine. I'm more concerned about vaccine hesitancy. I'm getting more and more confident that Pfizer, Moderna, and hopefully J&J will all have vaccines available in this country by midwinter. And that they have the capacity to produce sufficient vaccines. Now we're dealing more with the logistics of it and then vaccine hesitancy. And certainly the news from Moderna today helps a lot with hesitancy, because if you tell me that a vaccine has 50% effectiveness and we don't know a lot about long-term side effects of it, I might really have good reason to be hesitant. But if you tell me this vaccine is 94% or 100% effective at preventing severe disease, then I'm able to do a risk-benefit calculation that favors getting the vaccine much more easily.
So, Doctor, two things to pick up there. I'm going to start first with this path to normalcy. At least myself, and I'm sure others are out there probably thinking that this vaccine could be almost like a light switch moment, that once people get it, life is essentially going to be able to return to normal, or at least they hope. What does this path to normalcy really, truly look like, even with this vaccine available?
I think for individuals and individual families, it will be closer to a light switch. Once a unit and family are vaccinated, if we do have confidence that it has 100% protection against severe disease, then that unit can function in a much more normal way and not have to go through a Thanksgiving like we just went through. On the other hand, for society at large, it doesn't get back to normal right away, because we're going to continue to have patients coming into hospitals. We're going to continue to have to worry about our most vulnerable. We're going to continue to have to worry about families where there is incomplete vaccination. So it will not be immediately normal on a population level, but at the individual level, it really has the possibility of changing things very quickly.
Throughout this pandemic, the federal government has repeatedly been criticized for their response to the pandemic, or some would even call it almost a non-response, in the sense that testing, restrictions, lockdowns, even mask mandates, they were not mandated on a national level, but rather were left up to the states to handle and to take care of. Now that we have, Pfizer and Moderna with these vaccines that are set to be rolled out, I'm wondering, from your perspective, you do healthcare policy, you're an expert in that field. Is it going to be necessary that the federal government handle that rollout? Or can this be something that is left up to the states on a state-by-state basis on who to give it this vaccine to and when? I'm wondering your thoughts there on this distribution.
Look, I think the coordination at the federal government is incredibly important. Trying to figure out what demand is going to look like state by state and allowing states to have to compete with one another would only lead to a wild west where some states might get vaccines, some wouldn't, and so on. We must have coordination at the federal level. We must be able to create a marketplace where if a certain state is underusing their vaccines and another state has more demand than supply, that we're able to move those vaccines around. That's something that really does require federal coordination mentioned. The federal government must be integral to messaging and having consistent messaging that then trickles down to all leadership at the state level. That has not been happening so far. That will help tremendously with vaccine hesitancy and with getting people over the hump and concerns that they have about what a vaccine will mean. And it's also very important for people to understand what the risks are and what they're not associated with that. All of this requires leadership at both the federal and state level to work together. And the logistics are not a small piece, but I have a lot more faith that between the private sector and the states, that the final mile is being worked on aggressively right now, and that if the federal government can do its coordination piece, the states will be very helpful here. What we saw earlier on this year is we failed to get tests out to the states. We failed to put states in a position to be able to test. That was a huge, huge failure. And then when it came to PPE and ventilators early on, we had no means to coordinate where there was excess supply or excess demand.
Doctor, I want to quickly ask you before we have to end here about the pandemic as we're seeing it. I mentioned a little bit earlier in the show that we have 13.4 million cases. So we're staring 14 million cases right in the eyes right now. And everyone's been talking about who would get the vaccine first. And of course, they're mentioning, the frontline workers, essential workers like doctors, people that are working in healthcare. But of course, as we've seen throughout this pandemic, this virus right now has permeated other segments of the population, just young folks perhaps going to dinner with their friends or, grandparents who are, seeing their children or their grandchildren. So I want to know from you, while one segment of the population, of course, is going to be getting this vaccine first, I'm wondering, just on a public health perspective, is it still possible that even while we are vaccinating folks in the United States for this virus, still to, in a way, continue to spiral as many folks go out there and perhaps think, hey, a vaccine is out there right now. Time for me to, go and see my friends again. Time for me to go to bars again, restaurants, etc.
Yeah, look, this is the moment where people should be doubling down on protections, because any infection avoided now is a death avoided and not just deferred. It's no longer that I'm putting off the inevitable. I can now save lives by avoiding the spread. So the more that we do right now, the bigger the impact it is. So we should not concede defeat at this point. We must do everything we can to avoid that. What you said about prioritizing who gets vaccinated is also really important. We need to protect the most vulnerable in nursing homes, in facilities where the most vulnerable live and where healthcare workers are delivering care and potentially spreading the virus to them. So there are a lot of strategies, and those are going to be discussed by the CDC this week, and we're looking forward to seeing their recommendations about prioritization.
All right, well, we are going to leave that there. Dr. Howard Foreman, Professor of Diagnostic Radiology, I can't talk today, and Public Health at Yale. Thank you so much for joining us today.
Thank you. Take care.
All right, well, coming up after the break, markets right now still in the red, the Dow down over 1% right now. We will be chatting today's market moves next. Yahoo Finance Live. Checking market action right now. The Dow remains in the red, down over 1.1 percentage point, but still on pace right now to notch its best month since 1987. S&P 500 and the Nasdaq remain in the red. The S&P 500 down over 0.5 percentage point, with the Nasdaq down roughly 1/3 percentage point. Energy continues to be the laggard on today, down over 3.5% right now. Tech, the only sector right now in the green, up over 0.1 percentage point. We're joined now by Alfred Eskandar. He's the Salt Financial President and Chief Operating Officer. Alfred, always good to chat with you. So we're seeing the markets right now letting off a bit of steam. I'm wondering how much you're seeing today's market moves really as a buying opportunity through to the end of this year, for what we can anticipate to essentially be much better market performance in the next 6 months or into next year.
Well, good to be back, by the way. And there's definitely a lot of reasons to be exposed to equities now and into the near future. Obviously, November was a huge month for certain sectors, energy being one of them. But you had records in the Dow and the Russell, and certainly value has been on fire as of late as well. So there's the optimistic viewpoint is certainly alive and well. I think the markets reacted well to the Biden, victory, and going into the last month of the year, we see the volatility came down tremendously and continuing to stay at roughly this level, which I believe is at 22 today.
I'm wondering, Alfred, you and I have talked about this before, about essentially this disconnect that we've been seeing for the last several months between market performance and what we're seeing, at least when it comes to the pandemic. So while we've had the Dow on pace right now for the best month in over 30 years, we also have been hitting record highs when it comes to the coronavirus pandemic and the daily case counts that we're seeing. So there seems to be, especially with that Dow 30,000, it almost feels like there's this optimism and this euphoria in the markets. I'm wondering how long you think it's going to be lasting, and if you are anticipating some kind of a pullback, and how big of that pullback would that pullback be, next year, January, February, spring of next year?
Well, market timing is a ridiculously difficult thing to do, and very, very few people do it well. So I'm certainly not going to take a swing at it. But what I can tell you is in early November, when we saw the big spike to 40, it was because of COVID. It was because of surging cases, not just here in the States, but really across the world. And conversely, you also see the VIX coming down, to the levels where it is today by nearly half, also because of positive news on the vaccine. So the market is very, very sensitive to what's happening with COVID. Obviously, had this happened 10 years ago to this level, the economy would be in far, far worse shape. We transitioned into an economy where we're really relying on technology and for productivity and for getting our stuff done. And as a result, the economy did not get as damaged as it would have if we haven't had these capabilities. So I think the market, right at certainly it's been priced in. And looking into the next year with the new administration, the stimulus package will finally get done. Enough with this political theater that's been going back and forth, and it'll be a nice little boost, a necessary boost for the economy to get back on track.
Alfred, I'm running out of time with you, and it's Cyber Monday, so I do want to ask you at least one question about retail and what to expect. Obviously, Black Friday was a bit of a flop. Everyone just staying inside, not going shopping. I don't know, personally, I don't know how optimistic I am about Cyber Monday doing very well. I'm wondering what you're anticipating for the holiday season and for some of these retailers, their performance to be, given that we are still in the midst of a pandemic, more than 6 million people continuing to file for unemployment. The pandemic continues to surge. What are your anticipations over the next couple of weeks?
Well, I can tell you from shopping habits of my teenage daughter and wife, there seems to be no end to the number of packages showing up on my front porch. But I do think it's going to be a bit muted. There's still uncertainty in the employment numbers, but consumer sentiment remains high. People's savings rate is high, and there's a lot of pent-up demand. I think there's a little shock of retail therapy coming, our way, and I don't see, Christmas being disappointing.
All right, time to leave that there. Alfred Eskandar, Salt Financial President and Chief Operating Officer, coming to us with some beautiful bottles of wine in the background, making us all incredibly jealous over here at Yahoo Finance. Thanks so much for joining us today.
Great to be with you.
All right, well, coming up after the break, we will be hearing from the star of the ABC show, Blackish, Tracy Ellis Ross. We'll be talking to Yahoo Finance next. Welcome back to Yahoo Finance Live. Checking market action really quickly now. The Dow down over 1.1 percentage point, off by more than 335 points. The Nasdaq paring some of its losses. Tech sector right now, the only one in the green, and the S&P 500 down about 0.7 percentage point. Well, Yahoo Finance's Melody Hom spoke with actress and entrepreneur Tracy Ellis Ross about her new line of hair care and more. Take a listen.
I feel really good. I've learned a lot, and I also feel really grateful to the community that I am serving and in dialogue with through this company. It's been really special. It's a community that I am a part of, a very vast community of curly, coily, and tight textured people. But to be in this new relationship with this community that is a different kind of dialogue has been really exciting for me, both in terms of the feedback and hearing how people are verbally telling me how the products are working for them, and also how our sales are doing, particularly during this pandemic. It was a little scary. We launched phase 2, the styling products, during the pandemic, and I think so much of what's happened in this very unprecedented time has really reinvigorated my mission for the company, my intention and my promise of the brand. So my mission being to create effective products for the curly, coily, and tight textured community that are actually meant for us to support our hair, that it be a company that is centered around the celebration of Black beauty, and also that we continue to be an active space where we are sharing and seeing our beauty, our authentic beauty.
Mm-hmm. Yeah, when you think about even initiatives like Aurora James's Fight for 15, right, to make sure that there is 15% of store shelves or online space dedicated to Black-owned businesses. Tell me about your conversations that you're having with retailers. I know you're in Ulta now. Do you feel as though, given the fact that you do have celebrity status, you have a little bit more kind of weight, negotiating power, energy that you can bring to the table to kind of champion for the cause at large? I'm curious how you think about your own obligation or responsibility, if at all, when you're at the table.
I've always felt incredibly responsible for my voice, and aware of the power of a voice, not necessarily only my voice, but just people speaking up in response to their experience and what they see, and utilizing the power that one has for good and for the good of the larger community. So my relationship with Ulta actually preceded me even having Goop and having my operational partners. My relationship with Mary Dillon is what started it. There were 2 retail partners that I reached out to when this was just an idea. You know, it took me 10 years to get this off the ground. So at the end of the 10 years, I finally sat down with some retail partners and started trying to figure out how to do this on my own. The 10 years was a difficult 10 years, but it was an important 10 years because I really was able to articulate my vision very clearly and gain my own sense of how I wanted to navigate the industry and the importance of what I felt the space that Pattern needed to occupy. So I walked into my relationship with Ulta as a person who always was looking to create a more equitable space for women, for Black people, for people of color, across the board. It's something that is my guiding force and mission in my acting career, in my producing. That is how I move through the world. So it was no different in the beauty industry, in the beauty space. And I brought those questions to the beginning of my relationship. And it's one of the reasons I decided to go with Ulta. Mary Dillon has been focused on and fighting for inclusion and diversity at Ulta from when I started my relationship with them. And none of that has changed through all of this. And, you know, I had a very long experience during my 10 years of really learning about the market and why the market was not looking in the direction of this vast community of people that not only needed support and to be serviced by an industry, but also that had a lot of spending power. That if you just look at industry from a capitalist standpoint, it was also an untapped market for no reason, and needed to be addressed in both how one markets and creating metrics to support how one markets.
I mean, one of the other paradigms that you've been instrumental in sort of dismantling and reshaping is the entertainment world, right? Whether it's through Blackish, I know you launched an overall deal with ABC as well earlier this fall. Tell me about the kinds of content. It feels so poignant, right? And particularly relevant this year during a very tumultuous pandemic, election-stricken year. I'm curious how you think about your own work. Do you feel as though there's another layer of importance and significance as you go and shoot now? Do you feel like that's always been the cornerstone of even shooting Blackish and Mixed-ish? I'm curious about your thoughts there.
So Blackish, you know, for me and how I play Bo Johnson, and one of the things that's been incredibly important to me, it's been out there in the press, and it came sort of jokingly at work that whenever they give me lady chores, I push up against that. And I'm like, why? Why am I doing laundry in this scene? Do I have to be doing laundry? Any of those things that sort of allow us to expand what we see as possible. So for me, it has been very purposeful to find ways to expand the ideas of humanity and what's possible while entertaining, with a core of joy. And I've brought that through all my characters. And now, as I have 5 projects in development and one more that's about to jump onto the slate, thinking about that in the same way, and both in front and behind the camera. That it's not just necessarily about the roles that are written, but the lens through which those things are seen and shot and how those stories are told, and allowing the diversity of experience and point of view to be a part of the holistic experience of storytelling.
You've been able to craft this amazing platform with your social media as well, in being an advocate, right, for social justice causes, for political causes. You were one of the hosts of the DNC earlier this year. When you think about the 2 runoff races happening in Georgia right now, and the weight that you have thrown in different messaging or some of the statements that you've made, how do you feel as though your voice will lend to the greater cause? I've seen, other sorts of politicians, celebrities also perhaps relocating to Georgia for a little bit of time. Do you feel as though that push and all of this momentum will pay off? Do you have an optimism as we head into January?
I do. We turned Georgia blue, and we turned Georgia blue through the extraordinary efforts and work of people like Stacey Abrams. These things do not happen by accident. And I think to tell the narrative of this election without, as if, voter suppression didn't exist, or this, I know there were a lot of headlines that this election was the safest it's ever been or whatever, but that was through the work of civil rights activists, lawyers, and the Legal Defense Fund from the NAACP, that there were really incredibly intelligent, astute, and hardworking people that made sure that this election went off that way. And so my hope is based on and sewn into the fabric of the civil rights movement and the work that is being done. The uprising, the Black Lives Matter movement, people like Stacey Abrams, and there's so many others. I hope that people stay engaged. I feel like this last 5 years, we have seen people wake up in a way that we have needed to all wake up. And then in this last year, even more. The reality of you are only as strong as your most vulnerable neighbor has always been true, but we have been able to see it in real time, not as some sort of imaginary thing during this pandemic. And it requires all of us to show up for our fellows and really make sure that we are engaged in this process of democracy. So many people in this country have lost their jobs and have no idea how they're going to get another one because businesses are closed. There's so much happening. People are still numbers are higher than they were when we originally shut down in terms of this pandemic and COVID. And so there's a lot to make you afraid. We are siloed off from the collective energy of our families and our friends and the things that we usually lean on for comfort. And so being engaged and informed has actually helped to lessen my fear and help me feel like I'm not helpless, but I can actually be involved and help move us in the right direction. I'm not the only answer, but I am part of the solution.
Yeah, I mean, one of your passions is fashion. And of course, when you think about body politic and the way in which clothing can actually be transformative, right? And I loved in your speech at the People's Choice Awards where you say it can be a tool for transformation. It's an entrance and clothes can be your superhero cape. Do you think eventually you may run for office one day in your fashionable glory?
That was quite an entrance into that question. I don't know. I have no idea. I don't think so. But who knows? I mean, there's a lot of things right now, my plate's real full between Pattern and this production company. I'm really grateful at this point in my career and at this age to take all of the experience that I've gained from this life that I've lived and start being in a position and to be able to be in a position where I'm creating content and not just being a part of content and feeling like I can actually be using the power that culture has given me to do things that are about the greater good, you know, to have uncomfortable conversations and necessary conversations about how to reimagine the spaces that are genuinely not working and are not only not working, but harming people and oppressing people. And so I don't know if that would lead itself to running for office in any way, but if that's the call that happens and it's a way that I would end up being effective, then I'm not closed to the idea, you know?
Yeah, not ruling it out just yet. Thank you so much, Tracy Ellis Ross. It was a joy speaking to you today.
All right, that was Yahoo Finance's Melody Hom and the actress and entrepreneur Tracy Ellis Ross. If you missed any part of that interview and want to go back and listen to her 10-year journey to starting a company or how she views her role in the industry in Hollywood, please check that interview out on yahoofinance.com. Well, coming up after the break, Janet Yellen has been announced as President-elect Biden's pick for Treasury Secretary. We have the details for his economic team next. Team, including Janet Yellen, who would be the first female Secretary of the Treasury in, well, history. We've got Yahoo Finance's Rick Newman here with more details. Hey, Rick, so we have Janet Yellen. Who else made the cut, at least for this economic team?
Well, we've got 3 economists named to the Council of Economic Advisors. That's the group in the White House that does the kind of the hardcore forecasting and analysis work. And that is going to be led by a woman from Princeton named Cecilia Rouse. She's a Black economist. And then Jared Bernstein will be part of that 3-person commission, and also another economist known as called Heather Boucher. These are all well-known, what you might call center-left economists. They're pretty mainstream, and a lot of their focus is on wealth inequality and income inequality. So you can expect that to be part of what Biden looks into. And then another person that Biden has not confirmed yet, but reported to be an important appointment, is a guy named Brian Deese to be chair of the National Economic Council. That is the policymaking committee. Larry Kudlow is the current chair of the NEC at the White House. Brian Deese is not an economist. He has a law degree, and he's a top executive at BlackRock, where he oversees the sustainable investing strategy. So I think that indicates that climate policy is going to be a top economic priority in the Biden White House. And we're going to see some new proposals on that. I mean, that for sure is one of the things Biden has talked a lot about, and there are a lot of expectations he's going to have a fairly aggressive policy toward climate change.
So, Rick, I kind of want to dive into a little bit more what you were kind of hinting at a little bit earlier, essentially that these folks are a little bit, center left. And you and I have talked to Neera Tanden before. I'm wondering, because this is going to be the economic team that is essentially going to be in charge with steering, the U.S. economy in the midst of this pandemic, really out of this financial crisis, as still millions are on unemployment. Congress is still kind of will they, won't they, over economic aid to the country. So wondering, what can Americans just at large really expect, at least in terms of economic policy going forward, especially in 2021 when everyone's going to have an eye on trying to really right this ship?
Yeah, you mentioned Neera Tanden. I should have mentioned her at the outset. She is a longtime Hillary Clinton aide who Biden wants to run the Office of Management and Budget. She's a talented policymaker. She has worked in government before. She's going to be hard to nominate because she has made enemies with a bunch of Republicans by criticizing them directly. So we'll see how that goes. I mean, the thing to watch for here is what's Biden going to be able to do and what's he going to want to do by executive action and by regulation, because we know that Republicans are most likely to control the Senate. And even if the Democrats do win those 2 Georgia Senate races, they're going to have the thinnest possible margin of control. And it's just going to be very hard to get much legislation through Congress. So what is Biden going to be able to do with executive actions, the way Trump has tried to do it, and then with regulations? So I think that's what we're looking for with regard to these appointees. I'm not sure there's a lot they're going to be able to do. I think on climate policy, there is a lot. But on some of these other things, wealth redistribution and things like that, if you can't get it through taxes or new spending programs in Congress, it's just going to be tough.
All right. Well, we are going to leave that there. Yahoo Finance's Rick Newman, thanks for giving us all those details. I know you and I are going to be chatting a lot in 2021 about deficits, about what the president is going to do, not going to be able to do going forward. So thanks for giving us that update. All right, well, coming up after the break, move over Chase and Bank of America. General Motors is getting into banking. We're going to be chatting that next. Your business and your cash. And not just by selling you a car, but through opening a bank account. The automaker is going to be diving into banking again. Yahoo Finance's Brian Chung is here with those details. Hey, Brian.
Hey, Kristen. Well, you may have missed it with Black Friday and the holidays, but an interesting report from the Wall Street Journal on Friday saying that General Motors is interested in applying for a banking charter, yet again, this time with the Federal Deposit Insurance Corporation, in addition to Utah's banking regulator. Now, this is all coming on the heels of developments in the regulatory space. People in Washington, D.C. have been hot and cold on the idea of non-banks having banking services. So in the case of GM, this would be, for example, being able to open up a deposit account with the automaker as opposed to your bank down the street. Now, General Motors has done this before. They've gotten a bank charter and needed a bailout. If many historians will remember, during 2008, at the time, their banking financing arm was called GMAC. This time around, they are hoping to start an industrial loan charter to again start taking deposits to finance a lot of the auto loans that they originate for their types of products. Now, for what it's worth, what they call industrial loan charter is a structure that already exists at a number of other companies. Think of Toyota, BMW, Harley Davidson, even John Deere have financing arms. But again, there's been this patchwork in DC of companies that have been able to get one when regulators have been cool with it, but then other companies that haven't been cool with it and don't have one. So GM now hoping to take advantage of the Trump administration-led FDIC, at least maybe before the Biden administration takes place, to take advantage of the opportunity to again reopen a banking arm in their company. Again, a repeat of 2008. Interesting to see how all of this unfolds. Kristen?
All right, thanks so much, Brian. And General Motors is down over 1.5% right now. One last look at the markets. The Dow remains in the red, still on track right now, however, for its best month since 1987. S&P 500 and the Nasdaq both remain in the red. The S&P 500 down over 0.5 percentage point right now, with the Nasdaq down about 1/3 percentage point. Tech sector had been the only sector and continues to be the only sector right now in the green, up roughly 0.2 percentage point. Well, Yahoo Finance Live continues in the 2 p.m. hour. Alexis Christoforous will be chatting with Randy Weingarten, the American Federation of Teachers Union president. They'll be talking about New York City reopening elementary schools and the hybrid learning model for students going forward. That's up next.
30,000 for the first time ever. With 2 hours left in the trading day today, here's a look at the action right now. Stocks off their worst levels of the day. The Dow is off 360 points. We have the Nasdaq Composite down 40, and the S&P 500 off about 25, even with losses. The Dow is on track, up about 10% for the month of November. Today, Moderna in the news today, of course, announcing it would file for emergency use authorization for its COVID-19 vaccine, making it the second company after Pfizer to potentially provide a vaccine in the U.S. by the end of the year. Shares of Moderna, as you can see up there, big time, up double digits right now, up 16%. This gives the biotech startup a market cap of $58 billion. The market also kicking off the new week with a major deal. S&P Global is buying the rival data provider IHS Markit for about $44 billion. This is an all-stock deal. It is the largest stock deal of the year so far. All right, I want to check in now with Jared Blickery for a look at some other stocks making big moves today. And Jared, banks.
That's right, Alexis. We're looking at the bank sector right now, and we're seeing some losses today, but this is coming after a month of some incredible gains right here. And I'll tell you what, we do have Morgan Stanley downgrading a few of the names in the space, and that's mainly JP Morgan, Bank of America, and also Goldman Sachs. Now, these are part of a larger move in the space, again, by Morgan Stanley. And she's increasing, Betsy Graseck is increasing her price targets across the board and raising the large cap bank and consumer finance sector as whole, from attractive from in line. And so she's saying banks are set to fire on all cylinders, but with the names I mentioned before, Bank of America, they're facing tighter underwriting standard. JP Morgan likes to tout their fortress balance sheet, but that means that they're also going to be careful with credit extension limits. So even Goldman Sachs, they see their revenue dropping as market volatility and urgency around capital raising activity, both equity and debt, those subside in 2021. So less deal making. But Morgan Stanley does like Universal Bank, consumer finance stocks, and they're saying in general that they are poised and among the few that do not yet reflect a V-shaped recovery. So some of those names are Synchrony, Alliance Data Systems, Ally Financial, Capital One. And just looking at our heat map here, Capital One is up 19%, so almost 20% for the month. And Morgan Stanley is saying that they have one of the highest expected level of excess reserves among all companies, potentially driving large share buybacks. Also, American Express, that stock has been on a tear, having its best month since 2009. They like it because normalization offers a booster shot for the T&E sector, Alexis.
All right, thanks very much, Jared. I want to bring in Sam Stovall now. He is Chief Investment Strategist at CFRA, and he is here to talk markets with us. Sam, good to see you again. So this pullback we're seeing today in the market, do you consider this a buying opportunity, or is it the beginning of a larger sustained sell-off?
Hello, Alexis. Well, I think the market right now is going through the beginning of a digestion phase. Last week, we had the Dow Jones, the S&P 500, and the Russell 2000 all hit simultaneous new highs. And history basically hints, but obviously does not guarantee, that in the next 22 calendar trading days, which is essentially one calendar month, that the market goes nowhere and it is a coin toss as to whether it's up or down. Also, with today being the last trading day of November, and it looks as if we're going to be in very low double digits again, because November was very, very strong. It might end up stealing from Santa, and we might end up having a weaker gain in December than we normally would.
I know that you are a historian of the market, Sam, and last week we had the S&P, the Nasdaq, and the Dow hit record highs. Also the Russell 2000, by the way, not to be left out, that small cap index hitting a record high. When you look back at history, when is the last time we saw something like that occur? And what does that tell us about that particular scenario, tell us about the short-term future for the market?
Well, it has been quite some time since we had all four of them. It's because the Dow has been a bit of a laggard when compared with the S&P 500. If you look just at the 500 and the Nasdaq as well as the Russell 2000, then it was just a short time ago that we hit that level. So I would tend to say that it's a measure of enthusiasm across the board. One could say that it's favorable because of the breadth that it offers, meaning we're not just being driven by narrow behemoths. When you look, 95% of the near 150 sub-industries in the S&P 1500 are trading above both their 50-day and 200-day moving averages. So there is movement by a variety of groups within the broad market. But I think as a result of that, after a while, you have nobody left to buy, or at least to push the share prices higher. So I would tend to say that we're probably ready to digest some of these gains, and then I would regard that as a buying opportunity.
I want to get back to those small cap stocks because the Russell 2000 on track for its best month since its inception in 1984. Do you see investor appetite for small cap stocks continuing into 2021? And what do you think is going to be the tailwind for these particular stocks, Sam?
Yes, I do think that we are likely to see this movement into small caps continue for a while. Basically, in the past, we've had many false breakouts. So I say, fool me once, shame on you. Fool me 12 times, shame on me. But we believe that this time we really could have a sustainable movement. And I think really it's because we're rotating away from many of the growth areas, gravitating toward the value areas, small and mid caps, and even international stocks as this bull market progresses. One of the driving factors will be earnings growth expectations for 2021, where the growth is now expected to be close to 80% for small caps, about 36% for mid caps, and 21% for large caps. So the greatest amount of growth potential is in the smaller cap area.
What about those stocks that have suffered the most during the pandemic? Energy has underperformed the market, bank stocks as well. We've seen them rallying, though, recently in the market. Do you think that we've turned the corner and that these stocks could be on an upswing in the early part of next year?
I think that's certainly a possibility. I mean, energy was just dragged down so far that you could think either the group goes out of business entirely or it represents a great buying opportunity. Of the 8 best performing sub-industries in the month of November, 4 of them were in the energy area, including coal. So it is sort of surprising the snapback that we're seeing. The concern is whether OPEC decides to increase the output because of the higher oil prices to take advantage of that. So right now, our concern is that maybe some of this enthusiasm will be tempered by an increase in supply.
You know, Sam, we've seen how investors have been banking on a vaccine, but what about things that could derail this market rally? Could there be hiccups as we try to get the vaccine out to many people and distribute the vaccine? We also continue to have rising number of infections. So what could be the thing or things that derails the stock market rally?
Well, I think that if we end up with having much tighter lockdown scenarios across the country, where we do find that there is more problems in terms of employment, in terms of paying rent, as well as mortgages, et cetera, and we end up with a softer than expected first quarter in terms of economic growth, that could be a problem. If we also see weakening earnings growth expectations for the first half of 2021, that could be a concern. Or if we find that people are just not willing to take the vaccine, they're waiting for the next person to try it out first to see how well they respond. All of those factors together could affect timing, which could then affect share prices.
I'd love to get your thoughts on retail because as we see the numbers come in from the weekend, Black Friday was a complete bust for foot traffic, down more than 50% at brick and mortar. Online spending, though, surging 22% to a record high. And then, of course, you have Cyber Monday today. And by all indications, things are going gangbusters there. What's your outlook for retail stocks? Do investors need to be very picky here if they're going to wade into those waters?
Yes, I think so. Expectations are that we could see a 15% increase in Cyber Monday online traffic versus 2019. So that would be a very strong report, but it would really only be benefiting companies like Amazon, like Walmart, like Best Buy, whereas you'd be wanting to remain staying away at arm's length from companies like Nordstrom, Penny's, like Macy's. So those brick and mortar stores, or those that have really not embraced the new technologies, those are the ones you would want to avoid. Whereas those that have dived into the new e-commerce space are likely to do fairly well.
So again, to recap what we said at the top of this interview, Sam, you think that a possible Santa Claus rally is in jeopardy right now on Wall Street?
Or if it's not in jeopardy, then I think that it just ends up being weaker than expected. History says, we've had such a nice run in the month of November. We've also had 4 simultaneous new highs. So the market might be getting a little tired. And so as the Stock Traders Almanac says, the only free lunch on Wall Street is the mid-December low going into the end of January high. So maybe we do start off December on a slow footing and then end up seeing an improvement as the month progresses.
All right, Sam Stovall, Chief Investment Strategist at CFRA. Always good to see you.
Thanks, Alexis. Good to see you.
Coming up, the Points Guy joins us to talk travel during the pandemic. Number of Americans traveled over the Thanksgiving holiday despite advice from the CDC. Here to talk about travel and the outlook for the rest of the year is Brian Kelly, the Points Guy, founder and CEO. Brian, always good to see you. So I understand that travel hit a pandemic high over the weekend despite all of the warnings to stay put. How many people actually took to the skies?
Well, I was actually one of them. I flew yesterday. There were just under 1.1 million passengers screened by the TSA. That's up from our low of 80,000 in April. So definitely not like last year. We were still at about 40% of last year's levels, but a lot more people traveled yesterday and this whole holiday week than I think a lot of people anticipated.
Do you think this is a precursor for the Christmas holiday? Might we see even more people travel, despite what the CDC may tell us all?
You know, it's really up in the air. You know, trends that I've been seeing are people actually leaving the country. With the cases rising like crazy in the U.S. This year it's been a lot of domestic travel, but I've been hearing from a lot of people who are going to hit up the Caribbean this holiday season. Countries where testing is required to enter and their rates are much lower. I mean, I personally feel more comfortable traveling internationally than I do around the U.S. But there's still a lot of things up in the air.
That's interesting that you would say that, because my first thought was, wait a minute, that's a longer flight. I'm in this enclosed area for a longer amount of time with a bunch of strangers. Are you seeing that more people are booking these international flights when they are deciding to fly versus staying domestic?
Well, domestic is still where most of the growth is. Americans still can't visit most countries in the world, including most of Asia and Europe. But I do see people planning, Mexico and the Caribbean. The thing I think most people realize, I mean, it's not actually, and even the CDC's recommendation to not travel for the Thanksgiving holiday was more around preventing gatherings in people's homes without masks where the virus transmits. Traveling on planes is by and large, everything has a risk to it. There's no 100% safe way to avoid the virus, every time you leave your home. But, the filtration systems, the airlines are maniacal about mask enforcement. In the airports, things can get crowded, but what I recommend to people, just don't eat in an airport. Minimize the amount of time you have your mask down. But in general, the act of travel itself is not what the CDC is concerned about. It's getting people together in large places where masks are not being worn.
We know we keep talking about that vaccine being a game changer. It's going to allow us to go back to normal or something like normal. But what does the vaccine really mean for the travel industry? Because that could still be months and months away before there's real, widespread distribution. So what happens during that time period for the airlines, for the cruise lines? How can they safely get us from point A to point B?
Well, it's all about testing. United Airlines has a new program on some London flights where everyone on board has to take a rapid test that day. And they're trialing these things to get around these 2-week-long quarantines, which effectively crush all tourism and business travel. So while we wait for the vaccine to be widely distributed, it'll probably be a year before most people in the US have it. I do actually think we will have vaccine passports. I have a yellow fever vaccine in my passport. So whenever I go to certain countries in Africa, I have to show it to get in. I anticipate countries that have done a really good job at minimizing the virus, like Australia and New Zealand, they're going to require that to enter, because as we know with COVID, it spreads like wildfire. So I think in the interim, hopefully we improve testing so that when you get on a cruise ship or a plane, you have at least some sense of security, that they're taking efforts to minimize the risk of transmission.
Talk to me more about this vaccine passport, meaning that you're going to have to show proof that you've been vaccinated, and you'll sort of get a stamp of approval before you walk on the cruise ship or the plane.
Indeed. Yeah. I mean, today, getting into countries, it's kind of based on faith. You could print out, there's reports of people printing fake tests showing to get into a country. There's no one system that says that this test is actually accurate or it's for this person. So in the future, I see, there's technology. I know Australia is working on this now, where you have to have a verified vaccination in order to enter. So I anticipate some tech innovation around that, where people will have to have that before going to a majority of countries until most of the world is back.
To the airlines for a minute. A lot of them were keeping that middle seat empty because they were trying to social distance. But now with more people flying, are more and more airlines getting rid of that middle seat? And how are they going to still be able to keep us socially distant?
So Delta is the leader in this space. They've committed to blocking middle seats and pretty much half of first class through March of 2021. Alaska is doing it through early January. Southwest and JetBlue did it through Thanksgiving, but now as of early December, they're rolling that back. But American and United have been booking planes full for a while. So for consumers watching, if you are going to travel, I highly recommend, where possible, fly Delta or Alaska, because you will get that extra space on board.
And lastly, I just want to touch on cruise lines for a moment. What do you see there in terms of them coming back online? And do you think when you look at the travel industry, will cruises be the last thing to come back?
Yeah, cruises have been hit hard. At the Points Guy, we sent our cruise reporter, Gene Sloan, on the first Caribbean cruise. It was a small ship, the Sea Dream. Everyone had to get rapid tested before, and still there was a breakout on board where nearly 10% of people ended up getting COVID. Granted, only 7 people on a small boat. But the cruise industry has a lot more to solve for. You're on a cruise ship for a longer amount of time. In general, we've seen with norovirus, germs spread quickly on cruise ships. So they really need to get the testing and the cleaning and processes down. There have been some successful cruises out there, but it's probably going to be towards the latter half of 2021 before I see a real cruising comeback.
All right, the Points Guy, Brian Kelly, good to see you. Thanks for being with us.
For having me.
Straight ahead, we're going to speak with Randy Weingarten, president of the American Federation of Teachers, about the state of our schools during this pandemic. We'll be right back. Welcome back to Yahoo Finance Live. In an about-face, New York City Mayor Bill de Blasio announced this week he will reopen elementary schools and reduce hybrid learning, letting some kids attend school in person 5 days a week. There is no timetable, by the way, on when New York City middle and high schools will reopen. Joining us now is Randy Weingarten, president of the American Federation of Teachers, and Yahoo Finance's Arthi Swaminathan. Good to have you both with us. Thank you. Randy, do you agree with Mayor de Blasio's decision to reopen New York City elementary schools the way he's planning to?
Yes. And what I think what was missed out of yesterday's decision was that it's built on 2 pillars. One is that Governor Cuomo really controls the tackling of COVID throughout the state. And he, like Governor Newsom, has this kind of regional approach now that actually really works. So Governor Cuomo has these yellow, orange, and red zones so that regionally in a community where your positivity rate is, what's happening in terms of community spread, because no school is an island. So there's a 3% regional rate now as opposed to a city rate. And that's important because Staten Island right now is way high. The community I live in, which is Inwood, is way high, but most of the places around the city are not. So it's that issue about, whether your community has exceeded 3%. And then the next piece is learning from what we've learned nationally, internationally, but particularly in terms of the New York City experience, younger kids and kids who are at risk really need schools. Hybrid education really doesn't work. And so ultimately, because about a third of the elementary school parents opted for in person, there's a way of programming schools so that there can be 4 or 5 days a week in person for elementary and for special needs kids. And that's a really good idea.
Randy, do your union members feel comfortable returning to the classroom right now? Or is there anything that they need to see before they do feel comfortable?
Well, that's a big question, and that depends on where we are. So, for example, what we learned because of the work that the UFT did in New York City is that the suite of safeguards that were negotiated, from masks to physical distancing, to ventilation, to electrostatic cleaning and testing, really worked. That needs to be a non-negotiable everywhere. And so what you see is that you saw when community spread was low, very little spread in schools. That gives people confidence that that schools, particularly for elementary school kids, can reopen. But if you actually go to Chicago or to a Philadelphia, where the ventilation systems in schools are terrible, people would look at you and say, how can you open up without having good ventilation and without having the resources? We need to have the safety protocols and the resources, and then the New York City has become a proof point that it can work.
Randy, looking at some of the things that we learned from this process, there was a recent op-ed in the New York Times, that was in October, that Black parents prefer remote learning in some ways because they can keep an eye on their kids in case, there are racial hostilities. So, and also because of the COVID risk. So I'm wondering, how can we translate some of these learnings that we saw through virtual learning when we finally reopen schools?
So look, trust is really, 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 really important. And I was on a webinar earlier today when I said that about trust, and that I really blame Donald Trump for the failure of even trusting the science because of his out and out lies and denials. So if what we've seen is that the communities that have been most impacted by COVID have been Black and brown communities and indigenous communities. And, if you're a parent and you want to make sure that if you've had COVID in your family, if God forbid somebody has died, you're pretty skeptical about whether or not something can work. And so you have to have a proof point that it can work. And that's why the transparency around testing, and that's why these protocols are so important. But trust is earned, and we're going to need a new president who talks about the data in an honest way, and who tackles it in an honest way in order to create trust amongst parents whose families have been deeply affected by COVID. Having said that, we need to think about this as an iterative process, meaning let's make sure that we don't lose the summer. Let's have a voluntary summer school. Let's make sure we can wrap services around schools. There's about 8 different things that we need to do at the same time. It requires resources. It requires following the science. It requires leadership, and it requires tackling the COVID surge right now. And we're putting out that blueprint today in an op-ed. But I do think we will get parents and educators to come around if we follow the science with fidelity, and people still see, after the surge, low rates, particularly for elementary school kids and kids that need, or kids, special needs kids.
Randy, you mentioned the new president. Top Democrats see you as a candidate for Secretary of Education in President-elect Biden's administration. Is that something you would be interested in?
Look, first off, I'm interested in doing my job. I'm interested in reopening schools safely for kids, making sure that teachers don't have the tremendous heartburn and really, I mean, they've been working in a Herculean way, but in a it's not sustainable. And they are really, really, really at a breaking point. So I'm interested in doing the work I can do for children, for families, for communities, for creating a middle class, for expanding a middle class. And frankly, I'm honored to do it as the president of the AFT. If you're me and who has worked your entire life to help families, help educators, and help lift up a middle class, obviously it's an honor to be mentioned, but it's not something that I ever sought. It's something that it's just an honor to be mentioned. So, we'll see what happens.
Randy, if the stars align and this happens and you become the chief education person there in the administration, what would be the first thing you would do during this pandemic?
Okay, let me just make sure it's clear. I am not running for this job. I love the job that I am in. So if this is what I would do, whether I was Secretary of Education or whether I was the president of the teachers union, we need to make sure that small businesses continue and are not hurt by this pandemic. We need to make sure that schools continue and are not hurt by this pandemic. We need to make sure that states are not hurt by this pandemic, that the unemployed are not hurt by this pandemic, that people can get fed, that people can actually pay their rent. So number one, we need to actually have a stimulus. Number two, we need to make sure that we can reopen schools safely for the second semester and have a really big voluntary summer plan and program. Number three, we need to make sure that this cliff that is happening for student loans on December 31st, that cliff is dealt with, because so many kids and young adults who have had their student loans deferred for a while, that ends on December 31st. Another kind of sabotage, unfortunately, that the Trump administration has done. So immediately, we need to help create as normal a process as possible for parents and for educators, and we need to actually create some credibility, transparency, and deal with the student loan issues for young adults. Those are the things you need to do immediately. Long term, there's a whole lot of things we need to do to make sure that every single student in America has a chance to thrive. And that requires public schools that are well funded, that actually are addressing the needs of kids and actually really lifting up their passions.
Randy, that's a long list of things, and I'm sure that the list will get even longer. But let me ask you this question. I think I'm very curious to hear your answer. What legacy does Betsy DeVos leave behind, and how much of that reversing that will be part of this plan?
So look, Betsy DeVos never cared about public education that 90% of kids go to. She basically cared about undermining it and dismantling it and destabilizing it. And so, she leaves a legacy of basically just undermining what people tried to do as educators. She's made a mess of the student loan program. What she inherited was not fabulous, but she made a mess of it. Ask anyone who has tried to get public service loan forgiveness or is trying to figure out what their repayment plan is. She didn't care about the civil rights of kids. She just cared ideologically to have private schools. Now, I'm a religious person. My wife is a rabbi. I actually go to religious services by Zoom almost every week these days. This is not about, she tried to pit religion versus everything else. And there's a way in which we have to actually lift up all the values of Americans and of America. And that's part of what our schools do. It's a place where you have diversity, where you bring people together, where you bring American values together. And unfortunately, she never cared about that. And so I don't know whether it was her disdain for those values or whether it was incompetence, but she created quite a mess.
Randy, real quick in the 30 seconds I have left, do you want teachers to be among the first groups to get a vaccine when it is indeed available?
I do, but I think it's really important that healthcare workers have the first priority. Our healthcare workers right now are absolutely exhausted. They've been the front lines of COVID for 8 months, and they're facing a surge right now. So first and foremost have to be healthcare, and then ultimately there's a whole bunch of other essentials that we need, including schooling. And so that's why I think that that educators should be part of that prioritization after healthcare. We have to stop saying something is a priority and not acting like it's a priority. If we say it's a priority, we got to act like it's a priority, and that's where schooling comes in.
All right, Randy Weingarten, President of the American Federation of Teachers, thank you and good luck to you and your members.
Thank you.
Coming up, General Motors will no longer take a stake in Nikola. Details straight ahead. Moments ago, Jared Blickery joins us now for a recap. And Jared, I know that OPEC is holding off its decision on its output cut until at least tomorrow.
OPEC meeting today, and tomorrow is going to be OPEC Plus. That's with Russia and at least 9 other nations. Now, the headline coming out of today was pretty interesting. Saudi Arabia may be stepping down as one of the co-chairs of the JMCC. That's the Joint Ministerial Monitoring Committee. And that is a key faction that keeps the OPEC Plus alliance with Russia. And Russia holds the other chair alive. But analysts are saying this may be a move so that Saudi Arabia doesn't want the rest of OPEC and OPEC Plus to put too much pressure on Russia and Iraq. Suffice to say, it's a very, very dicey situation. Despite that, crude oil was only down 0.4%, settling at $45.34. And if you take a look at the price action, rather muted considering everything that's going on. And you look at what crude has done over the last 3 months. In the month of November alone, had a very nice run. And we're going to close out as one of the best months since, I believe, April. And that's right after that huge plunge to negative $40 per barrel. And that's kind of what OPEC Plus and Saudi Arabia are hoping to avoid once again. They don't want to spook the oil market, so they're taking it very carefully one day at a time. And so we'll have to see what comes of the meeting tomorrow. So that bottom line is it's still possible to get a deal for the production extension of those production cuts, but a little bit less certain today.
All right, thanks a lot, Jared. All right, news involving GM right now. It intends to provide Nikola with fuel cell technology, but it has nixed plans to take a stake in the startup. For more on this now, we are joined by Yahoo Finance's Emily McCormick. And I guess we saw this one coming, right? We had been talking about this for weeks, that perhaps GM was going to pull out.
That's right, Alexis. And taking a look at what General Motors had unveiled this morning, the company announcing a slimmed down agreement with Nikola. Now, most importantly, this new pact will not include GM taking an equity stake in Nikola, and it will not involve GM helping to manufacture Nikola's battery-powered pickup trucks. So to back up a little bit, back in early September, we did have GM and Nikola each announcing that they were closing in on a strategic partnership that would have involved GM taking an 11% equity stake in Nikola, as well as helping to manufacture its Badger electric truck. Now, later that month, and before the deal actually closed, the short seller Hindenburg released a report accusing Nikola and its founder, Trevor Milton, of longstanding fraud and deception of its investors. Now, Milton did resign as chair of Nikola's board back in September, but the Hindenburg report really created a major cloud of doubt around Nikola, and GM began to reevaluate that partnership. Now, GM also just earlier this month announced that it would be increasing its investment in its own electric vehicles over the next 5 years to $27 billion. So the company had been signaling that it would be moving forward on its own rather than through a partnership to develop more EV models. Now, under terms of the newly announced deal with Nikola from this morning, GM is going to be allowing Nikola to use its hydrotech or hydrogen fuel cell technology in its semi-trucks. But again, this is a massively scaled back agreement versus what had been anticipated earlier on in September. And we are seeing Nikola's stock sell off as a result of that. Now, taking a look at Wall Street's reaction to this morning, we did have analyst Dan Ives of Wedbush relaying that disappointment in a note this morning, saying, quote, "The signing of GM as a partner is a positive, but ultimately no ownership equity stake in Nikola, and the billions of R&D potentially off the table is a major negative blow to the Nikola story. This went from a game changer deal from Nikola to a good supply partnership, but nothing to write home about." Now, Alexis, we are seeing shares of Nikola lower in afternoon trading. Those are down by more than 26%.
All right, thanks a lot, Emily. Earlier this year, many of us had never even heard of Zoom video, but now 9 months into the pandemic, and the video conferencing company is a part of many of our everyday lives as millions of us work and school from home. Our tech editor, Dan Howley, is here now with a preview of earnings after today's closing bell. And Dan, I know quarterly sales in the prior quarter were up something like 350%. So that's quite the act to follow. Do you think that they're going to have more good news to share?
Sorry, I was on mute again. That's the hope really for the company. Basically, what investors are looking at is a hope that they'll have $693 million in revenue for this fiscal Q3 2021. They're also looking at 75 cents earnings per share. And you know what you have to look at is the prior year, right? So the prior year had $167 million in the same quarter. And then as far as earnings per share goes, it was just 9 cents. So this is massive, explosive growth coming out of this company. You could look at the share price. At the start of the year, it was $71.90. As of today, midday, it was $4.68. That's a 552% increase in the stock price alone. And when you look at the numbers of actual subscribers, Zoom does this weird thing where they don't actually talk about individual subscribers. It's based on the number of customers with 10 or more employees, or customers with $100,000 or more revenue per year generated per year. So as far as those individuals, the companies with 10 or more employees, the company had originally had 74,100 last year. Now they have 370,000. So it's been absolutely ridiculous. But really what I think a lot of investors and analysts are going to be looking at is what happens when we do have a vaccine readily available? What happens when we do start to go back to some sense of normalcy? Will there be people still using Zoom as much? And, you know, Mizuho Securities has already come out and said, look, they continue to believe in Zoom. They think that the long-term play is there. And those subscribers for that 12-month contract, the $100,000 a year, those are going to be the companies that really stick around. And so this could be continued to be rather the kind of video platform of choice for everybody that, you know, has managed to stick with it this pandemic. But, you know, I mean, there are still big players out there like Microsoft and Google who are going to try to take away from Zoom's market share.
You bet. And we'll have to see if this really does all stick post-pandemic. Dan Howley, I know you're going to be all over those Zoom earnings after the bell. Thanks for being with us. Up next, the new home sanitizing system that promises to kill the spread of COVID-19. We've got details for you right after this. Is a new home sanitizing system on your holiday wish list this year? Well, my next guest thinks it should be. Carrie Martz is founder and CEO of Clean Light Labs, which has a patented home sanitizing system that promises to kill the spread of COVID-19 in our homes. Carrie, it is good to have you here. So I am intrigued by this product you call Puritize. I know it works with ultraviolet light, but walk us through exactly how this does work.
Well, first of all, thank you for allowing us the time to talk about something that's so important, which is a way that we've found that will hopefully stop the spread of germs that certainly cause COVID-19 as well as the flu. But we work with a patented advanced refraction technology, and it uses UVC light, which is in fact embedded in a waffle-like grid system, which is what we patented. And that particular light then has maximum bounce inside our sanitization system. With that light, you end up then being able to get into all the cracks and crevices, nooks and crannies of products that we touch every day and where germs hide and thrive. So the light literally bounces around in our sanitization system, and then within 10 minutes, it's more than 99.9% germ-free.
Wow, so is this we're seeing pictures of this right now. Is this a wand, or does it stay in sort of the case as you use it?
No, absolutely, it is not a wand. We have taken the guesswork out of how long you should expose items by creating an actual system. In fact, I have it here in my little workroom. So what you can see is it's a very large capacity home sanitization system. You can put anything in there, multiple items at one time. They're all divided up. You can put your phone in there. It has USB chargers. And so literally you can charge your phone, put the other most important things that you touch every day, like a remote control and your car keys, right in. And all you have to do is not slam it on your fingers, but literally just close the lid, the light comes on, and within 10 minutes,
everything inside is germ-free. And that's the key and the most important part of this, is that it's not necessarily that you're spreading germs based on what others necessarily are around you and you come in contact with. It's the things that you touch, like the grocery store carts, and then you touch your face or something. This way, you're making sure that everything from your mask to your car keys, remote controls, phones is sanitized before you put it up near your face or any other part of your body.
So I know that Northeast or Northern Arizona University has these devices. They're using them on campus. But for the average person, I mean, how much does this cost? And also, are you in any major retailers right now?
Well, first of all, I'd like to say that Northern Arizona University, we're so excited that they, in fact, did scientifically prove we are the first home sanitization system on the market for customers today. We sell for $199 on our website, puretize.com. But we were proven to kill any type of COVID-19 in particular, that is on products that you touch. So this isn't guesswork like a wand or something else, as you mentioned. And the way NAU's using it is simply that if someone's diagnosed in one of the clinics, they give them a machine, and they can take that machine home with them so anyone around can also sanitize the products that they use. We do have this. In fact, all of our customers are consumers, moms, people in nursing homes, life care centers. And we currently have them in a resort here in Arizona, a sanctuary resort, for their guests to feel more comfortable when they're getting back into travel. So yes, it is for homes. We are currently expecting by the end of the week, maybe early next week, to be on Amazon. And we're in discussions with large, very large retailers. So we should be on the shelves in large retailers by first quarter of next year. This is for the masses. It's been used in hospitals for years. In fact, one of our local hospitals, Cancer Treatment Centers of America, are putting them in so that when their patients are there, they can put their car keys, their phones, their sunglasses in while they're waiting for their treatments.
Carrie, can you share with us any of the retailers you're talking to right now? Where might we see your device in the new year?
I can't tell you that yet. But I can tell you they're big.
All
and
right,
they tie
you'll have to come back and tell us.
So does that help?
Once you have the deal, you'll have to come back and tell us. Carrie Martz, founder and CEO of Clean Light Labs. Thanks for being with us.
Thank you.
All right, Airbnb and DoorDash gear up for their Wall Street debut. We have got details for you right after the break. expected to disclose higher than expected valuation ranges for their initial public offerings when they start their road shows this week. Yahoo Finance's Sabine Marcellus is here now with more details. We've all been waiting for these two to go public, Sabine.
That's right, Alexis. So DoorDash and Airbnb are in a race to IPO before the end of the year. And they're both trying to have valuations at the high end of the scale. So what we're seeing is that for Airbnb, they're reportedly targeting a range of between 30 to 33 billion. Now, it was valued at 18 billion back in April. Now, DoorDash is reportedly planning for a valuation as high as 32 billion. And what the company is planning to do is to sell 33 million shares at 75 to 85 bucks a share. So that would give it that high evaluation of 32 billion. Now, these two companies have fared very differently during the pandemic. So Airbnb obviously has faced the travel crisis because of all the shutdowns. They've had to face a plunge in bookings. Meanwhile, DoorDash has their revenue more than tripled in the first 9 months of this year as Americans really embraced food delivery and also had to deal with a lot of their favorite restaurants actually being shut down and restricted. So what we're seeing is that both these companies are really trying to get those IPOs in shape, but at the high end of the valuation scale.
All right, thanks so much for those details, Sabine. And do stay with us. Much more of Yahoo Finance Live to come. And Adam Shapiro and Jen Rogers are going to be taking you through the final hour of trading. Getting another check of the markets, we just turned mixed here. The Dow is down more than 340 points, but we have got the Nasdaq Composite now in the green by about 3 points, and the S&P 500 up now more than 12 points at the moment, or actually almost 20 points. So the Dow still on track for its best monthly gain since 1987. Thanks so much for being with us. I'm Alexis Christoforous. More to come right after this.
Shares of Salesforce have been falling today on news that their deal to buy Slack Technologies will be announced tomorrow. That's according to CNBC. Slack's market cap, it exceeds $24 billion, making this potential acquisition one of the most expensive this year. Shares of Moderna jumped more than 16% during midday trading on news that it plans to ask U.S. and European regulators to allow emergency use of its COVID-19 vaccine. The news came as New York City announced it would return to in-school classes next week.
an NYU professor of marketing and author of Post-Corona, From Crisis to Opportunity. Scott Galloway, he's going to join us in just a few minutes to discuss his new book and which companies and industries will rise and fall post-pandemic. We're in the last hour of trading. I'm Adam Shapiro.
And I'm Jen Rogers. That darn Professor Galloway distracted me all day, Adam, reading that book instead of paying that much attention to the market. But I'm going to tell you a couple big stories that did catch my attention, and that is a big deal. We've got IHS Markit and S&P Global. It is our biggest M&A deal of 2020. It's a big financial data deal. S&P Global agreeing to buy an all-stock deal, $44 billion worth. That is absolutely nothing to sneeze at. We know how important data is right now. And of course, those stocks heading in opposite directions of the Dow and the S&P today. And you know what, Adam, don't look now, but Bitcoin, it's a new record high, previous record high, December 2017, and this new record. This is based on most data sources, so some people say we have to wait until it crosses 20,000, but Dan Roberts has been writing about this for us, and he says this is a new record, so watch out. Bitcoin's back here, up 174% in 2020.
Keep an eye on Zoom too, by the way, Jen, because shares of Zoom right now are trading up more, almost 2%. We're going to get their earnings report. This is Zoom Video Communications. We're going to get their earnings report after the closing bell. Year to date, this stock is up more than 600%. Of course, it's on the pandemic, work from home phenom. But shares have actually fallen, not a lot when you consider the gain, about 13% since the first news about potential successful COVID-19 vaccines. That was back on November 9th. Second quarter total revenue was $663.5 million. That was up 355% year over year. We will see if that continues. The number of customers contributing more than $100,000 in revenue, that was up 112% year over year. These are some of the metrics they're going to have to compete against as they post their Q3 earnings. Then we're watching shares of Nikola. They are falling once again. They fell about 25% and are now down about 26%. This on the announcement that GM will no longer take a $2 billion equity stake in the EV hybrid, you might call them, maker. The deal hit the skids when Hindenburg Research raised questions recently about the authenticity of Nikola's technology and also the claims about its financial future. Nikola announced it has entered into a new supply deal with General Motors. They're going to use General Motors fuel technology in Nikola trucks, which are now still in the prototype development stage. With all of this in the rearview mirror, keep in mind that year to date, shares of Nikola are up more than 100%. But it's COVID-19 and the pandemic that we are watching, because how this changes our world and everybody else is going to be very key. In a minute, we're going to start talking with Scott Galloway about that. But Jen, when we talk about COVID-19 and the pandemic, it's changed the way all of us work and the way all of us live, and it doesn't look like we're going to be going back.
It does not look like we're going to be going back. But one of the interesting things that I think Professor Galloway is going to be chiming in on is there's this whole idea, like, have we pivoted and gone somewhere else that we weren't going to go in business, in the way that we live our lives and the way that we go to school? Or have we just accelerated? Did we just skip a couple months? Did we just skip a couple of years? And that's important because it really does put you on two different trajectories to try and figure this out. And in terms of being a long-term investor, you need to figure out where those trends are. We're going to be talking, I'm sure, about the big four in here as well. He talks a lot about that. And I just wanted to, also bring up, as you were talking about Nikola there, Adam, that I can barely say Nikola without talking about Tesla. And Tesla shares, we could be getting some news, of course. They have just been gaining speed all during the COVID pandemic here. They were pretty much very well positioned with that China plant opening at the right time, that as they get added to the actual S&P, how that's going to happen. And we should be getting some news on that possibly later after the bell today or tomorrow. How many days are they going to need to take to digest this behemoth of an electric car company?
Jen, when we get to Scott Galloway, one of the things he's going to talk about is the self-fulfilling prophecy that happens with a lot of tech companies. For instance, we keep talking about, for instance, Tesla. And the more we talk about Tesla, and there are lots of reasons people love Tesla, and there are a lot of reasons that stock has been, the word is not, I don't think it's in the dictionary yet, but ginormous gains. There are a lot of reasons why that stock is doing very well. And we're going to get input from Galloway on that. But as they get ready to go into the S&P 500, keep in mind, they're going to have a market cap that puts them in the top 10. And they still haven't yet sold 500,000 cars a year, but that's how much faith people have in this company going forward. Before we go to commercial break, we're not only going to be talking with Scott Galloway about COVID and all of these issues, but later on, we're going to have a discussion with the CEO of Moderna, going to be on talking about their request to have the emergency use authorization for their vaccine. This is key because Angelique Kemlani has been following all of this. And when we were coming into the show, Jen, I talked about the fact that stock has, in some cases, different stocks, for instance, Zoom, they gained from the pandemic, but then they lost because of the announcement that there's going to be a vaccine. And in some cases, people will be returning, if you're lucky, to the office. So we're going to go to break. We got Scott Galloway on deck. And when we come back, we're going to check in with NYU professor and author Scott Galloway about the future.
Welcome back to Yahoo Finance Live. Joining us now is Scott Galloway, NYU professor of marketing and author of Post-Corona, From Crisis to Opportunity. I don't know if you heard me earlier, but I was saying you really threw a wrench in my day by having me read this book early. I guess I was going to say it's easy, but that makes it sound simple. But it's kind of like a page turner, and it's what we talk about all the time.
Oh, thanks.
From crisis to opportunity, though, what I get, like sometimes I'm reading it and I think, this is okay. Like it's going to turn out all right. We have the potential here to actually be better than we were before as a country, as a human race. And then I think, but wait, are we actually going to be able to take advantage of this opportunity? Are you optimistic, given, let's just talk about America, how divided we are, income inequality, that we will be able to seize this opportunity for change here?
I think that's the correct question. And I got to be honest, I'm a glass half empty kind of guy. And I would argue that we probably would have been better off the last 6 or 12 months listening more to the pessimists and less to the optimists. I think our optimism as a nation and our view of exceptionalism has unfortunately morphed into an arrogance that's been a comorbidity. We've had more time to prepare for this. We spend more money on healthcare. We think of ourselves as being innovative. And we sit here today with record hospitalizations and 5% of the world's population and 25% of the infections and deaths. The Chinese word for crisis is risk and also juncture. It tries to combine those two meanings. And I do believe there are huge silver linings coming out of this pandemic, but it's not a default setting. America isn't what it is. It's what we make of it. And I would argue that we will look back on this moment either as having been, what Vonnegut said, that one step in the wrong direction, a step back is a right step, or this could be the signal or the juncture where we really turn down. I think it's up to us. There's some huge silver linings, but a default position that without sacrifice, without leadership, that everything's going to turn out right. So far, I would argue the trajectory here is a negative one.
You actually talk about several different issues, and I was, before we introduced you, talking about one of the things, kind of the self-fulfilling prophecy. When we talk about the weak get stronger, I think this is a portion of the book, or rather the strong get stronger and the weak get weaker. Big tech got stronger, and we use Tesla as the example. We keep talking about how wonderful Tesla is. That reinforces the belief that Tesla is wonderful. People buy the stock, their borrowing costs are lower, and they can keep going forward. Are we setting ourselves up for a big fall?
Well, there's just examples everywhere. It took Apple 42 years to get to $1 trillion, and then it took them 5 months to get to $2 trillion. Tesla, standing here in March, was the 4th most valuable automobile company. Now they're the most valuable and worth more than 2, 3, and 4, Daimler, Toyota, and Volkswagen combined. And we don't like to say this out loud, but I feel as if this pandemic has largely been invented for taking the top 10% into the top 1% and taking the rest of the 90% downward. There was a study by the Robinhood Foundation that came out today that said 32% of people in New York have been forced to go to a food bank because of food insecurity since the beginning of the pandemic. So think about this, Adam. You're just as likely in New York State right now, what we think of as the capital or the state that sort of embodies America. You're just as likely to run into someone on the street who's had to go to a food bank than someone who has a college degree. So while we have flipped the script, if you will, capitalism is meant to be full body contact violence and competition to unleash incredible prosperity such that we can be more empathetic and loving with our brothers and sisters across the nation. And it feels as if our collective efforts right now are to be more empathetic and loving with companies than with people. We've figured out a way to keep restaurants open. We've figured out a way to bail out small businesses and flatten the curve for rich people, but we haven't figured out a way to keep schools open. I mean, think about this. The two largest asset classes in America, real estate and the stock market, are at all-time highs. And by the way, 80% of those assets by value are owned by the top 10%. They're at all-time highs, record prosperity, record savings rates. And at the same time, we have food insecurity. 1 in 5 households with kids don't have food insecurity. A third of Americans are worried they can't pay their rent. This is the best of times and the worst of times. We are barreling towards a nation with 3 million lords being served by 350 million serfs. We have decided to protect corporations, not people. Capitalism is literally collapsing on itself unless it rebuilds that pillar of empathy supporting capitalism.
What responsibility do you think the four have? Amazon, Apple, Facebook, and Google, specifically as it goes to the issues you've been talking about and the inequality that we're seeing laid bare. Let's just take Amazon as an example. We just got through Black Friday. It's Cyber Monday. They're absolutely crushing it on sales. They've hired hundreds of thousands, more than 400,000 people since the pandemic began. Most of those people, though, are warehouse workers making $15 an hour. What responsibility do companies, those companies at the very top of the food chain, you think have for not just where we've been, but really where we're going to affect change?
Yes, that's a meaningful question. So it struck me today, and I don't think the two are correlated. I just meant to, I want to use this to give your viewers and listeners a sense of proportion. In World War II, we were losing a third of the people that we are losing right now. And if you look at how many people Amazon is hiring every day, they're hiring about 1,400 people a day. That's about how many people each day are dying in America. And I just thought that was just sort of ironic when we talk about this K-shaped recovery. Now, to your question around the responsibility these companies have, we'd like to think that these people have a code and that they bring that code to work and that they recognize the incredible blessings that America brings them and that they want to prevent a tragedy of commons. They want to pay their people well. I applaud Amazon for raising their minimum wage to $15 an hour. There's a lot to like about Amazon, in my view, in terms of what they've done with their employment base. They also have gamified municipalities such that we can transfer wealth from municipal fire, police, and school districts to the shareholders of Amazon through this ridiculous HQ2. They have also put small businesses out of business and prematurely euthanized big businesses by owning the rails and anti-competitive behavior and dumping products at prices through their access to cheap capital no other company can compete with. However, I don't think it's smart. I don't think it's a good strategy to wait on the better angels of billionaires. We can't wait on the generosity and code and personal conduct and character of CEOs. To a certain extent, they're doing their job. It's we as citizens who are not doing ours. Specifically, we're not electing public officials that apply the same scrutiny around antitrust, around anti-competitive behavior, around externalities when teens are getting depressed. We don't seem to want to hold these companies accountable or to the same standards we've held companies in the past. So if there's a culprit here, it's voters who aren't electing leaders that hold these companies to the same standards. If we're just going to wait for the better angels of Jeff Bezos and Mark Zuckerberg to show up, that is a bad strategy.
Scott, I'm curious, when you talk about capitalism on the way up, socialism on the way down, when you talk, it's the voters who are bringing this upon ourselves. Doesn't sound like that's going to change. So where are we headed? Sounds like we're going to be headed to the 3 million you talk about, bred in circuses like the old Roman Empire, to keep the 330 million at bay.
Well, I do think there's reasons for optimism. I think the Biden-Harris, or the shadow of the Biden-Harris administration, has fomented or catalyzed more positive change at Facebook and Twitter than in the last 10 years. I don't think it's an accident that all of a sudden Facebook and Twitter have found the technology and the will to start labeling misinformation around COVID-19 as misinformation. We've seen more of it in the last 8 weeks than we've seen in the last 8 years, and it's because the analogy I would use is you're seniors in high school and you've thrown the mother of all rager parties, and you get a text message on Sunday morning that your parents are coming home early and you're trying to clean up the house. There is the mother of all cleaning up their houses going on right now. Janet Yellen's appointment is very encouraging. A more, I don't want to call it activists, but more appointees that seem to believe in bilateral, multilateral cooperation, who seem to believe that regulation plays an important role, that will likely fund the CDC to the extent it warrants. $700 billion to the military, $7 billion to CDC. We're losing people at 3 times the velocity of World War II. It just seems like our priorities are a bit messed up here. And we have big tech, which is basically, in my view, overrun Washington. So I am hopeful. There's some real silver linings here, but it's up to us to embrace those and demand more of our leaders and demand accountability and realize that these companies are not people. We should not be protecting them. They're not concerned with the condition of our soul. They're not going to take care of us when we get older. That without structural change at a regulatory level, without a national complexion of sacrifice, patriotism used to mean sacrifice. Now it means stimulus. We planted victory gardens. We reached into our pockets. We didn't have our hand out. The notion that we would find wearing a mask to Walmart somehow tyrannical. My mother in 1941 Britain slept in a makeshift bomb shelter, and they passed out gas masks in the shape of Disney characters so the kids would put them on. And the idea that someone would say that this imposed on their individual freedom is just unthinkable. So we have a lot of soul searching to do here, but there's nothing wrong with America that can't be fixed with what's right with America. And I'm hopeful that a lot of those changes start in January.
Scott, I've got to start wrapping up with you. But when you talk about your mother, I was thinking of my grandmother, Hazel, who drove a truck, volunteer during World War II in Portland, Maine, and the people of Portland are still terrified and stay off the roads. But I have to ask you, as I write up this discussion, we invite you into the program because you're someone people do listen to. What's the key message then? Because looking at the book, and many of the things you say sound very pessimistic, and yet you say there's reason for hope. So what's my headline? What's the key message?
Capitalism fails unless it rests on a foundation of empathy and love. We have full body contact violence at the corporate level. We let businesses go out of business. We let people get fired such that Apple can emerge and put Sun Microsystems out of business. And then we take that incredible prosperity and we're more empathetic with people. We fund Social Security so we can take 38% of seniors who are in poverty down to 11%. We fund Head Start. We have flipped the script and we've decided that capitalism means being loving and empathetic to corporations and Darwinistic and harsh towards individuals. Unless we flip it back and start deciding that capitalism is in the agency of others and start letting corporations go out of business and being harsh on corporations and being more empathetic and generous with our citizens, capitalism, the greatest system of its kind, the greatest upward lubricant of the middle class in history, will collapse on itself. America isn't what it is. America is what we make of it. It is up to us, but it is time to go back to a system of America where capitalism rests on a pool of empathy.
Scott Galloway talking about industries maybe going under. We didn't even get to talk about higher education, which you're in, so we'll have to dive into that another time. It's a great read. The book is Post-Corona: From Crisis to Opportunity. Scott Galloway, thanks so much for joining us.
Thank you.
Coming up, we are talking more retail. We've supposedly had the biggest Black Friday. Now it's Cyber Monday. Rakuten's president on how those sales are tracking and what people are buying after this.
Welcome back to Yahoo Finance Live. There was a time when all we would talk about is Black Friday shopping and Cyber Monday shopping. And well, guess what? It's post-Thanksgiving. That's what we're going to do right now because Americans are shopping, but not like we've ever shopped before. Let's bring in Kristen Gall. She is Rakuten president, joining us now because we're seeing some trends that I hate the term the new normal. So let's just say here to stay and not going back. What's the biggest of those trends? And welcome to the program.
Thank you so much. Happy Cyber Monday to you both. It is indeed an unprecedented Cyber Monday. It could potentially be the biggest online shopping day that we've ever seen in our lives. There are some interesting trends that are happening that we've actually seen, trends that started in the beginning of COVID that are really continuing into this Cyber Monday. So the world of you being at home and the world of what you need at home was how consumers were shopping over the summer. And in terms of what that looks like right now, that looks like the same categories that have been trending up really all fall. So electronics are huge. We're seeing a huge, uptick in people buying laptops and AirPods. Gaming has been tremendous. Walmart keeps releasing inventory in Xboxes, and it nearly crashes their site every single time. Toys has had a double-digit upswing. Lego has had to actually throttle the traffic to their site because it's been so popular this year. And then in terms of apparel, we've seen a mixed bag in department stores and luxury retailers. And the people who are really winning are companies that are selling athleisure and sneakers. So the Nikes and the Adidas of the world, Lululemon, we're really seeing, the tastes of America are changing right now in terms of what they need. And we're seeing retailers respond to that. But the winners are really, it's the sort of more pandemic appropriate retailers.
So we keep hearing that, it's the biggest Cyber Monday and Black Friday, and like, obviously it is, right? This number gets bigger every year, and now we're in a pandemic and people aren't going shopping. So this number, of course, was always going to be big. What I'm trying to figure out and slice that a little bit more is, what is the marginal increase, do you think? I mean, like, look, if we didn't have the pandemic, we know this was already going to be the biggest online shopping day, because every year we keep adding. So what is the marginal increase you think that we're seeing?
I mean, I would say it's upwards of 50 to 70% in some cases. I think, based on what we would have forecast before, we would have probably ticked up Cyber Monday by about 20%. It's going to be significantly larger than that. And obviously we're still kind of in the middle of it. But in general, it's two things. It's people are still buying their gifts online, and the people who normally would have bought them in stores are buying them online as well. And then it's still our day-to-day necessities are being bought online also. So, pet companies, Petco, Chewy, all of those sort of pet-oriented retailers are also having a huge spike in traffic as well, because you still have your necessities that you need to buy. Marketplaces are still super important. So Target and Walmart, 100% winning. But it's the amalgamation of all of those things. Your necessities and your gifts are all being bought online that are really contributing.
Are you surprised by the fact that, I think you pointed out, there's been a surge in purchases of sneakers? You'd expect the electronics, but beauty supply stuff. It's not as if, guys on stream wear makeup, guys who walk the street wear makeup these days, but who's wearing makeup? Because no one's going to the office, right?
I mean, the interesting thing that we've seen is that we've seen an uptick in, things that you use to take care of yourself and, pampering yourself at home. You're not traveling, you're not going out to dinner. So, I know in, wartime England, sales of lipstick went up significantly. I kind of liken it to that, where it's like a little thing that you can do for yourself to make you feel better. We've seen a lot of beauty brands really, really doing very well. Brands like Glossier, who they were already swinging up in the market already, and they've had, double to triple digit increases. And then big retailers like Ulta and Sephora doing well too. So I do think there's this notion of pampering yourself, pampering the people that you're buying gifts for. It's something that you can do at home to make yourself feel a little bit better.
We wish you a happy Cyber Monday, and go shop. And we want to thank you for joining us, Kristen Gall, Rakuten president. Good to have you here. Coming up, why work at home and investments in technology are here to stay in the banking center after, by the way, there was a downgrade on banking today. Here's how you can trade it after this.
Welcome back to Yahoo Finance Live. We've got just about 30 minutes left in the trading session. I'm here with Adam Shapiro, and we are watching these markets lower today, giving back some of those November gains. Checking out the sector action, the ugliest by a mile has to be energy. XLE is off some 4% here. And in fact, we've only got one sector to the upside. That is tech by about 0.5%. Again, energy, though, off some 4%. Let's bring in Jared Blickery to find out what is happening there. Jared.
That's right, Jen. November gains for the energy sector turning into some November rain here today, but XLE is still on track for its second best month ever. Almost snapped that first spot, but sitting on some losses for today. So Chevron is down 4%, Exxon nearly 5%. Some of the majors taking it pretty hard. BP and ConocoPhillips down to over 6% each. Just looking at the price action in crude, a lot of this has to do with some consternation over OPEC plus. Now there's a OPEC plus meeting tomorrow, Tuesday. They are expected to issue a decision, but not as much progress was made today as was hoped in terms of pushing out those production cuts into possibly Q1 of next year. Nevertheless, crude is still up 22% month to date. And if you take a look at what's happened over the last 6 months, pretty interesting breakout here. So we'll have to see if this can hold, if the news is supportive tomorrow on OPEC plus. Well, I want to turn now to our Yahoo Finance premium investment idea of the day, and that is Wayfair, up 47% over the last 6 months, although it has been kind of consolidating over the last 3. But Argus Research is reiterating its buy call on it with a 360 price target. Some of their reasoning here, in case you don't know what Wayfair is, it is an e-commerce pure play that should continue to benefit from brick and mortar store closures and increased work from home arrangements, reflecting profitability initiatives that were underway before the pandemic and strong third quarter revenue. Wayfair reported adjusted EBITDA of $371 million in the third quarter. We are raising our 2020 estimate for adjusted EPS to $4.40 from $2.34, and our 2021 estimate as well to $2.70 from 90 cents. Guys?
All right, Jared Blicker with the very latest on the market, walking you through some of the names in the red. I've got one in the green today. That is IHS Market. It is a top performer in the S&P. It's up some 7%. Deal there in the space. S&P Global agreeing to buy IHS Market. It's a $44 billion deal. If it goes through, of course, there could be some regulatory hiccups. So both stocks are higher here, even though S&P is paying a premium, and it's just a sign of some of the consolidation that we're seeing in financial data and the capital market space. And I want to bring in our next guest to talk about some of the overall trends and changes, especially in capital markets. And that's Martin Boyd. He's with FIS Capital Markets, the president there. And you all noted that companies are looking to reduce their physical footprint. And that's something we're seeing actually in this deal. They're saying that they're going to have annual cost savings of approximately $480 million. And a lot of that is their real estate footprint. Is that what, are you seeing that across the board, even for companies that aren't involved in any M&A?
Yes, Jen. Hi, nice to see you and Adam again. Yes, we are seeing this shift, and I think one of the interesting results that we had out of the FIS Readiness Pulse survey, we did 2 snap surveys of 250 executives across both the sell side and buy side firms, and we did that in May and September. And during that shift, we saw that the number of firms who reported that they were actually considering longer term work from home for their employees went from over 30% to 60%. So it almost doubled across that period. And I think it's interesting how the dynamics of how firms are going to be able to leverage the workspace they have for different types and styles of activity around face-to-face meetings for innovation and other purposes.
When you do this survey, though, you also found out that there is an expectation on the part of the firms for greater investment in cloud services and managed IT. Is it going to be a huge spending spree as we go into 2021?
I'm not sure it's going to be a huge spending spree, but what you're definitely going to see is the way firms allocate capital towards investments that are going to really differentiate them from a business standpoint. So things like digital access, digital capability,
opening up data for their customers are all going to be things that I think are critical for these organizations going forward, and which they're telling us that's where they're going to spend. What they're then trying to do is look at stuff which is mission critical to their business, but it doesn't differentiate, and looking to outsource that, either cloud services, as you said, or business process services to other organizations such as FIS.
Are there any concerns out there about security one way or another? I mean, these are businesses that deal with a lot of money. Also, there have been firewalls on Wall Street where they don't let people get on LinkedIn. Now they've had to open up everything and say you can take your iPhone and help close a deal. So is there a risk to this at all that you see?
I think it's not so much a risk, but there's definitely firms are now telling us, and there was an increase over the survey we did in June versus September. They are now telling us that they're increasing the amount of spend and investment around cybersecurity and other areas of their business. I think it's a combination of an increased workforce working from home and just a general trend that we've seen across the market, to your point about different threat actors that are out there and the need to really heavily protect the business that they're doing with their clients. So yes, there was a definite increase during the 5 months that we did the survey across.
Well, when you look at some of the deeper dive in the data, though, it's the actual employees and retaining those employees as to why we're not going to get this mad rush back to the office, right?
Yeah, that's a critical factor. When we looked at the detailed data as well, Adam, I think what we discovered was that the combination of cost advantage from an economic standpoint, you mentioned market earlier on, and the reality of attracting and retaining a generation of talent that, first of all, during the pandemic has become used to a different style and work method of working, but also just expectations through a generation that's coming into the businesses really expects to be able to have the flexibility to enable them to be there, present and not present, depending on the activity that's going on around them. So I think it's a fundamental shift from both an individual human standpoint as well as firms and how they view the ability to run their business, which, by the way, has been exemplary during this period of working from home.
When you talk about a new generation and the flexibility that they desire, in tech, we've seen talk about being able to move places, but having your salary adjusted. Do you think that can happen in this space as well?
I'm not sure. I mean,
and adjusted downwards.
Yeah, no, I got that. Yes, I'm not sure that the sensitivity is such that we're going to see that as a major advantage from a business standpoint for firms, that we deal with. But I do think, that there's definitely an opportunity to think about, well, where are people located, and can they be located, and are they prepared to trade off one versus the other? It isn't something we saw from a data standpoint at the moment, though.
All right, Martin Boyd, FIS Capital Markets President, thanks so much for walking us through some of your results of your most recent survey.
Great. Thanks for having me on.
Coming up, we've been talking about that rotation, but forget value. Is it time to buy any dips in mega cap tech? We're going to be talking to Todd Jablonski, making the case he's a strategist, and that's coming up in 2 minutes.
The dog days of summer are long behind us. We are now looking forward to the first quarter, actually, of the new year. Let's talk about what's going to happen with equities and maybe the way you should be positioning yourself. We're going to do that with Todd Jablonski. He is the principal global asset allocation, and it's good to have you here, Todd. I want to start with one thing. Everyone has a different take on what we're witnessing in the markets, and you think that investors should be aware that aggressive profit taking could be in the air, but eventually that money's going to come back, right?
I think it certainly will. I think some investors were looking at the markets. They saw high valuations across the board. They saw an opportunity perhaps to look at value, an area that had underperformed for some time. And yes, we saw some profit taking, particularly in the large cap tech space. That said, we remain optimistic about that group. I think a lot of investors are really underappreciating the steady fundamental secular growth story that exists in those spaces. And overall, it should remain, I think, a core part of investors' portfolios.
That said, I mean, look, November, despite today, has been solid. The S&P is on track for its best month since April. You're not alone totally in this idea. Bank of America was out today saying sell the vaccine. We say sell into strength on the vaccine in coming months. So do you think we get a little bit of a reset in January? Like, when is it time to take some money off the table, timeline-wise?
Well, it's always difficult to time the market. I mean, market timing is one of the more difficult aspects of investment management. You know, as we tend to think about it, it's sort of time in the market more than timing the market. That said, I think what investors are looking at today, whether it's in equities or fixed income or across their asset allocation, is where am I going to go for return? And rates are so low and the outlook for interest rates isn't necessarily supportive of bond returns. I think you can look at both growth and value as delivering, I think, a good level of absolute return, while at the same time, you know, perhaps positioning towards more inflation assets as well.
So when we get headlines that are crossing, like Mitch McConnell urging Congress to pass more aid before the end of the year, is the market already pricing in there's going to be some kind of stimulus, as well as overpricing in the fact that, as you say, the exit from mega cap may be overstressed?
Oh yeah, I'd agree with that statement. I think investors at this point have a pretty robust set of optimism. I think given the elixir of an improving economic outlook off of the low, a lot of fiscal spending, I think that's baked into expectations. And again, some of the easiest financial conditions that we've had on record. That's the actual recipe, I think, to get a lift off on perhaps some synchronized global growth. And that is enough, I think, to support investors' risk appetite next year. Now, that's currently baked in expectations. And at that point, it feels accurate.
What do you think about Janet Yellen? I mean, you've talked about monetary policy in here for, look, just as far as the eye can see, I guess, that we're going to have low rates, but we are getting a new administration. We have a history, at least the market does, with Janet Yellen. How should we think about her as also part of the Biden administration and an impact?
Well, I think investors were overall quite pleased with the selection of Janet Yellen. I think she calmed a lot of sort of risks that were out in the marketplace around how that staffing would go. And overall, I think she exudes a lot of confidence that I think showed up in the marketplace. I think overall, the Fed's committed to maintaining the same kind of liquidity and program through 2021. And of course, they've adjusted the language to now indicate that we can overshoot the 2% inflation target. So, you know, putting those two elements together, we do see accommodative monetary policy for some time in the U.S., and we're supportive of deploying risk in 2021 as it looks attractive on a risk-adjusted basis. There's a lot of elements to say right now, having some optimism about the economy, financial conditions, and fiscal stimulus together as a powerful force next year.
Todd, not only that, but they're talking about maybe increasing the asset purchases, but there's something else that people should pay attention to, and that is, this will sound morbid, but it is something we look at every day. It's the death rate from COVID-19. And you think that is key in how an investor needs to position themselves going forward. Can you elaborate on that?
Yeah, it's unfortunate for these times, but as you start to look at metrics, things to consider as you're informing that timing decision around maybe when to change your risk appetite in the market, a lot of the study heretofore has been around cases. And increasingly, what we think is developing is more of a relationship around death counts, because what really, I think, informs the way that the country and investors and everyone understands what's happening is really informed by that number. So that's something, again, we hope will really improve as we get closer and closer to vaccine, which I think is an area for optimism.
One last question for you. Where would you say right now investors need to position themselves from a time horizon standpoint? Are we looking at 2 months, 6 months, 1 year? What's the best way, do you think, to position yourself?
I think, as a strategic investor, I think you have to look at today's environment with a long-term view. And by long-term view, I'd say at least a 5-year horizon. On that sort of basis, you can make decisions, I think, around the relative attractiveness of asset classes, such as equities, investment-grade corporates, preferreds, and a few elements in the better quality of high yield, and actually look, again, tactically advantageous, where you can take, again, a bit of a 5-year horizon and say, we see opportunities in a lot of these spaces structurally for some time. Now, there'll be changes, I think, as markets evolve from there. But that kind of horizon, I think, gives you the right kind of information that you can distinguish on and I think ultimately hit your goals and the outcome of your investment program.
Todd Jablonski, Principal Global Asset Allocation. Good to have you here on Yahoo Finance Live. Thank you very much. When we come back, Under Armour is taking a page out of the Nike playbook, elevating NBA star Steph Curry with his own brand. Dan Roberts on whether it's too little, too late for the Baltimore-based athletic wear maker. That's right after this.
Little under 10 minutes left in the session today. Under Armour shares are lower along with the broader market. The stock, though, is off more than 20% year to date. Hoping to get its act back together, Under Armour is announcing the launch of the Curry brand with NBA star Steph Curry. Let's bring in Yahoo Finance's Dan Roberts to talk about this deal. So, Dan, I mean, of course, they'd love this to end up being like Jordan and Nike, which if you watch The Last Dance, Jordan didn't even want to go with Nike at the beginning. He wanted to go with Adidas. But come on, is this just too little, too late by Under Armour? Or does Steph Curry have the power? Does Under Armour have the pipeline? Could this work?
Well, guys, I think we have to kind of reshuffle the goalposts in terms of our expectations at the beginning. I don't think anyone believes that in the first few years, Curry brand is going to be elevated to where Jordan brand is. I mean, Jordan brand is a $3.5 billion brand on its own, separate from Nike. Its Jumpman logo is itself recognizable without the swoosh. You know, you notice that Jordan brand stuff doesn't even need the Nike logo on it. It's unclear yet whether the Curry brand stuff will have an Under Armour logo or not. And the rollout includes that new logo. So, you know, that'll take a while. But it doesn't have to be on par with Jordan brand right away to be a success. The company is engaging in a big turnaround effort. As you said, Jen, And the way that I've been writing about this is as an effort to slim down. I think that's what's obvious. The company has wiggled out of 3 expensive D1 school sponsorships recently. It bagged its plans for a big Fifth Avenue, New York City flagship retail location. It's trying to get smaller, put out less volume of product, and raise prices and be seen more as a premium brand. You hear Kevin Plank say this all the time, and now you hear new CEO Patrick Frisk say it. So the Curry brand could be a pivotal part of that. I mean, I think you should expect this stuff to be a little higher priced and to compete with premium fitness brands. And if it can do well in that regard, and if it can help the company get to where it wants to go, then it can be a success. The problem is the performance basketball sneaker category has been declining every year for 5 years. And you guys know what we mean by performance. That is sneakers purchased to be worn for actual basketball, not fashion, not to be worn on the street. So, Patrick Frisk said earlier today in a hit elsewhere that, he thought the timing of the brand launch is perfect because it's in between Black Friday and Christmas. Well, I just don't know if kids are going to be clamoring to ask their parents to buy them the newest Curry brand signature sneaker. But maybe, but it's been a tough time market-wise for that product category.
Dan, who actually is the age market? I would assume people 35 and younger. And the Jordan sneakers, by the way, in the last report, it's slight drop in sales, but he's my age and old. He's actually older, but my generation. Do younger kids even say Jordan? He's the greatest still?
Well, it's funny, Adam. I mean, a lot of people point out these days that there are kids who wear Jordan brand and they never even saw Jordan play. I mean, I think there's a generation now for whom Michael Jordan just represents a basketball sneaker guy. But it's been mega successful. Now, let's also separate out Jordan brand sneakers in the retro category sell like crazy. People wear retro Jordans as a fashion statement. But performance basketball sneakers are in decline for all the big brands. In terms of the age demographic, to your question, it's really kids who play basketball. This has to target kids who actually still play team basketball. So the timing is also tough because it's during a pandemic when people are home and a lot of youth sports are on pause. But that said, interestingly, I was talking to an analyst who said that the basketball equipment category is doing very well amid the pandemic. Equipment meaning basketball hoops and actual basketballs. And that's because kids who are stuck at home are still shooting hoops in their driveway or in their neighborhood maybe. So there's a chance that this does well, but it's a leap and it's a risk. I think the Curry brand at first is going to be high risk, high reward for Under Armour.
With 2 young daughters, I hope he gets into the women's basketball category as well. Dan Roberts, thanks so much for the latest on Under Armour. We will be back with more right after this.
We've got 3 minutes to the closing bell. We want to invite into the stream Katie Nixon, Northern Trust Wealth Management, as well as Vance Howard. He's CEO and PM at Howard Capital Management. Good to have you both here. Jared Blickery also on deck. Katie, let me start with you. As we head into the closing bell, 3 Ps you say people should pay attention to: politics, policy, and the pandemic. Let me just ask you about the pandemic. Is that now rear view mirror and priced in?
Partly priced in, I think, but I do think as we see continued good news on the rollout of the vaccine, the market will continue to react positively to that. So although I think a lot of the initial vaccine news is priced in, I think as we see the implementation, we'll get some more bumps.
Vance, the market's not perfect. Sometimes we overshoot to the downside, other times we overshoot to the upside. Do you think that we're in one of those moments right now where we may have gotten a little bit ahead of ourselves, a little bit over our skis right now?
No, not at all. We trade the HCM byline, which we're a mathematically driven shop. The math is pointing to us that we may have another 4 or 5% upside in December alone before the end of the year. The HCM byline is extremely positive right now. Being a quantitative measure that it is, it's usually been very, very accurate. We see the market pushing higher even into the first and second quarter of 2021. Yeah, there's going to be some bumps in the road. There are bumps in the road in every single market that we have. So any pullback that we see in the market, we see as a buying opportunity.
Let's go to Jared Blickery as we get ready for that closing bell, because Jared, this has been a really terrific month despite what appears to be a down day today. One day does not a market make.
That's right. And it is the last day of the month. Normal to see selling when we have the markets up this much. You look at the Dow, it's up 11.7% for the month. Nasdaq has some nice gains, a little bit less, 11.6%. S&P 500 sitting on 10.5%. And a lot of these are setting some pretty big milestones. It's going to be the best month for the S&P 500 since 1987. So not too shabby right there. We are seeing some profit taking, especially in crude oil and the energy market. Now, we've seen energy up. This is the second best month we've ever seen for energy, coming off a little bit today. I do want to note the US dollar index has been especially weak. If we take a look at a 3-month chart here, interesting candle. This is called a hammer candle. Not final until we get confirmation the next day. But if this is an interim low, got to keep in mind that rising dollar could pressure equities in early December. But we just do have these incredible tailwinds at our back from the December seasonality, the so-called Santa Claus rally at the end of the month and to the first few trading days of January. So just taking a look at the Nasdaq 100 here, we can see some pretty good leadership, at least for Apple. That's up 2.5%. The other majors, big mega cap names, those are down. Google's off about 1.76% here. Amazon is off about 1%. Facebook off about 20 basis points. Tesla was in the green, now off about 3% for the day, but nice gains for the month. Here's a closing bell.
That's going to do it for November. Wow, the whole month now in the books as we've been just going through the numbers here, looking at the Dow for our best November since 1928. You do have to remember it was down today. On the day today, energy, our worst performing sector, red across the board, except for XLK. These are the S&P sectors, looking like it's going to eke out the smallest of gains, up just about 7/10. Also, S&P 500, Nasdaq, best month since April 2020. So the story here, we've had rotation, we've had reopening trade, we've had optimism on the political situation here in the US as well. And of course, who can forget the repeated Mondays of news on the vaccine front. And again, today we had more news coming out from Moderna. I want to bring in Katie Nixon with Northern Trust Wealth Management just to get a little bit of perspective here on all of this as we wrap up this month right now. We're heading into December. It's usually, seasonally, it can be a strong time. Just not that long ago, we were saying that we needed stimulus to see anything like this, right? That was the story early in the fall. Stimulus, stimulus, stimulus. Now, what happens? Do we need something out of Congress by the end of the year? We're starting to hear some news reports this afternoon that McConnell wants to maybe get something through the end of the year. To continue this rally, do we need Washington?
Right. So I think this is an important time to distinguish between the market and the economy. I think right now it's very clear that the market is sort of looking past what is going to be a difficult couple of months, regardless of fiscal stimulus. We're going to have probably more rolling lockdown lights here in the US to try to continue to control the coronavirus. But the market's really firmly focused on 2021, I think. The good news on the vaccine front that you've covered, I think, is giving investors a lot of optimism. Now, would fiscal stimulus be an additional support for the market? Of course. And we do expect there to be a smaller, targeted, more tactical package probably passed either during the lame duck or soon after the inauguration. But I don't think it's necessary at this point that we get a fiscal package in order to maintain the market rally.
Vance, got to give you credit. Back in February, you went 60% into cash. Now you are 100% in equities. That's a little dangerous, perhaps?
Well, that's what we do. That's what we do for a living. You know, Katie made a good point. There's a difference between the economy and the stock market. Those are two different animals doing two different things. And clearly that's become the norm history-wise. But again, the buy line gave us a sell in February. We moved 60% to cash. It gave us a solid buy the first week of April. We were 100% back in the market the second week of April, which, you know, the buy line's mechanical, it's non-emotional, it's repeatable. We take the emotion out of the equation because I don't know what the stock market's going to do tomorrow, and I don't know what the economy is going to do tomorrow, so I have to take that out of the equation and trade math. And that's been a great trade for us. Clearly, any pullback we've had since April, we've been buying into it. And to what Katie said, you know, there's a big difference between the economy, which the economy is not doing well, but the stock market, if you're playing different sectors like a large cap growth, you're having a great year.
Jared Blickery, back to you. Energy, last time when we had talked to the three, wasn't down this much, ending the day off more than 5%, 5.4% here. The month, though, a different story. Give us some of the wrap up on the month.
Sure thing. Let's go straight to the Wi-Fi Interactive. This is our sector heat map, and you can see in the bottom right, we got energy down 5.5% today, and the leader today, tech and healthcare. But you look at what's happened over the month, energy still the clear standout. Now it's up 28% in the upper left there, followed by financials, industrials, and materials, and then tech. Tech still outperforming here, the S&P 500. Just gives you a sense that we have really outperformed, and we have this broad-based leadership, which is necessary to build, you know, a long-term secular bull market. Doesn't mean it has to happen overnight, and anything can happen in the coming weeks and days, but the groundwork is being laid here. So let's take a look at some of our canaries, some of our sentiment market leaders, and you see in the forefront here, MJ, that's the cannabis ETF, up 47%, nearly 50% for the month. And then the IPO market has been extremely hot. The Renaissance IPO ETF, IPO ticker, up 25% month to date. And then you have solar, that's a TAN ETF. Bets, that's betting, that's a gambling ETF. XRT is retail. Then you have SOX, that's a chip index, and that has been making record highs along with XRT. So you have this broad-based broad-based rally here. You throw in regional banks and the transports. A lot of these markets are making record highs, and it just says that the market is strong right now. And just give you a couple more spaces here. Look at the cannabis space. Incredible gains for the month. You look at Aurora Cannabis, that's up 188%. And also the work from home trade, not to be sneezed at, even though we lost some of its shine this month. We still see Slack Technologies up 67%. A lot of that having to do with the expected Salesforce buyout of it. Guys?
Katie, what should investors make of two very important things you point out? First, that with these markets, it could be too much too fast, because that's really a good thing. And the other, we keep talking about fiscal stimulus, but it could be too little too late. What should we investors make of all that?
Right. So on the fiscal side, with the vaccine coming, the fiscal stimulus becomes a bit less important to investors. However, there is a risk as we see some of the economic indicators rather soften, whether it's on the manufacturing side or certainly on the employment front, that we don't get a fiscal bridge that's strong enough or long enough to sustain the economy through the next couple of months. So that certainly is a risk. And on the other front, optimism is a great thing. There's a lot of optimism and a lot of bullishness in the market right now. As you referenced, having a broader market participation is certainly a very healthy sign. But there is a danger that we get overly optimistic at this period of time. And we're certainly seeing retail investor surveys like the AAII survey, other options-based data show us that investors are pretty bullish now, which doesn't really mean anything in isolation, but it does present a little fragility to the market in terms of being able to withstand any bad news.
Vance, I'm just curious on Katie's point there, just about optimism. And usually if I ask this question, somebody will say, oh, Jen, you can't time the market, but that's what you do. You moved to cash and you did well. So what signs are you looking for that would make you make a move like that again? What are the signals that you're looking at?
Like I said, the HCM buy line it's the backbone of our whole company. We've been trading it for 25 years now. It served us well. We sidestepped 2000, 2002. We sidestepped 2008. But you got to trade what's actually happening. And the market's going up. I mean, that's just what's happening. I don't know what the market's going to do next week or next year. All I've got is a guess like anybody else. But what I do have is quantitative measures, and our quantitative measures are clearly pointing this market's going higher. The bulls have control. The Dow Jones just hit an all-time record high last week, which is what we call a Christopher Columbus Day. It means that that's territory that's never, ever been seen before. New highs are telling you something on major indexes that's telling you that there's a lot of buying power out there. We're sitting on a record amount of cash. We're sitting on 1, 5, 10-year treasuries that are barely paying any interest. There's a tremendous amount of fuel in the engine that can push this market higher. But again, the HCM buy line's positive. The HCM, as long as it's positive, we're 100% in.
Just remember, Vance, Christopher Columbus almost got slaughtered by the people when he got to the New World. We appreciate your being here. Katie Nixon, Northern Trust Wealth Management, as well as Vance Howard, CEO and PM at Howard Capital Management. All the best to you both. We don't want to box anyone out, and that's why we're going to bring in Emily McCormick, because we got to address this issue of Salesforce actually acquiring Slack work. Emily, does it make sense?
Well, Adam, just taking a look at what Wall Street analysts have been saying, right now they are saying that an acquisition of Slack by Salesforce would make the company a stronger competitor to Microsoft with its own suite of workplace management and workplace messaging software. We think about the Teams platform, for instance, that had been growing quite rapidly and has become a major competitor here to Slack and had been one of the forces that capped some of Slack's year-to-date gains. Now, just taking a look at where we are in terms of this acquisition news, remember that this is still a rumor at this point. The company is reportedly going to announce that it will be acquiring Slack in tandem with its quarterly earnings report tomorrow. That's Salesforce's quarterly earnings report tomorrow after market close. Now, taking a look at what the CNBC report also added is that the company would actually be purchasing Slack at a premium to where it is trading right now. Now, Slack currently has a market capitalization of about $24.5 billion. The shares traded higher by about 5% during today's session. And just taking a look at what Slack has been doing over the course of the past couple of quarters, we did see that stock sell off a bit after it reported its latest earnings report back in September, since it had fallen short of consensus expectations in terms of quarterly billings. Had been some concerns that Slack's small and mid-sized customers were seeing some pressure because of the pandemic, and therefore was putting pressure on Slack as a whole. So gave a bit of an inroad here for Salesforce to potentially come in and acquire this company, since those year-to-date gains had actually been capped a bit. But overall, taking a look at where that company has been trading, again, Slack trading higher on the news of the initial rumor last week of Salesforce's acquisition, and trading higher today with these additional details from CNBC. Adam?
Emily McCormick, staying on top of the acquisition of Zoom, or rather of Slack, Slack. Zoom's coming out after the bell. By Salesforce. Emily, thank you very much. Again, it's one of the best days on the Dow since November of 1928, best November since 1928, and S&P 500, Nasdaq, their best month since April of 2020. Coming up, shares of Moderna jumped more than 10% on news that it plans to ask U.S. and European regulators to allow emergency use of its COVID-19 vaccine. We have the latest, and we're going to hear from Moderna CEO Stéphane Bancel right after this.
Welcome back to Yahoo Finance Live. Markets lower for the most part here, but shares of Moderna up sharply after the drug maker became the second to apply for emergency use for its COVID-19 vaccine. That's on the good side of the news coming out on the coronavirus. New York Governor Andrew Cuomo says New York has been hard hit, of course, hard hit in the spring. It has entered a new phase, he says, in the war on COVID. Let's get the very latest and bring in Anjali Ambani. So, Anjali, I mean, the Moderna news seems to have taken a lot of attention here. The stock is up some 20%. Yay. What's the timeline for this vaccine?
Well,
Others.
as it stands right now, we know that Moderna is going to be applying today, and after that, the next sort of important date is going to be December 17th, which we know is the day that the FDA's meeting, that advisory committee for the vaccine, will be held, and they'll be hearing, all the details about the vaccine and analyzing that data between some experts. And then following that, we could expect within a short period of time the emergency use authorization to be granted. Moderna has already said that by December 21st, they anticipate being able to ship it out. And we know that there have already been shipments or sort of flights with, some of those vaccines already being sent out there, at least from Pfizer, which has been doing some test runs. So really, in terms of just, encompassing Moderna among the vaccine contenders, there's really some positive news there. One thing I want to point out, though, that we've specifically gotten from Moderna is the idea that its vaccine is going to be able to protect against severe cases of the virus, at least based on the trial data. And that's very important as we're looking at the skyrocketing hospitalizations across the country. Listen for a second to what CEO Stefan Menzel had to say earlier today.
We had 30 cases of severe disease. And of those 30 were on placebo and 0 were on our vaccine. So if you think about what has happened in the country, people getting infected, if they get a severe disease, they end up in the hospital. And if they get a bad case, they end up into the ICU, and the worst case outcome, of course, is death. If you can stop that whole cascade, that is, I believe, a game changer.
So as you can hear, really a lot of what health experts are excited about is being able to reduce that severe caseload. Adam and Jennifer, back to you.
Don't worry at all. That happens to me all the time. All right, stick around, Anj. We're going to have you talk with our next guest as well. I want to bring her in right now. That's Dr. Stella Saffo from Vote Health. She's the co-founder there. It's a New York City-based HIV primary care unit. She's a physician. So, Dr. Saffo, I want to ask you about people that gathered over Thanksgiving. And there were many people that decided to do that with their families. And Dr. Birx has said that Americans who gathered for Thanksgiving should assume they're infected. Do you think that that's a good starting point? Do you think that that makes sense?
I think it does make sense. So when we talk about gathering, there's a couple of different ways that we're thinking about it. There's the gathering that can happen where you are outside, distanced and masked up, which is fairly safe. And then there's a gathering that we believe has happened during Thanksgiving where you were inside the house without a mask, eating that delicious turkey and whatever else you had. And in that case, because you were probably with individuals who were not within your household, in other words, people that you sleep in the same house with, right? You brought in new individuals because you were in a house with different individuals who may have the virus, and because you were doing an activity like eating and talking where you can spread, droplets, there is a chance that if anyone in any of those gatherings had it, then other individuals have been infected. So I think it's a fair thing to think about the kind of gathering that you had and then kind of rank your risk from there.
Dr. Anjali here, looking at what we see, of the gatherings and of the anticipated, rise in numbers, as it stands right now, can we take away anything from, decreasing positivity rates right now, or is it still sort of a wait and see for the next 2 weeks?
Yeah, a lot of our models at this point have had enough information. I'm based in New York, and so in March, when everything started to happen with COVID really spreading through this country, it started in New York, and our models were just being primed then. So we had no idea really of what to expect. At this point, we have enough, unfortunately, real world experience, and we've done enough modeling to kind of have a sense of What happens if you place into the model kind of high risk behaviors? So that's crowd gathering, being maskless, etc. What happens anywhere from 7 to 10 to 14 days out? And we know that that's just an exponential kind of increase of a line. So that's part of the reason why you hear everyone sounding the alarm, everyone from your local clinicians, public health experts, to Fauci and Birx and everyone else sounding the alarm, is because there's a real sense that if we project the number of individuals who've gotten together in these unsafe, kind of settings has happened, then we know that in about 2 weeks, we're going to see those numbers surging. And the concern is at this point, hospitals are getting towards capacity. So adding more to an already full bucket is really something that we're very, very scared of.
Doctor, I was curious, the lines we saw nationwide and in New York City to get tested before Thanksgiving, a lot of people said that's because people were planning to travel. Do we have the testing infrastructure in place? Because the key seems to be continual testing on a rapid basis where you get the results quick enough so you can know I'm not going anywhere.
Yeah, and it's so unfortunate because this is what people talk about when they talk about how, we've been in this pandemic now for 8-9 months and we should have had some things that should already be happening now. This is what we mean by the lost time, right? At this point, we should have it so that individuals can get tested very frequently. And it's not because testing is a solution that's going to solve everything, but it's exactly as you say, testing allows us to know what's happening to you at a point in time. So, again, in New York, if you went down the street and any of these areas around the urgent care centers, there were lines around the block of people getting tested and kind of falsely thinking, well, if I test negative, I can go home, hang out, and I'll be fine, right? Well, if you test negative, and let's say you were exposed to COVID, within that kind of incubation period, your test might be negative, but you could still be brewing the virus. And so you almost need a system within our country, which is what we're hoping we'll get with a new administration and new heads kind of thinking about this, where you have much more rapid testing. Almost think about what we saw with the sports leagues, with the NBA, where they were testing folks really, really frequently. Unless you're doing that level of testing, a one-time point in time test to tell you if you can travel or not doesn't really answer the question of, are you safe over the next couple of days as well. So it offers us, unfortunately, a false sense of security. And I will say, we're happy to see that people are at least taking that precaution, making sure they're not traveling if they're sick. But it isn't the kind of Band-Aid that I think many people believe it to be.
Doctor, what do you think really is the strategy that needs to be taken on? I know there are a lot of people really pushing for rapid testing and frustrated that other countries have been able to get more tests done, whether or not they're as accurate has been the problem. So there's sort of two schools of thought, I think. One is get the test done no matter what, and the other is just roll out the ones that are near perfect. Where do you stand on that? What do you think we should be following for the next administration?
Yeah, I think that, and as an HIV doctor, I kind of bring the HIV lens to a lot of these different epidemics and pandemics that we try to control. With HIV, we focused on prevention and treatment. And so the treatment angle right now, you're hearing all the alarms because our hospitals are full. So we're afraid we won't be able to treat adequately. And so preventing people from getting sick is so key. And that prevention really happens with behaviors, unfortunately, rather than testing. So the behaviors that we're recommending have been from the beginning socially distancing and definitely wearing masks, especially if you have to be indoors and inside with people outside of your household. And where testing then becomes really interesting and helpful is that it allows people to have the kind of information they need to be able to make the actions that they need to happen. So the next administration, I think, is really looking into things like, at-home testing. So you can get a kit that's affordable that you can test yourself before you have to go get online for 2 or 3 hours to figure out, if your PCR will come back in 4 to 6 days, which is what we're seeing in certain areas. So it's definitely testing is part of it, but it's that larger kind of prevention solution that we really need to push, which is mandated masks, as well as, really thinking about how do we prevent people from kind of getting into these crowds where we're seeing the virus continue to spread. I think the modalities of testing that you use, you can definitely play with it. But again, it's just a small part of kind of this whole picture that we really do have to create and invest in to make sure that we can stop the spread.
Dr. Stella Saffo, Vote Health co-founder, thanks so much for joining us.
My pleasure.
A big part of all of this during the pandemic, and Anjali Kamlani, thank you for joining us, has been what to do with schools. Well, New York City has announced it will return elementary school classes next week. Randy Weingarten of the American Federation of Teachers on whether or not this is a good move. Next.
Welcome back to Yahoo Finance Live. Let's head over to Jared Blickery, who's got the latest on Zoom earnings, and 777.2 million doesn't seem to be enough for investors who are upset. What's going on?
Yeah, it looks like their costs might be a little high, and we'll go through all the numbers, but most of the headline numbers and a lot of the internals just looking really, really strong here. But you got a stock that's up so much year to date. Investors really want the moon. So let's go over the numbers. Third quarter adjusted EPS came in with a healthy beat, 99 cents versus an estimate of 75 cents. A year ago, it was only 9 cents. So more than tenfold improvement there. GAAP EPS came in at 66 cents. Estimate was for 50. And then revenue, a really big healthy beat, 777.2 million. As you said at the top here, estimates were for 693 million. And then the company said that strong demand and execution led to revenue growth of 367% year over year. Very, very strong. Also improving their outlook. So their guidance very strong. They're seeing full year revenue 2.5, that's 2.58 billion to 2.58 billion. And the previous estimate was for 2.4 billion. So nice beat there. Full year adjusted EPS, they expect that to be 285 to 287. And the estimate was for much lower at 246. And then fourth quarter revenue, they expect that to be 806 million versus estimates of 719 million. Now, on those concerning numbers on what might be driving the stock lower right now, we have cash and cash equivalents of $730.5 million. That's versus estimates of 1.05 billion. So basically missing the mark by about $270 million there. And then the cost of revenue, 258.7 million. Estimate was for much lower, 195.9 million. So cost of revenue much higher than expected. They did fall as much as 10%, but they are only down about 5%, 4.5% in early aftermarkets trading here.
Jared, thank you very much. You know, it's an understatement to say that so much in the markets is driven by COVID-19, but so much in everyday life is driven by COVID-19. For instance, what happened here in New York City, the largest public school system in the country, upset a great many parents when the mayor said he was going to close down once again in-school learning. But earlier today, Yahoo Finance's Alexis Christoforous spoke to the American Federation of Teachers president, Randy Weingarten, about plans to reopen schools here in New York City and whether she agrees with New York City Mayor Bill de Blasio's new plan. Here's what she said.
I think what was missed out of yesterday's decision was that it's built on two pillars. One is that Governor Cuomo really controls the tackling of COVID throughout the state. And he, like Governor Newsom, has this kind of regional approach now that actually really works. So Governor Cuomo has these yellow, orange, and red zones so that you know regionally in a community where your positivity rate is, what's happening in terms of community spread, because no school is an island. So there's a 3% regional rate now as opposed to a city rate. And that's important because Staten Island right now is way high. The community I live in, which is Inwood, is way high, but most of the places around the city are not. So it's that issue about whether your community has exceeded 3%. And then the next piece is learning from what we've learned nationally, internationally, but particularly in terms of the New York City experience. Younger kids and kids who are at risk really need schools. Hybrid education really doesn't work. And so ultimately, because about a third of the elementary school parents opted for in person, there's a way of programming schools so that there can be 4 or 5 days a week in person for elementary and for special needs kids. And that's a really good idea.
Randy, do your union members feel comfortable returning to the classroom right now? Or is there anything that they need to see before they do feel comfortable?
Well, that's a big question, and that depends on where we are. So, for example, what we learned because of the work that the UFT did in New York City is that the suite of safeguards that were negotiated, from masks to physical distancing, to ventilation, to electrostatic cleaning and testing, really worked. That needs to be a non-negotiable everywhere. And so what you see is that you saw when community spread was low, very little spread in schools. That gives people confidence that that schools, particularly for elementary school kids, can reopen. But if you actually go to Chicago or to a Philadelphia, where the ventilation systems in schools are terrible, people would look at you and say, how can you open up without having good ventilation and without having the resources? We need to have the safety protocols and the resources, and then the New York City has become a proof point that it can work.
Randy, looking at some of the things that we learned from this process, there was a recent op-ed in the New York Times, that was in October, that Black parents prefer remote learning in some ways because they can keep an eye on their kids in case, there are racial hostilities. So, and also because of the COVID risk. So I'm wondering, how can we translate some of these learnings that we saw through virtual learning when we finally reopen schools?
So look, trust is really, 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 really important. And I was on a webinar earlier today when I said that about trust, and that I really blame Donald Trump for the failure of even trusting the science because of his out and out lies and denials. So if what we've seen is that the communities that have been most impacted by COVID have been Black and brown communities and indigenous communities. And, if you're a parent and you want to make sure that if you've had COVID in your family, if God forbid somebody has died, you're pretty skeptical about whether or not something can work. And so you have to have a proof point that it can work. And that's why the transparency around testing, and that's why these protocols are so important. But trust is earned. And we're going to need a new president who talks about the data in an honest way, and who tackles it in an honest way in order to create trust amongst parents whose families have been deeply affected by COVID. Having said that, we need to think about this as an iterative process, meaning let's make sure that we don't lose the summer. Let's have a voluntary summer school. Let's make sure we can wrap services around schools. There's about 8 different things that we need to do at the same time. It requires resources. It requires following the science. It requires leadership, and it requires tackling the COVID surge right now. And we're putting out that blueprint today in an op-ed. But I do think we will get parents and educators to come around if we follow the science with fidelity, and people still see, after the surge, low rates, particularly for elementary school kids and kids that need, or kids, special needs kids.
Randy, you mentioned the new president. Top Democrats see you as a candidate for Secretary of Education in President-elect Biden's administration. Is that something you would be interested in?
Look, first off, I'm interested in doing my job. I'm interested in reopening schools safely for kids, making sure that teachers don't have the tremendous heartburn and really, they've been working in a Herculean way, but in a it's not sustainable, and they are really, really, really at a breaking point. So I'm interested in doing the work I can do for children, for families, for communities, for creating a middle class, for expanding a middle class, and frankly, I'm honored to do it as the president of the AFT. If you're me, and who has worked your entire life to help families, help educators, and help lift up a middle class, obviously it's an honor to be mentioned, but it's not something that I ever sought. It's something that it's just an honor to be mentioned. So, we'll see what happens.
All right, coming up, more on those big Black Friday and Cyber Monday numbers. E-commerce site Mercari gives us the download right after this.
It is Cyber Monday. We are seeing enormous shopping online. And Adam, of course, we saw it all last week too. I mean, people are shopping on Thanksgiving Day. We had big data from Adobe coming out. I want to bring in John Lagerling right now. He is the CEO for the US arm of Mercari. Now, Mercari is I don't know, you're probably going to correct me, but I've been on the website. It's a little bit like an eBay in there. It's a resale, but it's not so much an auction. I want to know what you guys are seeing right now in terms of what people are buying, what people are doing, because the heyday of eBay in my Christmas experience is when you need to get your hands on something that are not in any stores. And I feel like we're not seeing like a run on one item.
There
you are, John.
I thought I was swapped out for someone more skilled than me for a second there. I'm glad I still have my job.
Good, we got you. Yeah, what is it? It's like there's no Tickle Me Elmo this year. So like resale, you think is like the one thing everyone needs. And yes, I just dated myself with that reference. But is there an item that I'm missing that's driving people to you?
Not really. I think people are still sticking with what will entertain them when they're forced to stay at home. So we still see a lot of interest for video games and also home decor. So decorative pillows, artwork, posters, collectibles, anything that you can do to kind of make your home, shelter at home experience more cozy seems to be still a big deal.
I'm trying to think of something about decorative pillows because there's an ad on TV right now where the couch has way too many pillows, and I always chuck at that because it seems like that's the regrettable purchase everyone makes. Like, you got too much stuff here. Is this all sustainable? We have huge amounts of money for people fortunate enough to have gotten a paycheck during this pandemic, big savings, but there's a vaccine coming. A world's going to come back. Are we going to see these kinds of big increases going forward, say next holiday season?
I do think that what has happened with COVID-19 is that people have been forced to look at what can be done online. And now that they've found the convenience and honestly venues that weren't even available through retail, like you can't go to a retail shop easily and sell something and get your money or some of your money back. I mean, you can return items, but a lot of people store new items they bought and never used at home. And there hasn't really been a good channel for that. So I think for me, who's in the resale business, that's probably here to stay. Even for e-commerce, just straight out, I think the convenience that people feel of really getting the item and getting the item at a very good price, it's probably going to continue to be hard for retail to compete with what people now have discovered. Similar to how people have realized that we can actually work from home and still get stuff done without meeting in person. So there are a lot of things where I don't think we can put Genie back into the bottle.
For Mercari, how many people are just regular people that are selling? Because sometimes I think like with eBay or even with Poshmark when it started, it was just more peer-to-peer. But then people realize they can make money. And then there's like these cottage industries that start up. And I don't know, negotiating with them or what they have to offer is kind of different than just dealing with the one person. What are you finding is your vendor, your seller? Who are they?
So our seller, if I'm going to, define her a little more specifically, is typically, again, on average, a female, mother of one or two, somewhere in America. This is not a coastal phenomena. It's not a Midwest phenomena. We've really seen all over the country that especially mothers with families and kids have a lot of items coming into the household, and also the need of getting household items out that aren't useful anymore or that ended up not being used. So that trend has continued. That has not seen a change. What I would say is that we have done some surveying here, and we've seen that now it's about 4 to 6%, almost half of American consumers have considered or are already selling things on these marketplaces that are consumer powered. And I think that's an absolutely new trend that we've seen, obviously, more than a doubling of that level of activity. We now have millions of sellers. And yes, we have some very high volume professional sellers, but there are a lot of regular folks out there that have discovered how easy it is to sell online, and especially for marketplaces like Mercari, where you don't have to meet up, but everything ships.
I'm glad you talked about people getting rid of stuff that's just cluttering up the house, because trading cards are a hot item, and Pokemon cards. I can't think of anything that would be clutter more so than Pokemon cards. And yet, big seller on the site, right?
Well, maybe mentally cluttering, right? Because I think items are not just their physical space, they're also kind of their emotional space, or even your guilt space. Sometimes you ended up buying something that you didn't go and use, or you used it and you're done with it. You already, beat your friends at that Pokemon game. It's time to trade in for something else. And Pokemon cards have actually, as a growth category year on year compared to 2019, has grown by 554% on Mercari, which is really not being beat by anything. It's really the number one category. Previous years, Funko Pops, which are these collectible little figures, were a huge category, still growing. I think the 5 to 6x of Pokemon is quite astronomical.
Well, I guess we know we're not going to get Adam those for Christmas.
No
John
Pokemon card for you,
Lagerling.
Adam.
I don't know.
No Pokemon.
You Studebaker card.
If you get them.
John Lagerling is Mercari US CEO, talking to us about how they're doing this holiday season. Thanks so much.
Thank you so much. Have a fun Cyber holiday for everyone. Cyber Monday. Take care.
Thanks. So, of course, once we get through this holiday, there's always another holiday to look forward to, Adam. And the one at the end of next month is pretty good, and that's New Year's Eve. Coming up, we're going to talk about it. Moet Hennessy is bringing the ultimate New Year's Eve celebration to your home, and it's helping beaten down restaurants in the process. We're going to have that in 2 minutes.
Doesn't matter whether you say L'chaim, Prost, cheers, there's always something to celebrate, and there's no better way to celebrate than with champagne. Let's bring in the Senior Vice President of Consumer Engagement, Partnerships, and Investment at Moet Hennessy, Chad Stubbs. Good to have you here. And although 2020 has been, for many people, a very difficult year, for a great many people, there's a lot to celebrate. And Moet is actually taking some steps to help this at-home New Year's Eve celebration be one that we will remember fondly. Tell us more about this.
Okay, well, Adam, thank you for having us. And by the way, your first lesson of the day is it's Moet. I'm sorry to have to correct you, but it's
okay.
Dutch.
Yo hablo español, francés, no.
It's actually Dutch, so Moet Chandon. But so glad to be here, and I think we're all going to agree that after you're like this, we need something to celebrate, and so we came together with our full portfolio of brands to make it easy for you to celebrate a little bit of luxury at home this holiday, this New Year's, which I think we're assuming, and I think you'd agree, will be the largest New Year's Eve celebration ever at home.
Wait, I was going to say, wait, what? You think it's going to be the largest? So you're saying at home, we're all going to stay at home. Hopefully we're not going to have anyone come with us. But
correct. We're in our pods. We're safe in our pods.
Do you think champagne sales will be down or up?
It's a good question. Actually, with the trends we're seeing, it's up. And I think it's because, again, people are looking for reasons to celebrate. And so that's part of our plan.
You're the leading importer and marketer of high quality wines. Where does Moet fall into that?
Moet Chandon is actually the largest champagne in the world. And it's followed closely by its sister. So actually in the US, Veuve Clicquot is our lead champagne, but the full lineup of champagnes, including our Krug, but as well as our sparkling wine Chandon here from the US, all part of a great reason to join in the celebration.
Let's talk about what you're doing with restaurants here, because part of this is that you're donating $100,000 to the National Restaurant Association Educational Foundation. And we all know that restaurants have been decimated and the prognosis is not great for them looking ahead for how many of them might fail. And of course, that is a place where a lot of people buy a fancy bottle of wine. What are you seeing with the restaurant relationships? I know it's levels removed from you, but still through the suppliers and the distributors. What are you seeing there?
No, what we're seeing is, again, you can imagine with the different state and local municipality rules, it's so tough for them. And then, as you know, even here in New York, dining outdoors, tough as well. So that is why we thought it was, super important as part of our New Year's Eve campaign to give a reason and give it an option to give back. So while we're donating over $100,000 to the National Restaurant Association Education Foundation you mentioned, we're also giving an easy place to donate for everyone else that joins in on our website. But then also, that'll bring up to us to over $1 million of relief we've given, to the industry for advocacy and relief this year. But this is why we're so we so want to help our friends in the industry.
Have people started to register for the One Unique Wish? And can you tell us more about what you could win if you win that?
Yes. So no, thank you for bringing that up. What has been the most fun was for us to move fast to realize that we wanted to give consumers this chance to celebrate at home and bring some fun to it. So not only are we joining with us is actress and activist Tracy Ross, actor and Hennessy ambassador Henry Golding, DJ Stevie Aoki, and actor Darren Criss. All of those are joining us to celebrate. So they consumers can enter to win to have one of these join them in a virtual New Year's Eve celebration for theirs at home. But that's not all, right? There's also going to be a way for you to enter a wish that you want to come true in 2021. And we're going to do our best to select one and fulfill it for you.
What do you think of all the ways that we're ordering alcohol these days? Like, I can go on a website, I've got an app, I could go across the store. We talk a lot about the trends and the changes that we're seeing during the pandemic. Do you think that these are here to stay? Do you think that, we're all of this is going to end up on an app one day?
That's a great question, and we do think some of those changes are here to stay. When we look at some of our own sort of industry trends, and I see what you have posted here, it's exactly the same trends we're seeing. So on this basis, that I think Credit Suisse with Nielsen estimates that e-commerce channels will account for 4% of industry volumes in 2020. So that's up 3 percentage points from 2019. And only expected to grow. So think about it. It's removing that friction, that last mile, and with the delivery and some being able to deliver in 1 hour or less. I think that's the kind of service offering that's here to stay.
Chad Stubbs is the Senior Vice President of Consumer Engagement, Partnerships, and Investment at Moet Hennessy. We appreciate the update on all that you're doing, and also the trivia question you gave us, because we're going to stump lots of people at our New Year's Eve celebrations, asking them, is it Moet, is it French, or is it Dutch? And we know the answer. It be Dutch. Thank you so much, Chad. We'll be right back.
Adam and Jen, thank you so much.
And go, Jen.
3 major indices down on the day to wrap up November, which for the whole month, Adam, not too shabby. pretty good. You can go back to like 1928 to get a November like this on the Dow. After hours, though, we did get some earnings results from Zoom. They are falling, even though they beat expectations for the third quarter and guidance ahead. They're not growing quite as fast as everybody was hoping. Tomorrow is a new month. It is December, and tomorrow on Yahoo Finance, it is Food Insecurity Day. We are going to be talking about that and more. We've got Senator John Tester on, Chef Andrew Zimmern on as well. And Adam, I'm really interested to see what happens with Salesforce earnings. Those are coming out after the bell tomorrow, especially with it's like one of those things where we've been waiting so long. Can you just announce it? But the Salesforce Slack deal that we all believe is going to happen, because I feel like it kind of goes right into what we're talking about with Zoom right now. Where is the platform where we're all going to be communicating? And I really want to get some color on that and what Salesforce has to say.
I'm hoping if Salesforce really does get them, they can figure out how I can not have to re-sign into Slack every time I reboot this darn computer. I'm going to be watching tomorrow because it's not only a new month, it's a new day possibly for marijuana stocks. We expect there to be a vote, possibly this week, on the Marijuana Opportunity Reinvestment and Expungement Act. Bottom line is that Steny Hoyer has said this could come up for a vote this week. A lot of people saying expect it to pass the Senate, but it's another step toward legal weed.
All right, that's going to do it for us today. We'll be back tomorrow again on Yahoo Finance.